Gentlemen, welcome back. This is Benzinga's Small Cap Healthcare Conference, Day 2. This is track 1, or the blue track, if you're checking out the agenda, which we'll see in just a minute here. We got 2 tracks going again today. We are having, let's see, quick math, about 8 hours of programming today. Benzinga's Small Cap Healthcare Conference is bringing you a ton of executives in the small cap healthcare space. We're doing presentations about corporations. You get to hear directly from executives telling you about their company. You can ask them questions. If you're tuned into the chat, I want to see participation in the chat. Get some questions in there for the execs. If you're looking at a company, if you're already an investor in a company, this is your best place to interface directly with executives at publicly traded companies. We are hosting presentations today. We're hosting panels. There is, I believe, a couple of education courses coming up today. Very exciting day. Let's see the emotes, the emojis in the chat. I want to see the thumbs up. I want to see the dollar signs. I want to see the one guy. He's puking out money. He's got so much money. He's puking out money. That's what Benzinga wants to bring for you today. A lot of good information so you can make smart decisions about investments and trades that you want to make. We got a very special treat coming up here in just a few minutes. We are going to have a keynote and you guys are going to love it. I'm very excited to welcome this person on. I'm going to take care of a couple quick housekeeping things. We're going to take a real quick look at the agenda so everybody out there in the audience can know what they're getting up against today. A quick recommendation on consuming some of this content today. We have so much content that you might look at the agenda, and I will share my screen now and be like, wow, how do I consume all of this information? What I would recommend doing is, as we're really quickly going through this agenda, jot down the times and the companies that you're interested to learn about and make a little calendar invite for yourself. The other thing I would recommend is keep the Benzinga feed open on YouTube today. Keep it in one of your tabs and pop it open every once in a while. Want you to get information about companies you're already invested in and thinking about investing in, but also we want to get new companies on your watch list that you had no idea you were interested in. And then you quickly hear their presentation and you're like, wow, that's an interesting company. I'm going to put it on my watch list and maybe do a little bit more research. So you can see we have 2 tracks today. I'm looking down at my screen here, everyone. Please encouraged to not look at the screen share. We have a blue track. We have a green track. Spencer Israel is going to be on our green track. And Spencer, hey, Spence.
I heard my name, so I came running.
I like it. How's your morning going? How's pre-market prep?
Pre-market prep was great, as always. Hello,
the best pre-market trading show on the planet, maybe the solar system. I'm claiming that now. Stop it. I'm going to run through the agenda super quick, Spence, and then I'm going to show people the Slido poll, Slido contest. Everyone is going to be excited about that. And then we will bring on our first guest. Are you cool with that, Spence?
I'm excited for our
Let's do it. Okay, awesome. So I'm just going to scroll through. I'm not really going to necessarily highlight any here, but I'm just going to take a quick chance to scroll through here. And you get to take a little preview of some of the execs and interviews and panels that we're going to be having today. We have a couple of education segments today too, Spence. That's kind of cool.
It is.
Benzinga's own Mark Petrino is going to be doing a couple education segments, which is really cool. There he is, education session with Mark Petrino. Guy is an awesome technician. So yesterday we had on a guy from Schaefer's who was doing some technical research. Yes, we want to focus on getting information from publicly traded companies directly from the execs, but also we know there's a bunch of traders in the audience, so why don't we get some good trading education thrown in here too? And I'm almost done. Spence, you and I are gonna be going till about 5 p.m. today. Are you ready?
I'm so ready.
Okay, awesome. So that was our what were we gonna say?
No, I'm nothing. I'm ready to go.
Nothing. Sweet. So that was our super quick agenda. It is benzinga.com/events/small-cap/healthcare.no.com. Sorry. Somebody throw that in the chat. I want people to be able to tune into the agenda.
Just go to bcsmallcap.com. That's easy.
Way better, Spence. Yeah. Thank you very much. All right. So what is this that you're looking at here? This is called Slido. We host a little contest for our events, and the winner gets something very exciting. We had a couple excited winners yesterday. You are going to scan this QR code. throughout the day, Spencer and I are going to be asking questions. They might be fun, they might be serious, they might be entertaining. And at the end of today's session, two people, one from each track, I think, right, Spence, are going to win a 1-year subscription to Benzinga Pro. Benzinga Pro is our premium trading news service, and it's like a $1,200 value that 2 people today are going to get for free. So you definitely want to participate in this. Let's see what's going in the chat real quick. Hello, chatters. Let's see the like. Everyone, smash that like button. Probably got a lot of people that are coming over from pre-market prep, and we're going to keep you informed and entertained all day. Are you ready to bring on our exciting first guest, Spencer? I'm like really excited.
Yeah, I see him here. He keeps popping in and out. I hope his connection's okay. Let's just bring him on and
let's see what happens.
And see what happens. Don Duffy, there he is. Don,
welcome, sir.
Us?
Good morning. Can you hear me okay?
It was a choppy for a second. I think it's okay. I see you moving around there. Let's see what happens here. We'll see if it works here. I think it's gonna work.
Yeah, I'm sensing it's gonna work. So yesterday for our keynote, guys, if you remember, we spoke with Mark Charest, who runs a healthcare mutual fund, and his job is to invest. And there goes Don. His job is to invest in companies like the ones you're gonna hear from today, right? That's what he does for a living. Don's job, and we'll get Don back, is the president of ICR, which is basically a massive investor relations firm. And I can't stress to you enough the importance of getting different perspectives from around the ecosystem. Don's perspective is going to be very different than mine, than Brent's, than Mark's yesterday, than any of the presenters today, because Mark is coming at this from a different place, and he has insights into, like, okay, what is the IPO market like for healthcare stocks right now? What kind of a demand is there for healthcare stocks right now? He's got a very unique perspective. So, Don, welcome to our healthcare conference today. Thank you for joining us.
Let's see if Don, can you hear us?
Seems like we have.
I think he might be frozen. It might be.
I think he can hear us, but we're probably very
delayed.
I'm guessing. Or not.
We had Don good to go before. Don and I were chatting. We were having a good old time, and of course,
that's a bummer, man. Because
technology strikes.
And yeah, it's I'm so looking forward to this because, again, Don can speak directly to like the SPAC market, right? And healthcare stocks, the IPO, the IPO market, right? Yep, and when from his point of view, it's like, well, is there a lot of demand from companies, from private companies? Are they coming to him to go public? And what does that mean? Is there not demand for companies for the ones that are coming to Don?
Have you had it, Spence? Have you had a sense? Let's see if we get Don back. Don. Any better, Don? Testing 1 2. Check 1 2.
Third time's the charm.
Third time. Is this the second time or is this the third time?
Third time.
I was going to ask you, Spence, have you had a sense for the amount of healthcare names that have been coming through the SPAC pipeline?
Not really. I mean, I can't. I mean, I know there are some. I am not our SPAC guru. There certainly have been healthcare SPACs, but I haven't gotten the sense that there's more healthcare SPACs than, say, for example, like EV SPACs, right?
Certainly, more EV SPACs, right?
Or fintech SPACs. But that's a question that Don would know.
That's
if we can ever get Don back, because I really again, I cannot stress enough the value of perspectives from around the ecosystem, whether you're a trader, whether you're an investor, you're an executive, or you're someone like Don that sort of lives in the middle. Important.
My take is, get all the perspectives you can. Yeah. You don't have to subscribe to all of them. Subscribe. You don't have to believe in all of them, but get the perspectives, take them into your opinion, and then you are more informed and educated.
So like for example, one of the questions I plan on asking Don, if we can ever get him on here, is there so when you are working with a company, maybe to advise them on going public, what is the institutional demand like right? Because Don has to communicate between these companies and Wall Street. Is there a lot of demand from the big banks? The underwrite, Goldman Sachs, the JP Morgans of the world. Is there a demand right now from them? Because that demand can very often trickle down, right, to the retail crowd. So
certainly. I think so. It looks like Rohan and Aaron Thomas, producers here, are chugging away, working hard to try to get Don back. Maybe we can pipe him in, get him to call on our phone. We won't get to see his nice face, but maybe we can get his nice voice via a little phone connection. Is that what you guys are planning? This is like the fastest. Aaron Thomas is like, it's like he's typing like the Kermit gif, Kermit's just like smashing away or whatever. It's pretty much what he looks like right now.
I would have imagined the dog gif or the dog meme of Aaron at the dog at the keyboard, just like, I don't know what I'm doing, right?
The play it off cat, that guy?
No, the one with
I don't think I know.
I don't think I
know what you're talking about.
I'm doing. Oh, okay. Never mind. All right. We've got 13 minutes until our first session. So if we can't get Don back on,
we're Spence.
But
so let's stay positive here. We're getting Don on. We're getting Don.
I'm rooting for it. The second we got him confirmed, I was like, great, because again, issuer demand. Fix my mic. Issuer demand is a real thing. Has it dried up, for example? Right? Has the demand on Wall Street for new healthcare companies, has that dried up?
I think we've given the audience enough of a preview. I want to see if everybody has some questions here.
I think we got Don.
Don,
how are you?
There he is.
Yes. Sorry, nothing like a backup plan. So sorry about that. I don't know what happened to me.
All good, man. You're
very
here
nice
with
to see
us
you guys.
now. You know what, Don? We were able to give you some nice words, and we were able to prepare the audience for some of the questions that we were going to ask you about. And so I hope that we've given the audience enough little preview where we can start getting some potentially questions from the audience in here for you. But I mean, let's get right to it, Spence. If you want to ask Don that question that you.
Well, yeah. The first thing, I guess we should probably hear it from your own words. I explained briefly what ICR does, but explain like your role in the ecosystem, in the markets ecosystem.
Yeah, sure, absolutely. We advise companies on communications around IPOs and go public events. So whether you choose to do a direct listing, do a SPAC transactions or an IPO, you're going to have to pick banks. So you want to make sure you pick the banks that are right for the company. And then you're really going to have to make sure you've got the right messaging and you tell your story effectively to the audience you're trying to communicate with, whether it be shareholders, institutional shareholders, retail analysts, or individual investors. So we help companies across the board. We do a lot of work in all sectors, but healthcare is our largest sector.
So let's just jump right into it. What I was just asking Spencer, I said, Spencer, do you have a feel for what the SPAC process has been like for healthcare names? Has there been more or less healthcare SPACs recently? We know that there have been a ton of smart energy, renewable energy, electric vehicle companies. What about the healthcare market?
Yeah, no, good question. And it's funny, the some of the electric vehicles and flying vehicle stories get a lot of attention. The reality is when you look at the numbers, whether it's SPACs or it's IPOs, about 30% or so have been focused on the healthcare space. And so you see a lot of activity, in particular, in both cases, SPACs and IPOs. I think you've seen a concentration in things like telehealth, biopharma, and some med devices as well. But I think the IPO market now, I think if you look at the third quarter, which is coming to a close here, I think healthcare IPOs were over a third of all the deals, raised almost $5 billion in capital. In the SPAC market, it's tricky because when you look at a SPAC that goes public, sometimes they target a sector, sometimes they don't.
Right.
Healthcare focused SPACs have been less than 30%, but you've certainly seen some SPACs that were generalist also buy healthcare related businesses.
So a strong quarter on the IPO front for healthcare companies. What does that tell you going forward? Maybe for the end of the year, is is demand on Wall Street for these companies for the sector? Is it healthy? You see it increasing. You see it staying steady. You see it decreasing.
Yeah, I think if you look at year to date, I think the return on all the healthcare IPOs is about 23%. I think that gives you a little bit of a leading indicator, which is there's more to come. I think of the deals on file, it looks to be about the same. I think there's a couple of things. On the smaller cap side, certainly you see a lot of life sciences and biopharmaceutical companies. You have definitely seen a big shift in telehealth, across the board. I think as all of us have lived through the pandemic and how we shifted purchasing patterns and how we consume healthcare, a lot of these companies have grown very quickly, and you see them accessing the capital markets. So we think the year is on track to be overall number of IPOs will be a record compared to any time in our history. And we continue to think healthcare is going to be probably a quarter to as much as a third of the overall IPO market. And we think we're set up from a pipeline perspective pretty good for 2022. There are a lot of growth equities, and the what I like to tell people is the best way to track this is really to just look at where the VC money goes.
Sure.
And interestingly enough, the venture money maps very closely to around that 30%. So if you follow the money, it tells you where the IPOs are going to be.
So do you have any feel for where the VC money is going for 2022, maybe 2023 even?
Yeah, it's a great question. You kind of have to wind back and look at it from a few years ago. And then as you see the bigger rounds, like a Series C or a Series D, it tells you these companies are getting closer to public company ready. But I think I think we're going to see across the board strength. There's probably two types, right? A little bit more developed healthcare businesses that have revenue that are of size and scale to go public. I think you see that more in the telehealth space, healthcare services, and certainly in some of the device categories. I think when you look at the life sciences space, obviously a lot of those companies are in development phase, and the capital markets have been very willing to fund some of those businesses, even when they're in their earliest stages of development, just because of the potential addressable markets and the types of issues and diseases they're addressing.
Don, you mentioned telehealth. The first thing I think of is Teladoc, which, for better or worse, has been the poster child for telehealth on Wall Street. And my knowledge doesn't go much more beyond. I'm sure most people, they only know Teladoc, but you're saying there is an entire parade of companies coming right up behind them. Give us a sense, like, how crowded is the telehealth space right now, or not crowded?
Yeah, I think the way we like to think about a lot of these is how we consume it, but I think the broader spectrum includes how potentially doctors are using technology. Sure. You also have seen a tremendous amount of innovation, including in people broadly call it healthcare IT, but it's how people get paid. You've seen it in claims processing. So you've seen a tremendous amount of innovation out there, and some of these companies have gotten to pretty of size and scale. I think you're going to see more of it. So I think, no doubt, from a consumer standpoint, we see how we consume it, or maybe you see from a services side some of these clinics that have rolled out. So, but behind the scenes, there's a lot of companies developing technology and healthcare IT to address some of these emerging markets.
Certainly. And, I think telehealth, I think you just touched on it there a little bit, but telehealth is sort of, in my opinion, tangential to, like a service. They're providing a service. Obviously, we've had, yesterday, we had a couple companies on that were providing services. Can you speak to sort of this shift, I guess, this evolution into a healthcare company as much more of a service, especially when a lot of us are remote nowadays due to the pandemic?
Yeah, I think, look, when you think about the services, again, I think people think about it as consumer services. There is an entire software sector trying to address the doctor-patient relationship and even patient management. There is a tremendous amount of people trying to essentially standardize or create efficiency from patient information standpoint. And then I think in addition, there's in the broader ecosystem, there's a complex payment ecosystem. Who's paying? Are you paying? So you also see claims remediation businesses. So there is a very, very large opportunity because we spend so much on healthcare and how some of these companies are solving problems for the healthcare system. But I think you're going to continue to see healthcare IT broadly, or whether we want to call it health tech, be a pretty big chunk of the IPO market as it relates to the sector itself.
Right, Don, off the top, you said you advise companies whether they want to do an IPO, a direct listing, or go SPAC. Let's pretend I'm a healthcare company and I'm ready, to go public in some way, shape, or form. Why would I IPO versus do a direct listing versus do a SPAC?
That's a great question. When we talk to people about that today, if we wound the clock back to 10 years ago, they would have said, hey, what are you going to do? I'm going to sell myself or I'm going to go public. It's kind of like the Price is Right show. Today you have door number one, an IPO, door number two is a SPAC, and door number three is a direct listing. And the great thing about the capital markets is the capital markets has been able to innovate to solve problems or challenges for companies. Because even if you look at yesterday, Warby Parker listed, and they didn't need to raise capital. They raised a lot of capital privately. But what it demonstrated is the capital markets found a solution, because as you guys well know, if 5 years ago we said, hey, we're going to do an IPO and it's going to be 100% selling shareholders, people would have ran out the back door and said, I'm not going to touch that thing ever. Now, all of a sudden, this direct listing approach has solved for that, where existing shareholders can sell. So when you think across the spectrum, I think, and this is why I think you're seeing the surge in capital markets activity, there are solutions for every company based on how much capital they need or don't need, based on the speed with which they want to get to the public markets, and they can choose door number 1, 2, or 3. So I think what you're going to see is certainly, let's talk about IPOs. A healthy market. I think the pipeline looks great. I think the SPAC market had a little bit of a once in a lifetime event in the first quarter. I think you're going to see that normalize more. You've seen it in the IPO market. There were almost 300 SPAC IPOs in the first quarter. That's now settled down to a pace of about 20 to 30 a month. That's a little bit more normalized to probably, call it 50 to 75 a quarter. 300 in a quarter is not good for anybody.
Yeah.
And then the direct listing market has spiked up. And I think why you're seeing that is a professional, institutions can do $100 or $200 million private round and buy as much stock as they want in the private market for a soon to be public company. And I think they've all gotten more comfortable with a company doing a direct listing versus traditional IPO.
All right, I want to step in here because I have to go over to track 2, the cool track. I'm going to leave Don and Brent.
Watch it.
Watch it. All right. I'll see you guys over there. Don, thank you so much.
Take
Brent,
care.
Good job.
Ladies,
Thanks for having me.
I'll see you guys over.
And we'll keep it going here a little bit longer, Don,
Sure.
if that's cool with you. So when you just were talking about, the amazing breadth, the great quantity that was happening there, and when that was happening, I was sitting at my desk considering this, and I was sort of going, this is a new normal. I think the SPAC process had gone well for so many companies that it just seemed like to me a lot more companies were going to be doing SPACs continuing. How do you think, what's going to be the evolution of the SPAC? Is SPACs going to be maintained at kind of this pace that we're at right now? Or do you see the SPAC process kind of like evolving into something that maybe a lot of people don't have insight into yet?
Yeah, no, I think that's a great observation. And I think evolving is the right word, because when you think about where this SPAC market was 5 years ago, which is nowhere, it was companies that probably shouldn't have gone public were using the structure. I think what you saw earlier this year is a lot of companies that absolutely could use the structure did it, and they did it with great success. But there were some that probably were using it prematurely. I think where you're going to see it evolved is companies that are more public company ready, that are of size and substance, that the structure actually helps. I think the institutional market has already, and the retail market, by the way, has spoken. They're not buying these deals on announcement anymore. They're paying attention to the business, what type of forecast and other forward-looking information they're providing, and really trying to evaluate the companies before jumping in. And then I think when you think about just the SPAC, not the target market, but the SPACs themselves, you're seeing the SPACs that are going public increasingly are serial issuers. So it's people who haven't done this the first time. And the reason is, it's like anything. If you have a SPAC sponsor that made you money last time, you're much more likely to bet on them the second time. And I think for some SPAC sponsors who have not done so well in the past, I think investors aren't going to bet on them in the future.
Gotcha. So we're going to kind of wrap here in a sec, Don. I got one more good question for you. I think this is what the audience is excited to hear about. So, speak to us about valuations within the space really quick. Do you think we're on par right now? Do you think we're a little expensive? Do you think we're a little cheaper? Where do you think the valuations are right now?
Yeah, you think market or healthcare?
Specific to healthcare. Let's stay.
Yeah. It's interesting. I think it becomes so company specific, because even if you just take a look at the IPO market, if you look at the best performers so far this year, I think a therapeutics company was the #1 performer. I think it was up 150%. I think it's Adagio is how you pronounce it, ADGI.
Gotcha.
But if you look at it, 5 of the top 10 performers were all healthcare. But at the same time, 5 of the bottom 10 performers were all healthcare.
Interesting.
And so I think when you look at the market, it's company specific. I think it's a good IPO market. I think investors are paying attention to high quality deals, but that doesn't mean every deal's going to work. And so I do think you'll see quality transactions come to market. I think you're probably going to see some deals that don't go so well. And I think the message really for investors is do your homework. You can listen to road shows, try to do a little homework before you buy these things, and certainly tune into your show so that you get some great feedback on what stocks to buy.
A ton of good conversation we just had, and Don leaving you with probably the wisest words: do your homework. Can't get much more simple than that, but very smart, wise words here, Don. Don Duffy, he's president of ICR. We had a blast starting the session off with you today. Thanks a ton, Don.
Thanks so much for having me. Have a good one.
Yes, sir. You too. Really cool stuff we had to start today's session and yesterday's session, giving you a little bit of a different perspective than some of the other events that we're having, where we're kind of diving right into stuff. Kind of cool to zoom away from some of specifically the corporations and get a more of an investor or trader's perspective, or a valuation perspective. We're gonna jump into it now, though, with our first presentation for the day. The company is PDS Biotech, and I'm welcoming on here the CEO of PDS Biotech, Frank Bedu-Addo. How you doing?
Good. How are you?
Good morning, Frank. Very good to see you.
Same here.
How's your day going so far?
So far, so good. Very interesting conversations.
So you were tuned in a little bit there?
Yeah.
Good stuff, right, from Don.
Yes.
Awesome. Well, I'll let you take it away and let's kick it off.
Okay. Well, thank you very much again for the invitation to present at the Benzinga Healthcare Small Cap Conference. For the attendees, as usual, please make sure you are familiar with the risk factors associated with the company as filed with the SEC. So PDS Biotechnology, our ticker symbol PDSB, is a mid-clinical stage cancer immunotherapy company developing first-in-class treatments for cancer. PDS Biotech has developed Versimune, which is a proprietary platform technology that has demonstrated excellent potential to overcome some of the most significant limitations of cancer immunotherapy. Now, our lead product, PDS-0101, has generated highly promising preliminary data in advanced and untreatable HPV-associated cancer patients. So data from the first 18 patients in our most advanced phase 2 clinical trial that's led by the National Cancer Institute has been reported. Now, in these previously untreatable patients, all had failed chemotherapy treatment as well as radiation treatment. Among these patients, 67% of them had also failed treatment with state-of-the-art checkpoint inhibitors, such as the blockbuster drugs Opdivo and Keytruda. Now, upon treatment with the PDS-0101 combination, reduction of the cancer was seen in almost 70% of the patients, with some of those patients already showing no evidence of the cancer. So PDS-0101 is currently being evaluated as a combination therapy in 3 phase 2 human clinical trials. Each of these phase 2 trials is partnered with a leader in the field of oncology, Merck, the National Cancer Institute, and MD Anderson Cancer Center. This Versamune technology is now being applied to the development of a broader pipeline of products. PDS Biotechnology has no debt, and as of June 30th, had approximately $75 million in cash. The Versamune technology is protected by multiple patents that provide protection at least through the mid-2030s. So what I'll do today is I'll start the presentation by providing an introductory overview of how the Versamune technology works. I'll then review the recently reported preliminary or interim data for our National Cancer Institute-led phase 2 trial, followed by an update on the Versatile 002 trial, in which PDS-0101 is administered in combination with Merck's blockbuster immunotherapy Keytruda. Next, I'll discuss how this technology platform is being applied to a broader pipeline of oncology products, and then I'll conclude with the near-term milestones. Now, due to COVID-19, there has been a lot of discussion about neutralizing antibodies. However, there is another very important component of our immune system. These are our killer T cells, which constitute the attacking arm of the immune system. Now, Versamune is a nanoparticle that's made from a patented synthetic and biodegradable lipid. And Versamune has been engineered to effectively recruit, train, and activate a large army of killer T cells within the body to specifically recognize and attack cancer cells. Now, to achieve this, Versamune is administered together with a protein that is unique or specific to the cancer we're seeking to treat. Right? The result is an induction in vivo of a superior quantity of the right type of tumor-targeting killer T cell with superior killing potency. Now, secondly, Versamune has shown the potential to induce high-quality memory T cells, which could therefore lead to durable and long-term anti-tumor efficacy. So by being able to achieve a unique combination of both safety and potency, Versamune could present strong potential to provide more effective treatments for cancer. So PDS-0101 is being developed to treat cancers caused specifically by HPV type 16, including anal, cervical, head and neck, vaginal, and vulvar cancers, and also penile cancers. HPV type 16, also called HPV-16, is the most aggressive cancer-causing type of HPV, and 70 to 80% of all HPV-associated cancers are caused by HPV-16. Now, the PDS-0101 immunotherapy consists of the Versamune nanoparticles formulated with small, short proteins from HPV-16 in order to train and activate the attacking arm of our immune system, the killer T cells, to target and kill the cancer cells that are infected with HPV-16. And these cancers are referred to as HPV-16 positive cancers. In the United States, approximately 43,000 patients every year are diagnosed with an HPV-related cancer. So the initial treatment for HPV-associated cancers is usually radiation treatment with or followed by chemotherapy if necessary. Now, a significant percentage of these patients will typically fail treatment or relapse and continue to progress to metastatic disease. Now, these advanced and refractory patients who have failed treatment but have not yet been treated with checkpoint inhibitors constitute the first group of patients evaluated in our NCI, National Cancer Institute-led trial. So these patients are referred to as checkpoint inhibitor naive patients. So failed chemotherapy, failed radiation treatment, but not yet treated with checkpoint inhibitors. Checkpoint inhibitors have been FDA approved to treat patients with refractory HPV-associated cancer who have failed radiation and chemotherapy treatment. Unfortunately, about 80% or more of these patients who are treated with checkpoint inhibitors will also fail checkpoint inhibitor therapy and continue to progress. So this checkpoint inhibitor refractory group of patients who have failed treatment with all these options and have very few options available to them have an overall historical survival of only 3 to 4 months. These patients constitute the second group of patients evaluated in this trial. So as you may have realized from what I've said so far, PDS0101 is being tested and evaluated in some of the most difficult to treat patient populations who have few treatment options remaining. Now, this is important not only to demonstrate the power of the technology, but this approach could also facilitate more rapid clinical development and commercialization of the products, the Versamune-based products. So in this National Cancer Institute-led trial, PDS0101 is administered in combination with 2 of EMD Serono's clinical stage immunotherapies. Bintrafusp alpha, which is a bifunctional checkpoint inhibitor that works by making the cancer cells more visible to the immune system, and M9241, which is an immunocytokine. The trial will enroll about 56 patients, and the National Cancer Institute expects full enrollment sometime during the first quarter of 2022. Now, the scientific basis and rationale for clinical evaluation of this novel triple combination, as well as the preclinical data, was published in a top peer-reviewed journal, the June 17th, 2020 issue of the Journal for Immunotherapy of Cancer. Now, at the time of the American Society of Clinical Oncology conference in June of this year, where the data was presented, the HPV-16 positive patient pool included 40% of the patients who had cervical cancer, 24% had anal cancer, another 24% had head and neck cancer, and 12% had either vaginal or vulvar cancer. Now, on the slide here, I show the data from the first group of 6 patients, those who had failed radiation therapy as well as chemotherapy. And as I mentioned, for this group of advanced cancer patients, the standard of care is checkpoint inhibitor therapy. And the reported response rate in these patients, meaning that this will work in approximately 20% or less of these patients, will respond to treatment with the checkpoint inhibitors. Now, in the study group who received the PDS0101 based combination, 5 out of 6, or 83%, had an objective response to treatment. Now, what this means is that these 5 patients experienced tumor reduction of 30% or more. And one of the 5 of these patients had already experienced a complete response, meaning that there was no longer any evidence of the cancer. Now, on the slide, I show the next group of 12 patients who, these are the patients who, in addition to failing chemotherapy and radiation treatment, had also failed treatment with checkpoint inhibitors. In this group of patients, further treatment approaches are only effective in 10% or less than 10% of these patients. The National Cancer Institute reported tumor reduction in 7 out of 12 of the patients who were treated with the PDS0101 combination, almost a 60% efficacy rate, with a complete response reported in 1 of the 7 patients. Now, it's important to note, as I show on the current slide, that at a median of 8 months, 100% of the checkpoint inhibitor naive HPV-16 positive patients were still alive. So those patients who had failed chemotherapy and radiation treatment and treated with the PDS0101 triple combination. Despite the historical survival for these patients typically within the 7 to 11 month range, in this case, at the median of 8 months, 100% of these patients were still alive. Now, if we go to the checkpoint inhibitor refractory group, these are the patients who, in addition to chemo and radiation, had also failed checkpoint inhibitor therapy. These patients have a historical median survival of about 3 to 4 months. In this case, at a median of 8 months, 83% of these patients were still alive. So the results from both groups of patients are highly encouraging. Two key things we will be looking out for in the near term from this novel triple combination are first, an update on the additional patients who have been enrolled since ASCO, and secondly, the survival times for the patients whose data was presented at ASCO. Now, since the study involves a triple combination, one of the questions that we are very often asked is, how do we know that PDS0101 specifically is actually contributing towards the positive outcomes reported here? Now, the fact that PDS0101 is designed to treat cancers that are positive for HPV16 is very important, right? Among the 3 immunotherapies in the triple combination, PDS0101 is the only one designed to promote the induction of killer T cells that are primed to recognize a specific predetermined tumor-associated protein, in this case, HPV type 16, and to kill the host cells. Now, in the National Cancer Institute-led study that we're talking about, 7 patients whose HPV-associated cancers were not HPV16 positive were enrolled. Now, this means that these 7 patients had a cancer that was caused by another type of HPV other than type 16, meaning that by taking this triple combination, their immune systems or their T cells had been trained to recognize a different enemy rather than the enemy that is causing their particular cancer, which in this case is HPV16, right? That's what the T cells have been trained to recognize and attack and eliminate, right? So as you can see on the slide, 67% of the patients, of the 18 patients whose refractory cancers were HPV16 positive, saw clinical benefit with tumor reduction. Not a single one of the patients infected with the non-HPV16 types of HPV had any response, right? These studies therefore strongly suggest that there may be a critical role of PDS0101 in effectively recruiting, training, and activating the T cells, even in terminally ill patients, to recognize and specifically attack those HPV16 positive cancer cells. Now, an important benefit of an ideal protein-specific immunotherapy, such as what PDS Biotech is developing, is that it may not matter where in the body the tumors reside or what type of cancer the patient has, so long as the cancer expresses or is positive for the unique tumor-specific protein that the immune system has been trained to recognize and attack. So as reported with this National Cancer Institute study, very importantly, it did not matter where in the body the cancer was located, whether it was anal, cervical, head and neck, vaginal, or vulvar cancer. So long as it expressed or contained HPV16, we saw positive anti-tumor benefit. These results reported by the NCI strongly suggest that the Versamune technology may be working effectively as designed to efficiently activate the body to produce the relevant type of tumor-attacking killer T cells. Now, moving on to the second trial, Versatile-002. In this trial is specifically led by PDS Biotechnology and is studying the combination of PDS0101 with Merck's blockbuster immunotherapy Keytruda in advanced, recurrent, or metastatic HPV16 positive head and neck cancer. Approximately 90% of HPV positive head and neck cancers are caused by HPV16. Keytruda is FDA-approved standard of care for first-line treatment of recurrent or metastatic head and neck cancer. This trial is recruiting approximately 100 patients across approximately 25 sites within the United States. We recently reported that we had achieved a key milestone for this trial by completing recruitment for the safety cohort or the safety group for this trial. It was then subsequently reported that no dose-limiting toxicities were observed among this safety group, in that our drug monitoring committee, consisting of renowned industry experts, had therefore provided the authorization for enrollment into the trial to continue without any changes to the protocol. Now, this trial, similarly to the NCI-led trial, will enroll both checkpoint inhibitor naive and checkpoint inhibitor refractory subjects who are HPV-16 positive. Now, in this trial, it is important to note here that unlike the novel triple combination that's being evaluated by the NCI, with the Versatile 002 trial, and also with our third trial being led by MD Anderson Cancer Center, PDS0101 is being combined with the FDA-approved standard of care. We believe, therefore, that if it is possible to improve clinical benefit to these patients over what's seen with the standard of care alone, without compounding toxicity, that the potential for successful commercialization improves significantly. The results from the Versatile 002 safety group, therefore, are extremely encouraging, and we will continue to monitor safety as the trial recruitment continues. Now, as a result of the successful evaluation of the safety cohort, we remain on track to provide preliminary efficacy data next quarter or early in 2022. So at PDS Biotech, we believe that Versamune's mechanism of action will enable us to build a robust oncology pipeline beyond PDS0101. Here I show the current pipeline in development, the 3 ongoing PDS0101 clinical trials, PDS0102 addressing TARP-positive cancers, including prostate and breast cancer, as well as acute myeloid leukemia, AML, PDS0103 addressing MUC1 positive cancers, including colon, breast, lung, and ovarian cancers, and TRP2 positive cancers such as melanoma. In our preclinical studies, as seen on the slide, when Versamune is formulated with the tumor-specific protein PDS0102, or with the tumor-specific protein MUC1, or as in PDS0103, or with the melanoma-specific protein TRP2 in PDS0104, similar or superior levels of tumor-specific T-cell activation is seen when compared with PDS0101. These products, the potency of these products appears to compare very favorably with what we've seen with PDS0101. With PDS0101, the preclinical results appear to have translated quite well to humans.
Hey, Frank, I want to jump in here, and it doesn't look like you're all the way done yet, but we do have a couple good questions from the audience. So if you're able to take a couple quick questions, let's do that now.
Sure, let's do that.
Okay, awesome. So the chat was very interested in what you had to say. We got a couple good questions, like I said. A question from Steven here. He said, will the Keytruda trial allow for quick commercialization of the drug by PDS?
Well, we hope so. We certainly hope so. So as I mentioned, with Keytruda being the current standard of care, one of the key things we look for is if we can enhance that clinical benefit without compounding toxicity. So if we can show the safety with additional clinical benefit, we believe that that significantly speeds up the commercialization process. So we are highly optimistic about this trial.
Great. And then Dan is asking if you've identified a combo for any of the other candidates, PDS102, PDS103, or PDS104.
We actually have started working on some candidates for combination that we're currently evaluating. So for example, with PDS0103, there's currently work going on at the National Cancer Institute looking at different combos with the goal of completing that and taking this into human clinical trials sometime between the second and third quarters of next year.
Excellent. Well, we're going to have to wrap there, Frank. Unfortunately, we had a few more good questions, but we're not going to be able to get to them. Thanks so much for joining us. PDS Biotech, Frank, he's the CEO, and the ticker is, throw it on the screen there. It's PDSB. I see it. Thanks so much for joining us, Frank.
Thank you very much for having me.
Have a good rest of your day.
You too. Thank you.
1 down and 20 to go. I'm making that number up, maybe, but it's probably somewhere up there. Next up is the CEO of Quipt Home Medical. It's ticker QIPT. I see him backstage, and I see him on screen now. Greg Crawford. How are you, sir? Welcome.
I'm doing great. Good morning, everyone.
I love your, is that a Bears? Is that a Bears stained glass lamp behind you there?
Cincinnati Reds.
Cincinnati Reds. Gotcha. All right. Let's go Reds. All right. I will let you take it away, Greg. Tell us a little bit about Quipt.
Yeah, sure. Thanks everyone for taking the time this morning. But Quipt Home Medical is a full service home respiratory and medical device company. We currently operate in 15 states. We've got over 60 locations. And as mentioned, we primarily provide respiratory devices to patients inside their home. We've got over 150,000 active patients and deliver over 250,000 pieces of equipment annually, being referred by over 18,000 referring physicians. How we get our business, I like to refer to as the order life cycle. We have boots on the ground sales representatives. They call on hospital systems, physicians, long-term care facilities, home health agencies, anyone that would be caring for or discharging a patient for further care inside their home. Once those needs are established, they will contact one of our local service centers. They'll send over the proper medical documentation that's needed. That team will work with the insurance companies, obtain any pre-authorizations or predeterminations. Once all of that is finished and payment is secured from the insurance companies, it gets sent to our distribution team, and that's where we really shine. Our distribution team can consist of registered respiratory therapists, nurses, patient service technicians. They will either go to the patient's home or the patient will come into one of our facilities, depending on what type of device it is. They'll get that patient set up on the device. They'll provide all the education, ongoing support, and compliance in order to get those patients onto the device and for their physicians to see the benefits. From there, it's turned over to our billing team, and our billing team works the revenue cycle management, and they ensure collections from the insurance companies. Currently we have a strong and growing recurring revenue model. Right now, about 75% of our revenue is recurring, 25% is sales. That's up about 7% year over year. And that product mix is derived from home oxygen therapy is approximately 23%, sleep devices, which is approximately 19%, or 21%. Sleep therapy supplies is approximately 19%. Our home ventilator program is approximately 17%. And then our basic home medical equipment and custom power mobility rounds out to complement those respiratory products at about 20%. We have a very diversified payer mix, with Medicare only making up around 40% of our overall revenue. Private insurance companies is approximately 38%. State Medicaid programs is approximately 12%. And then private inpatient pay is around 11%. Some company highlights. We utilize technology applications in order to run the business that allow us to offer our exceptional service, and also allows us to remove a lot of the friction points in that are required to order this type of equipment for physicians. Once again, that strong and growing recurring revenue model of 75%. We also operate in an industry that's expected to breach the $84 billion mark by 2028, and it's close to $60 billion today. We also have a very active acquisition focus as we operate in a highly fragmented market with over 6,000 quote unique mom and pop type providers. Also, we're operating in one of the best regulatory environments that we've been in well over a decade. One of the big reasons driving that recently, or last year about this time, CMS, the Center for Medicare and Medicaid Services, had made a decision to remove 13 product categories, and that from a program called competitive bidding that this industry had been subject to since around 2010. And the reason CMS removed those 13 product categories was, quote, because they did not achieve the expected savings. So what that's allowed us to continue to strengthen our patient base and also continue our patient care quality. But also it's given us a clear margin outlook for the foreseeable future for our fee-for-service contracts that we have. Just some industry dynamics there. We are a true demographic play with 10,000 people turning 65 or older every day for the next 15 years. That's our core market. Also, the number of Americans in that suffering from sleep apnea, severe sleep apnea is estimated to be at 22 million, and that 80% of those cases in that have gone undiagnosed. Also, the industry itself is growing at about 6% a year. We've been able to grow almost double digits in that over the past couple of years and outpace that. As far as our strategic growth initiatives on a go-forward basis, it's a three-prong approach. One is organic growth, the second is technology implementation, and the third is acquisitions. On the organic growth side, we kind of mentioned some of the tailwinds from the aging population. Also, we've seen the utilization of home oxygen, which represents about 23% of our business again, has increased about 15% in the last 5 years. We've also continued to see strong demand for non-COVID patients for home oxygen therapy as more and more patients have been treated in the home setting rather than going to the hospital. That continues to remain strong. Also, it's expected that the number of Americans with 3 or more chronic diseases is expected to increase over 171%. We believe with our diversified product offering, we're set to capitalize on that as we continue to treat patients with multiple cardio and pulmonary diseases. The second piece of our growth strategy is technology implementation. With this industry being so highly fragmented, we haven't seen a lot of commitment to technology. We've been very committed to technology over the past 3 to 4 years. We're completely tech-driven. It's continuously evolving. We're interconnected, and it's utilized system-wide. And really what tech has done for us is it's allowed us to create a totally connected healthcare platform for our patients, for our insurance payers, and our physicians. So it's allowed us to accelerate our growth and reduce a lot of the friction points in that for workflow processes. Another piece of our tech is our telehealth. We hear a lot about telehealth in that since last year with the pandemic. We've had a telehealth platform in place now for well over 3 years. We utilize telehealth primarily to get patients set up on our respiratory devices, and it allows us a platform in that to reach patients and get them set up, allows us to work towards getting those patients compliant. So once again, in that what tech has done for us is it's provided this total connected healthcare platform for remote patient monitoring. Once again, with those benefits for patients, payers, and providers, it's allowed us to monitor their treatment plans and really drive early interventions in that through encouraging compliance through patient engagement applications, which has ultimately improved the outcomes for those patients. The third piece of our growth strategy is our acquisition strategy. Most recently, in that we've changed here in 2021, changed to a 3-tiered acquisition strategy. One being with a looking at companies and that would be sub $5 million with the current regulatory environment. We believe this is a great time for us to expand nationally as we implement a land and expand type approach in that to where we're able to acquire a company, obtain the majority of the commercial contracts that are needed to do business within a certain state or region. We believe that's good deployment of our capital. And to date, this year, in that we've added 5 new states in that to our coverage area. The second is looking at heavily respiratory focused companies, and that would be great tuck-in type companies. And the third would be targeting in that much larger type companies from a revenue and an EBITDA standpoint that will allow us to really build a potential platform in other parts of the country that we're not currently covering, or in that to add specifically in that potentially new product categories in that to our current offering. Acquisition summary to date, you can see there in that this management team and that under Quipt has done approximately 9 transactions for a total of about $44 million in revenue. A good way to kind of look at our acquisition model is that we like to take low performing, low margin businesses and turn them into high margin performing businesses. You can kind of see by some of the examples that we have there that we've seen purchase price go anywhere from 2 to 5 times EBITDA, or another way to look at it would be anything from say 40% to about 1 times revenue. And those Everything on there, on the examples there, would be prior to any synergies in that we would obtain amongst those acquired assets. Our strategic growth initiatives have resulted in our current run rate revenue of about $105 million. We're proud to say that we reached that one full quarter earlier than we were anticipating earlier in 2021. For calendar 22, and that we're kind of guiding at $135 million in run rate revenue with 22 to 25% EBITDA margins as we continue to scale the business, and we're able to grow those margins in that through our scale. 3 to 5 years, $250 million plus in revenue with 25% plus EBITDA margins. Some current financial information. We report on a fiscal year which ends 9/30. So we've reported thus far through June 30th our Q3 results in that quarter over quarter, and that we've seen an 8% increase in total revenue year over year. Some highlights there that we're pretty proud of is that for Q3, 41% increase in total revenue and a 21% increase in adjusted EBITDA. And amongst that 41% increase in total revenue, 7% of that was organic growth. We've taken the company all the way from a top line revenue standpoint for Q3 from 15.3 over the past 3 years all the way to 26.2 million. Adjusted EBITDA during that time frame has went from 2.8 million to 5.3 million. Some Q3 year-to-date 2021 results, which are through June 30th again. We've taken the company all the way from $44.6 million in 18 all the way to $73.2 million. And that adjusted EBITDA went from 5.8 million all the way to $15.9 million. So year to date, we've had a 38% increase in total revenue and 11% organic revenue growth. Also, another big highlight there on the slide is positive cash flow from operations has went from 9.7 million all the way to $11.9 million. Also, with our operational excellence and our billing and collections, we've been able to reduce our bad debt expense in that from 10% down to 8% over the same time period. Our adjusted EBITDA margins on a full year basis from 2017 to 20 have went all the way from 1.4% all the way to 20.2% on a full year last year. On a quarterly basis, for the quarters in that, they went from 18.3% to 20.2%. Our capital structure and inside ownership as of 8/20, we have a really tight share structure. We got about 33 million shares outstanding. The only debt that we really have is a convertible debenture for 11.6 million Canadian. That does have a convert feature, which we fully expect will convert in that in the time frame of about April of 22. It has a forced conversion on a 20-day VWAP of $6.40 Canadian. It'll convert at $5.20 Canadian. Those are the only numbers that are mentioned here in Canadian dollars. Our cash and cash equivalents is 33 million. We also have an untapped credit facility for $20 million. So that gives us well over $50 million in liquidity to execute on our growth plan as we continue to grow here very strong at 38% year over year. Our management team and our board is fully aligned with our shareholders as we own about 10% of the shares on a fully diluted basis. Some comp tables there kind of comparing where Quipt is currently trading based on our 22 estimates, and that Quipt is trading at about 6.6 times EV to EBITDA compared to the peer group there at about 10.6 times. Management team, myself, I've been in healthcare services for well over 25 years. I came to Quipt via selling a private company that I owned, and that had top line revenue of about $19 million USD. That was in 2015. Shortly after that, I was appointed as COO, took the company through a restructuring in 2016 and 17. At the end of 17, I was appointed as chairman of the board and CEO, and that's when the company started growing. and becoming profitable. Also, Hardik Mehta, CFO. Hardik's been CFO for well over 3 years, so we have a lot of continuity on that piece. Hardik has a significant background in investment banking and M&A and data analytics. Tom Rurick, our EVP of Finance, over 30 years of hands-on experience in accounting finance, is responsible for the day-to-day of our accounting department and our statements. We have 3 independent directors. Mark Greenberg is independent director. He's got over 30 years of senior level leadership experience, a background in investment banking and M&A transactions. He advises the company on all of its M&A transactions. Eugene Ewing has got over 30 years of hands-on experience, was also a partner in one of the U.S.'s largest certified public accounting firms. He also serves on the board of several NYSE listed companies. Gene is the chair of our audit committee. He advises the company on all of its public filings and also the audit. Dr. Kevin Carter is an independent director. He advises the company on all of its clinical programs. And most recently, Quipt commenced trading on the NASDAQ on May 27th. I can now open up for some questions.
And of course, congratulations on the NASDAQ listing. Obviously, a pretty big deal. And I do have a couple quick questions here for you, kind of specifically on your acquisition strategy. Can you speak to the breadth or quantity for potential candidates that you have on the radar over the next couple years, let's say?
Yeah, so I wouldn't want to really speak to the number of transactions. We do have a very robust pipeline right now, and we do expect to be very busy as we get in to the last half of the year here and also into 2022. In fact, recently we've actually hired someone to oversee our acquisitions and integration.
Great.
But when we look at our run rate, or we look at kind of where we're guiding at $135 million run rate revenue, whether that comes through 3 or 4 transactions or it comes through one, in that still kind of remains to be determined. We do have a 3-tier approach there, and as we continue to find accretive acquisitions that fit our criteria, we'll bring them onto our model.
Yeah, I actually wanted to ask you about the 3-tier approach. Why the change in strategy? Was it were you basically adding another threshold that you wanted to require?
Yeah. Well, we just feel just to explain it a little bit better to our investors, and that with the regulatory environment and that's really kind of taken effect here in 2021, and this clear outlook that we have from a reimbursement standpoint, we thought that this is a great time and that for us to kind of start looking at smaller transactions so we can start adding states in that to our coverage area. So we thought with that regulatory environment, that's really good for national expansion. And then we continue to look for those tuck-in type opportunities that are heavily respiratory. And then the third, with our improved balance sheet, and that we've got the most pristine balance sheet that we've ever had in the company's history. And there are larger transactions out there from a more material size from revenue and EBITDA that could substantially change the company. And we feel that we've got the balance sheet, we've got the expertise, and that to close a transaction like that, and that should be a part of our growth strategy go forward.
And I think I saw on your slides that you want to focus on respiratory. Maybe an obvious question, but why the focus on respiratory? Did the pandemic have anything to do with that?
No, not really. In that, I think the pandemic, what it's really done is it's just kind of really brought to kind of the top there of taking care of respiratory patients in their home. We've been respiratory focused for many years,
right?
Where we have gone, and that's say over the past 3 or 4 years, from about 70% respiratory to 80%. But we feel that we've really carved a niche out in the marketplace for our clinical expertise out there, along with providing these devices, along with remote patient monitoring. That's resonating very well with physicians and hospital systems. So that's why we've continued to stay very focused on those programs.
Excellent.
We believe, if anything, at this point, the pandemic is kind of holding us back from being able to expand our services.
Interesting. Awesome. Well, thanks for joining us today, Greg. He is CEO of Quipt Home Medical. It's ticker QIPT. Greg Crawford, thank you very much for joining.
Thank you. Everyone have a great day.
You too, sir. We're going to keep it going. Coming up next is a company and a person that more than a few of you have been excited about in the chat, in Benzinga Pro chat over the last couple months, but also in the YouTube chat today. So to our next presenter, no pressure or anything, but people are excited. And let's bring them on now. NanoViricides, it's ticker NNVC, and we have the president and chairman here, Anil Dewan. Anil, how are you?
Good. How are you?
I'm doing very well. It's very good to see you. I will let you take it away, sir.
So my name is Anil Dewan. I'm the president and chairman of NanoViricides. Today, I'm going to give you, okay, let me try to get the share screen completed. What happened to that?
There is stop screen.
Okay.
I'm looking. I'm trying to give you some tips here.
Got it. No, I came to the wrong screen. Escape. I'll have to share screen. Stop screen. Sorry.
Oh, good. Yeah. Usually, if you stop sharing your screen and then try it again, it'll kind of shake something loose. Let's see if we can get that working here.
Yeah, it was this one behind. That I have to go.
I'll let you know when I see it pop back on. So I see it backstage right now. Ooh, I think whatever you just did there might work. There we are. I see it now. Have at it, Anil.
So,
thank you.
Today I'm going to talk about the exciting advances that we have made in developing a pan-coronavirus broad-spectrum nanomedicines against the SARS-CoV-2 virus and its variants. So these are drugs that we have developed and designed to develop that the virus will not be able to escape, and explain to that why that is important and how we achieve that. We have two different drug candidates now. NVCoV2 is the nanomedicine polymeric micelle nanomedicine. That's our standard approach that we have been working on, that we have called first generation nanomedicines or nanoviricides coming out of the company. And NVCoV2R, which is part of our second generation, where we take advantage of the ability of our nanomedicines to deliver additional drugs by encapsulating them. So in the case of NVCoV2R, we are encapsulating remdesivir, which is the well-known antiviral drug. It doesn't work that well in the clinic yet, but with this, we believe that it will be substantially superior. So I'll get to that as well. Okay. Next slide is our disclosure statement. We are a public company, so I am required to tell you that I might be making statements that are not accurate or are far-reaching. I am a scientist, so I do make statements that are far-reaching, and you have to be aware of that, obviously. Most of the presentation is factual, but our expectations are usually what we designed for. They are usually far beyond what people's grasp is even today. So the presentation layout, I'm going to work through SARS-CoV-2 therapeutics development first. The lead drug candidates against SARS-CoV-2, I'll describe them, and then how our strategy works so that the virus would not escape our drugs. Our platform technology, CGMP. We are one of the few companies with CGMP capable manufacturing, R&D, and nanomedicine characterization facilities all in one site in our Shelton campus. That CGMP manufacturing capability is a multi-kilogram capability. So it is sufficient, more than sufficient for clinical trials. And that was our objective. That means that we don't have the stall caused by transfer of technology for manufacturing. So when we say we have done it and we have already done kilogram quantities, that means we are ready for manufacture for clinical as well. The other drug candidate that we were working on previous to switching gears to COVID-19 because of the pandemic is the shingles rash indication. It's a skin cream that was ready to be going into clinical trials. In fact, we were in talks with a clinical trial site when the pandemic hit in January of 2019. And so very quickly we switched gears. We saw that it was going to become a major pandemic even when there were no cases yet in the United States. And we started working on it. We had some head start because of our prior work on coronaviruses. And so we were able to develop many candidates by June. And then we decided to focus on a few of them. And then eventually in October, we focused on the candidates that we are working on now. So So it's been very, very rapid development. And as you know, the vaccine development was more rapid than ours, and antibody development was more rapid than ours. And that's simply because we didn't have enough staff and we didn't have the kind of funding that went into those programs. Our program can be far faster than even antibody development programs. So what we are doing, the SARS-CoV-2, you see the picture of the coronavirus on the side. What is going on is that it's costing economies trillions of dollars. There is no end in sight despite vaccines, because variants are fueling new waves. And every time there is a variant, it has escaped some way against the existing drugs, mainly the antibodies and the vaccines. And so we are currently at a stage where we are fighting a constant battle. The booster shots are not going to be the panacea. That helps, but there are a lot of scientific reasons why that is kind of an iffy approach to use. But I'm not going to get into that. I'm not a vaccinologist. I'm not really an immunologist. Whatever I learned is by reading and understanding. So I don't try to get into those things. I will try to focus on our stuff right now. So what is NVCoV2? It is a nanomachine like our standard NanoViricide technology, where we develop a polymeric micelle where the lipid is inside those purple and blue bands that you see inside. That's lipids. And then there is a core, a green core that you see, and the yellow core. Those are hydrophilic or water-loving shell, which is made of polyethylene glycol, PEG. PEG is a very standard magic molecule. It is considered in biotechnology that it protects drugs from getting taken up by the clearance system of the body, RES, reticuloendothelial system, and others. So it has been a magic molecule. And we use that as the backbone of the polymer in the polymeric micelle making. In addition, the great change here compared to other people's approach is that we have those lipids are pendant, meaning they're hanging from the shell, the hydrophilic shell. And what that gives is, it gives this material ability to shapeshift. And that's the important thing. So what happens, if you see that diagram, it's showing you stage 1, the nanomicelle binds to the virus. Stage 2, it starts shapeshifting. It's inside lipid and the lipidic coat of the virus. They start merging together. Stage 3, you see the virus is getting coated. The virus eventually gets fully coated, and then it cannot bind to the cell, or it cannot infect the cell. So that's the approach that we have been using. We have shown that in electron micrography with certain viruses that it actually does happen this way, and probably it goes even beyond that, in that the S protein or the glycoproteins that the virus needs for binding get actually uprooted from the virus surface. So what is NVCoV2R, the remdesivir containing thing? We believe it is a potential cure, and I'll tell you why. You can see the cartoons at the bottom. The one on the left shows you what are the 2 cycles of replication and reinfection that continue to propagate the virus. So reinfection means a free virus in the fluid outside the cell binds to the cell surface receptor S2, goes inside the cell, and then the second part of the life cycle, replication of the virus, generation of the proteins, assembly of the proteins, and egress. Those take place, and that produces the progeny. So in the case of NVCoV2, we are blocking the reinfection cycle. You can see it on the right side. The circle and the green is the blocked reinfection cycle, because the virus is blocked. However, some viruses will escape, and they will cause some residual reinfection in some cells. That is blocked now by remdesivir, which is efficient at blocking these kind of things. The inside replication, it binds to, it acts against the transcriptase, the protein, the enzyme of the virus that causes elongation of the RNA chain of the virus. It blocks that one. So because of that, it's fairly efficient. It's very efficient in cell cultures. It's not that great in the human body or animal bodies. And I'll come to that later, why our approach of encapsulating NVCoV, the remdesivir into NVCoV2 to make NVCoV2R takes care of that problem. So now, because of that, now we have plenty of remdesivir available. It goes into the cells, and that causes blocks, second block. So that's where I have done this XX second block. And there is practically no progeny that could be generated in that situation. So if you have a highly effective viral load reduction like this, then you probably have a cure. From other viral diseases, it has generally been said in the scientific literature or in the scientific opinion that if you get 3 logs or 4 logs reduction, you pretty much have a cure for the viral infection. In the case of coronaviruses, the current antibodies, even in the clinical trials, which means they were against the same strain that was infecting people as the antibodies were raised against, even in those clinical trials, they were getting about only half log reduction of probably up to 0.7, 0.8 logs in the best cases. So they are not really that good. They were very weak to begin with. With each variant, their efficacy decreases with each effective variant that goes through. And we have had now 3 or 4 different cycles or variant waves. So as you can see, the antibodies and vaccines, they are decreasing in their effectiveness. This approach that we have does not suffer from that problem. And that is why we are able to generate something that we believe is a potential cure. So with the NV-CoV2 alone, we have seen very strong viral load reduction in animal studies. With the NV-CoV2R, it is even better. So that supports what I'm showing here in the cartoon. Where we are with these studies and the developments, we have shown that NV-CoV2 and NV-CoV2R are both broad-spectrum anti-coronavirus agents. We did that using cell culture studies where we used at least 2 different coronaviruses that are not the same as SARS-CoV-2, but one of them is a close cousin of SARS-CoV-2. It binds to the same cell surface receptor as SARS-CoV-2 does. Another one binds to a different one. And against both of them, our drugs were highly effective. Remdesivir is already known to be broad spectrum against many viruses, not just against coronaviruses in cell cultures. Okay. Remdesivir has been relatively less effective in animal studies and in human studies compared to what you would expect from the efficacy in cell cultures. And that I'll get to that later. So substantially less cellular toxicity also we have seen compared to remdesivir. It's not just the activity, effectiveness, it's also toxicity. In the case of remdesivir, we enter into a dose-limiting toxicity regime with the current formulation if you go double the dosing. And that's not good, obviously. So we have been able to, our drugs, both the one with the remdesivir encapsulated, even that one is substantially less toxic than remdesivir. And that's very important. So again, these are effective against unrelated coronaviruses. And I already told you about that. So I'll go to the next slide. We also showed that they are effective in animal studies. And these are with intact, unchanged animals, unlike what was done with development of remdesivir and molnupiravir, where they used genetically modified animals, because of which there is no metabolism or minimal metabolism of the drugs. And so you get false promises of high activity. We didn't do that. The rats metabolize drugs at much faster rate than humans. So that is a given. So this would reflect even lower activity than what you should see in humans. And you can see the data that we have. This is a lung infection of Sprague-Dawley rats with 10⁴ particles, 10,000 particles of NL63, which binds to the ACE2 receptor, same receptor as SARS-CoV-2. So it's a perfectly valid model, surrogate model for that. And with that, when you do not treat the animals or you simply give the injections of the buffer vehicle, the survival was only 5 days. With remdesivir given in the standard format, the 2 infusions 1 day and followed by 1 infusion every day, they survived only 7.5 days. With NV-CoV2, our nanomicelle polymeric micelle medicine, with a high dose of that, they survived 14 days. And with NV-CoV2R, with a medium dose, which means it was about half the amount of NV-CoV2 was in there, and about exactly the same level of remdesivir was there as in the standard remdesivir therapy. They survived 16 days. That is tremendous. So this is why I say we believe, and we pretty much believe, that this is a potential cure. Obviously, because NVCoV2 is a novel agent, we are going to have to do phase 1 and /2A clinical trials with NVCoV2 itself first, and then enter NVCoV2R into phase 2 clinical trials. So that is simply regulatory mechanisms. We cannot help that. But you can see that the drug development has been very rapid and it has been highly effective. I have not seen this level of efficacies in any of the other drug developments. That does not mean that they don't exist. It simply means that I have not doing deep research into these fields. I'm busy with working on these two drugs and taking them to the clinic. So again, in this study of the infection, also we saw significant safety. There was no general organ toxicity with our drugs. Remdesivir did show certain toxicity type of indications at that level, even at that level. And lung histopathology showed that NVCoV2 and NVCoV2R suppressed AD plaque formation quite substantially. So we have completed the GLP safety toxicology studies of NVCoV2. As I was saying, we have to take that one into clinical trials first. So in that one, because of its novel drug, we had to enter the GLP safety toxicology studies. Those were completed around January, I believe, and we got the final quality control results and reports in August. So we are ready with that. We saw no evidence of adverse effects. The neuropulmonary safety pharmacology studies were conducted in rats, and they showed that even at 100 mg per kg, there was no respiratory function affectation. GLP cardiovascular function studies were done in monkeys, NHP monkeys, and that is primate, non-human primates. And IV infusion up to 50 mg per kg did not show any toxicological effects or cardiac rhythm or any morphology. Typically, that's the level these drugs are studied in these animal studies, in GLP studies. So that is where we stopped at. But non-GLP safety toxicology studies we conducted at much higher levels as well. The non-GLP safety toxicology studies were done for both NVCoV2 and NVCoV2R in rats. Rats dosed at up to 560 mg per kg and a total of 3.4 grams per kg dose, which is huge. NVCoV2 showed no side effects. Rats dosed at up to 309 mg per kg body weight on days 6 days for a total of about 1.9 grams per kg dose of NVCoV2R showed no side effects. Now imagine this is carrying 1/10 of that is remdesivir. If you give remdesivir at the same amount to the rats on the same schedule, you get tremendous side effects. So we are having substantial positive benefits of encapsulating remdesivir in NVCoV2R. No evidence of any adverse side reactions was observed. NVCoV2R and NVCoV2R and vehicle groups, they all tolerated the compounds similarly. Note that remdesivir is not mentioned there. The body fluids and fecal analysis showed no significant differences. Histopathological examination showed no changes. So no changes in organ weights or histology also. So these are very, very safe compounds, and we have not reached the maximum tolerable dose yet in that study. We did another subsequent study in which we did determine the maximum tolerable dose. We are compiling the results as of right now, so I can't present those yet. But those results are ready, and that is the baseline for being able to conduct, design clinical trials for phase 1. So we are all set for all those things.
Hey,
now I'll go to
Anil. Yeah. I wanna give you time for maybe like a question or two.
Great.
So if you want to do like a quick summary, I know it doesn't look like you're quite done with your slides, but if you want to give like a quick summary, we can hop over for a question or two after.
Yeah, I'm not going to go through all the slides. So
okay.
I'm going to go through only a couple of them. So I want to go through the novel platform technology, what we are doing. So what we do is we make ligands that look like the cell surface receptor, small chemicals. So this is 3 steps of what typical standard scientific research people go through. They usually will take the receptor portion, soluble portion of the receptor alone. Then they will take the binding portion of the peptide from that. Then they will start trying to do binding studies, trying to develop the technology for being able to come up with small chemicals. Eventually, about 15, 20 years later, they come up with the small chemicals. We start by developing the small chemicals, and we do that in a matter of months, 3 months or so in this situation. So I just wanted to point that out, that
Sure.
how quickly we develop these things. And once we make that, that is the recognition site on our polymeric micelle for the virus. So the virus is going to bind to our micelles in preference to the cell, binding to the cells, because the density of the recognition sites is very high. And then our micelle goes to work, like I showed in the prior slide. The mechanism of SARS-CoV-2 drugs is orthogonal to most drugs except antibodies. Antibodies bind to viruses, but before already talked about them being highly specific, and because of that, variants defeat them pretty readily. We are in a good financial position, 20.5 million cash in hand as of June 30th, end of year, reporting year. I'm writing the 10K right now, so it will be published on October 15th. Yeah, so these numbers are officially considered unaudited. Cash expenditure rate is about 2.2 million per quarter. It will go up when we go into engage into clinical trials, and we are really, really striving to get into clinical trials right now. So that's where we are at. Market cap has been hit very badly, and also we did not get the uptick of the market cap that happened with all the companies that were working in this field, the coronavirus field, for various reasons. We were always shy about presenting our results before we had validated those results and things like that. So even now we are doing the same thing. We are validating our results first before we talk about them. So comparable market caps of comparable companies are already reached hundreds of millions, and once they hit a clinical milestone, they have gone into billions of dollars. So as you can see, there is a huge breathing gap for the market cap in our case. So so that's basically forms the investment thesis for the company. It's a platform technology. It's the only technology that we know that completely controls the total life cycle of non-persistent viruses, like in NVCoV2R. We have multiple drug programs that will keep on coming, keep on giving. And we have our own cGMP manufacturing facility to push these programs forward rapidly. And market cap I already talked about. So I will stop my presentation at this point. This is the slide where we have shown that the NVCoV2 type polymeric micelles completely dismantle viruses in electron micrography studies.
Anil, I love that you gave us more. I love that you gave us more perspective on like the science. That's not something that we get with all of these execs that are presenting, and it's cool to really see, you know, some of the images behind the actual science. And I just had a one quick question related to that. So I understood the, you know, binding part, how it surrounds the virus. What happens to the cell after it's basically sealed off?
So basically, that is a good word to use. But in this slide that is in front of you, you see that it is not truly sealed off. It's already actually in the slide, in the top left corner, you see the white area. That is where the lipid micelle is. And everything starts streaming out from the virus particle. It seems to destroy at least some kinds of virus particles. So
okay, gotcha.
After that, it becomes food to the immune system and clearance systems in the body of foreign particle clearance systems, phagocytosis and things like that. We do not really know all the details that happen at that point, but I believe that that would also aid generation of antibodies against the particular virus strain that the patient was affected with.
Okay, gotcha. And then a quick question here from Drew. Drew's asking for any expected time frame for a next clinical trial. Can you speak to that at all?
I can speak to that. We have been saying that we are ready for getting into clinical trials since December. It has been a challenging time frame because more than 300 clinical trials were started. Altogether, 1,500 clinical trials are going on.
Wow.
Vaccines and different kinds of drugs included. So most of the sites were saturated. It's very difficult to get into those, very difficult to get through especially the US FDA regulatory screening until you are associated with NIH or something, which we are not. You know.
Sure.
So we are looking at opportunities outside of the country, and we are making pretty good headways there. As soon as we have something concrete, I'll be able to talk about it.
Gotcha. Okay. Well, it seems like a very important technology. So definitely wishing you the best of luck within the U.S. and maybe outside of the U.S. Thanks for joining us today, Anil Dewan. He is president and chair of NanoViricides. It's ticker NNVC on the NYSE American. Have a good day, Anil. Thank you.
Have a good day. Thank you for inviting us, and good luck to all the people in the audience. Don't get sick. Even though I say things about vaccines, please do take your vaccine doses. That's the only, other than masks, that is the only approach we have right now.
Love the message, Anil. Thank you for saying
Thank
that.
you.
Wise words of wisdom to conclude your presentation here. Great.
Thank
All
you.
right. On to the next one, ladies and gentlemen. But first, we're gonna do our first Slido poll of the day. Here's the Slido dance. I bet Aaron can get me some better music than the music that I just made right there. I'm sorry, ladies and gentlemen, you had to go through that. But let's go to our first Slido poll. I will share my screen in just one sec. I'm doing the magic behind the scenes here, if you can't tell. And share screen. Got it. I should do that every time, right? Like throw it up there. All right. So QR code, super quick review here. I'll probably review it a couple more times throughout the day, but you have a QR code on your screen here. Scan that QR code on your phone throughout the day. And if you pop over to Spencer's track, the other track that's going on, same thing will be happening over there. So you can participate on either one. Scan the QR code on your phone. While we're given the event today, I'll be asking a few questions. And at the end of the day, for participating, you'll see the questions. They're not necessarily, don't tell anybody, they're not necessarily a right or a wrong. You just have to participate, and you get entered into a contest to win a year subscription for Benzinga Pro. If you don't know what Benzinga Pro is, I'm a little upset with you right now, but I'm sure I'll get over it one day. Go check it out, pro.benzinga.com. It is our premier trading and investing news and service platform. There is a news feed. There is a Squawk service. That's probably our favorite feature. There is a movers tool. There's a calendar tool. There is a ton of, you can track a watch list. You can get sound alerts. When a news item hits for a stock that you have on your watch list, you hear the sound or you get a little desktop notification, and you can see a piece of news that just broke on a stock that you're watching or you're already invested in. This is Benzinga Pro. This is, I said it a bunch yesterday, this is the thing that I'm working on most of the day when I'm working at Benzinga, when I'm building at Benzinga. I'm not doing this thing all the time. A lot of times I'm behind the scenes tracking the news, getting you fast news items. And again, the winner of today's Slido contest will get a 1-year subscription for Benzinga Pro. It's like $1,000 value. You want to win. You definitely want to win. Let's go with the first question here. That was a lot of preamble, but it's cool. You guys are cool. You guys are cool with it. Who are you excited to hear from today? And I can do a little thing. Let's see. I can hide the results. So the results that are already up there aren't like influencing your decision. Who are you excited to hear from today? PDS Biotech, we already heard from them. Quipt, we already heard from them. Fortress Bio, that's ticker, I believe, FBIO. Biotricity, TCON Pharmaceuticals, or Hoth Therapeutics, or we left a little space for other. And if you have an other, if you fill out an other, please go to the chat in the YouTube and drop in the ticker of the other company that you're excited to hear from today. And there are, I want to say, 10 questions that we have. We'll go through a couple here real quick. We'll go through one more here. What sectors are you bullish on? Healthcare, energy, financials, utilities. And I'm going to leave the results up here. As we start getting results in, we'll see stuff changing up there. Of course, people are going to answer healthcare. Oh, look at that one at the bottom. There's a crypto. And we had a little fun here with our Slido polls. I'll be popping in with our Slido polls throughout the rest of the day, and we'll get to have a little more fun. Let's see the emojis out there, chat. Let's hit the smash the like button. You don't just hit the like button. You smash the like button. All right. I think that we are ready. I'm going to stop my screen share. Oh, thank you, Aaron Thomas. Or maybe that was Nicole. Thank you. And I'm going to intro our next presenter here. We have from G Medical Innovations, it's ticker GMVD. We have the president and CEO, Yakov Geva. Yakov, are you out there? There he is. How are you this morning, sir?
Great, thanks.
We are very glad to have you. I will let you take it away. We want to hear what G Medical is about.
I'm happy to tell you what is G Medical all about.
Great. Have at it, sir.
And happy to be your guest on the show. So we'll start with G Medical, which was established in 2014 with a very clear focus on developing vital signs technologies and monitoring services. Those technologies and services are geared to reduce cost of health and increase quality of life and quality of care. All our technologies are FDA cleared and eventually patented and partially patent pending. Let's go to the next slide. Next slide. Investment highlights. I would say we are in a market which is growing and is probably going to hit around $317 billion in 2027. We are focusing on chronic health conditions where more than 6 out of 10 Americans are suffering. Market demand by doctors for services and monitoring patients, which they need to arrive quick and fast to diagnosis with their patient. We see a significant growth potential direct to consumer, as we have basically partnered with Gatti-Renker, one of the biggest, largest media marketing in the world. On a personal note, we have invested more than $12 million. Next slide. The problem rising, complexity and cost. The problem rising is patient, more chronic and complex diseases due to obesity, due to many reasons, but this is the fact. Providers are short with talents and they cannot really provide the best service. Payers are pushed and pressured to cover costs for better quality of care. Government is increasing and pushed to access more quality of care. Next. Mobile remote monitoring. On the left side, you will see the patch, which is a very unique patch, and we'll talk later. In the middle, you will see the Prisma, which is a very unique product, and we'll talk about it. And on the right-hand side, you will see our monitoring call center that is providing monitoring services to the patients. The patch is providing 14 days of extended holter, which we are paid by private carriers $300 per patient per 14 days. Our auto-detect, auto-send device, which is real-time monitoring, we are paid over $750 by insurance companies for up to 30 days monitoring of the patients. Next slide. Next slide, please. On-demand data and monitoring. The Prisma, which you see on the slide, is FDA cleared and is a diagnostic tool. It is measuring vital signs. The vitals that we are measuring is ECG, oxygen saturation, which is called SpO2, body temperature, heart rate, stress analysis. We are able via Bluetooth to receive glucose test, weight test, blood pressure test. And when I'm mentioning those tests, it is where we are talking about CHF patients, which are heart patients, COPD, which are lung patients, and others. We are running a 24/7 call centers in Austin, Texas, and Memphis, Tennessee. All our services are reimbursed, as I've mentioned, including the Prisma, which you see, which we are receiving $55 per month per patient in perpetuity. Medicare introduced this service for our product, which is a vital sign product, last year. And this is a great breakthrough because it will help us to penetrate institutions that previously was very difficult or impossible. Over the counter, as we have received not only FDA cleared, but we have received also emergency clearance for the device for over-the-counter sales. We will be selling this device for $247 a device for consumers, and we will offer 3 levels of service to those consumers. We will offer 1 level of service, which is via the cloud, for $10 a month. We will offer a second level of service, which is the full 24/7 call center, staffed by certified technicians, for $49 a month. And we will offer the third level of service with a physician for $99 a month, where we can triage a doctor anytime when the patient is requesting it. Next slide, please. Health proactive consumers. What you see here is basically the Prisma, which is, as I mentioned, FDA cleared, which is capable of providing all those measurements, and the call center that is capable of providing a 24/7 service. Down the slide, you will see Gatti Renker, who is, as I mentioned, one of the largest media marketing in the world, that will be market our Prisma via media and social media late 2021 and going into 22. Next slide. Our patent status. We are very proud with the list of patents that we hold and patent pendings for our technologies. Those patents and the patent pending will end is protecting our technologies and technologies that underway in our lab while developing. Those patents will protect those technologies as well. We are Medicare services. We are Medicare certified. Let's go to the next slide. As I mentioned, we are medical certified and we are an independent diagnostic testing facility, which in short, it's an IDTF. We have two subsidiaries, which I mentioned already, in Austin, Texas, and Memphis, Tennessee, and we are very proactive to irregular data, to deliver the data ASAP to the physicians, and if needed, taking a much aggressive approach, like ordering 9/11 for the patient if the patient is in a severe situation. Next slide. Here's a snapshot of our approved 150 plus healthcare insurers that are providing reimbursement to our services. So as you can see, we have Medicare, we have Medicaid, we have United and Aetna and Blue Cross and more. And it's also a snapshot of hospitals that we are in service with them, like the Cleveland Clinic, Heart Center of Arkansas, and others. Next slide. Here is competitor metrics and a growth model. On the left side, you can see the G-patch, which is measuring 6 channels of ECG versus 1 channel of ECG by the competition. This is a major difference because the heart is a 3-dimension, and so by having more channels, we can see more information. We have also received on the G-patch an emergency clearance by the FDA for QT prolongation syndrome, which is a very deadly syndrome. So we are very excited about that. And to the best of my knowledge, G Medical is the only product today that is monitoring it. The Prisma is as I mentioned already, is a unique product, and it's the only product in the market that is doing vital signs. We are looking on the markets which are the reimbursed markets, and we are looking of the millions that are the consumer market. We are looking on the millions that need the patch to be monitored, and we are looking to capitalize on the millions and tens of millions and more that needs the Prisma to be able to monitor themselves. And I can just, give you an example, not only which are the low-hanging fruit, which are the patients, and they for sure need the service, they need a product. I'm talking about the tens of millions of Americans that don't have any insurance, and they need a mean of how to get medical services. So the Prisma can be a very, very substantial bridge for those who are uninsured. Next. Management team, you will be able to read it by yourself, but we have a very experienced management team who are in the business for many years, who understands the telemedicine world, who understands where the medical space is heading, and eventually, as a result of Corona, the world understood that remote medicine, telemedicine, is the solution, because none of us wants to hit the door at an emergency room or waiting in a waiting room with a physician while you can be affected by a patient with corona. Next, board of directors. One of the best I can really say, Dr. Ken Melani, the chairman, who was the CEO of Highmark, one of the largest health insurance companies in the United States. Dr. Shuki Gleitman, who was the chief scientist of the State of Israel. Professor Rothstein, one of the really key management of two largest hospitals, and rest. Next. Our financial overview, 2018, total revenue, 3 million. 2019, 5.5. 2020, we dropped as a result of being caught in Q2, late Q1, Q2, by Corona, and all the doors of hospitals and physicians have closed to our agents, our sales reps, to enter. Not simple, but I mean, the whole industry was caught in the same situation. 21 6 months versus 26 months, we grew by over 45%. We have reduced cost, we have increased our gross profit, and still not at a place where we need to be, and we will be 39% versus minus 27%, half year 21 versus 20. We should be at the 60%, but that will take some time. Next. I want to thank you for allowing me to present G Medical in this event, and I'm open for Q&As.
Awesome. Thank you very much, Yaakov. I have a couple quick questions here. So let's talk about your expansion plans for your sales force in the U.S. Can you talk specifically about any hires over 2021 that you think are really going to be helping you moving forward?
Yeah, we are planning to hire about 25 reps as opposed to very small numbers today. So this will happen this year. By the end of Q4, we will be with 5 regional managers, very qualified, very experienced, more than 20 years in the business, plus 20 to 25 reps.
Awesome. Thank you for answering that. And, at Benzinga, on Benzinga Pro, something that we look at a lot of times, I just was looking actually on our platform a minute ago, is the sell side. And I didn't see that you have any analysts covering. Is there any prospects for the sell side to be in covering G Medical anytime soon? Do you know?
Yeah. Our IPO bank is about to start covering. We are in agreement, signed agreement with another analyst group in the US. So in the very near future, we'll have more than 2 analysts that are covering the company.
Okay, great. Is that going to be in 2021 or is that going to be in 2022? Do you know?
21, probably sometimes mid Q4.
Great.
And eventually 22 will be covered totally.
Okay, awesome. And then I was doing a little bit of research. One more quick question here for you, Yaakov. I was doing a little bit of research and I saw that there was a company, Gunthy Renker. You recently did a partnership. Can you give any more details about the arrangement that you have with Gunthy Renker?
Gunthy Renker, as I mentioned in the presentation, is one of the largest media marketing in the world. We have signed an agreement with them to market our Prisma over the counter and to patients via RPM, and RPM is remote patient monitoring, which is reimbursed on media. It will be on television, infomercial, social media, all over the United States.
Okay, great.
We are very, very excited with them because, I mean, they have proved themselves being where they are.
Great stuff. I'm sure investors, prospective investors out there loving hearing what you're saying here, Yaakov. And we're gonna have to wrap there. Thanks, Don, for joining us. This was G Medical Innovations. The ticker on NASDAQ is GMVD. Thanks so much for joining us, Yaakov. You have a good rest of your day, sir.
Thank you. Thank you very much for having me.
It was a pleasure. Until next time. And we do have our next presentation ready to go. We're gonna get a couple people on screen here. It's always a little fun when we get some more faces and more voices. There's David, there's Louisa. We are gonna be talking Avalon Globocare. It's ticker AVCO. And I'm sure you guys got a presentation. David, just remember to share your screen when you want to get your slides up there.
I already get my slides there.
All right, awesome.
Okay.
I will let you take it away. Oh, David, Aaron is telling me that we do not have your slides, so you will have to do the screen share on your end. There is.
Can you
Should
see
be
it
a little.
now?
I don't see it yet. There should be a little button that says share screen. It is at the bottom. There's a bar along the bottom, and it's right at the bottom there. I'll let you know when I see him.
Can you see it now?
Not yet, no.
Okay, wait a second. Let me just try it again.
I saw something happen backstage there for a sec.
How about now?
Nope, I still don't see him. Sorry, David.
Just go back.
It's very nice to have the slides. Oh, what did you say, David? We want to have the slides, but if we don't have the slides...
Wait. How about now? Can you see it?
I don't think so. No, I don't see him still. Sorry, David.
Weird.
I think we had you good to go backstage.
Yeah, it's just.
I wonder, do you have the slides online somewhere, like on the investor relations page? We might be able to pull them up real quick. Have somebody on our end guide you through. I see something happening backstage, David. This could be good news.
Is that good? My screen says I'm sharing my entire screen now with
There
you.
we go. Yep. David, we did it together. We faced adversity and we fought through it. And I'll let you have the floor.
Excellent teamwork. Thank you so much. So good morning, everyone. My name is David Jin, the president and CEO of Avalon Globocare. It's a great pleasure for me and our CFO, Louisa Ingagiola, to join the Benzinga Healthcare Conference today. Just try to move it. Okay. As a NASDAQ-listed company, we are in full compliance to SEC policies. For details of our Form Ks and Qs filings, please refer to the official SEC website. Avalon Globocare is a clinical stage, vertically integrated biotechnology company. We are dedicated to develop and deliver innovative and transformative cellular technologies and therapeutics in the field of immuno-oncology. In a nutshell, we aim to cure cancer by designing these living drugs called CAR T-cell therapy. Our company was founded in 2016 as an OTCQB company. In less than 2 years, Avalon was successfully uplisted to NASDAQ in December 2018. Our headquarters is located in Freehold Township of New Jersey. Currently, we have approximately 120 full-time employees, including those in our subsidiaries. Our core technology platform mainly involves re-engineering of different types of T cells, which are the workhorses of our immune system, to generate chimeric antigen receptor, or CAR T cell therapy. We are also establishing a FlashCAR, which is an mRNA-based technology platform for cell therapy against cancer. Our technology platforms have potential applications in oncology, inflammation, as well as in regenerative medicine. Today, I will mainly present to you our cellular immuno-oncology program. At Avalon Globocare, we also leverage and extend our technology platforms through strategic partnering and collaboration opportunities with academia and industry. As you can see in the yellow box, currently we are actively engaging in R&D projects with MIT, University of Pittsburgh Medical Center, Boku, Indiana, and Hydropeptide to complement and diversify our core CAR T therapy platform. Through our prolific in-house research with our scientists, together with an active portfolio of academic industry co-development projects, we are capable to broaden and enrich our upstream R&D pipeline and intellectual properties. Our strong proprietary technologies and IPs address multi-billion-dollar unmet cell and gene therapy markets worldwide. 3 months ago, we announced the acquisition of Sanlang Bio, which is currently the largest cell therapy company in northern China. This acquisition will add 15 cell therapy products to our portfolio, most of them already in clinical stage development. This acquisition will also add 16,000 square feet of in-house GMP state-of-the-art facility with large-scale bioprocessing, biomanufacturing, and QC/QA capacities to Avalon. We are very proud to assemble a senior management team with very high experience and also a stellar board of directors, including eminent regulators, Wall Street serial entrepreneurs, and legal experts in the healthcare and biotech sectors, including former Congressman Billy Tuzan and Taffy Troy, who is the former Deputy Director of the United States Human Health Services. Professor Daopei Liu, our scientific founder, who is a legend and pioneer in bone marrow transplant and immune cell therapy in Asia. The Liu Daopei Hospital, founded by Dr. Liu, which is one of the world's largest bone marrow transplant centers and CAR T treatment centers. It's also one of Avalon's major clinical bases. At the bottom, our scientific and clinical advisory board is headed by Robert Langer of MIT. Most of our eminent advisors have contractual agreement with us and are actively engaging with Avalon to construct a top-rated academia industry alliance to accelerate our growth and development. Collectively, this unique integration of professional assets provide Avalon with excellent resources and inroads for efficient implementation and execution of our scientific and clinical programs. Over the last 10 years, CAR T-cell therapy has taken the biotech industry by storm, creating hope that it could usher in a new era of cancer treatment. The middle figure here illustrates a conventional treatment protocol about CAR T therapy. The T cells from peripheral blood of a patient are isolated, then using a disarmed or harmless viral vector to deliver the CAR molecule into the T cells. This CAR molecule carries a so-called molecular GPS system, recognizing the tumor cells as well as the tumor killing activity once it binds to the specific target on cancer cells. Once reinfused back to the body of the patient, these CAR T cells get multiplied and stay in the body as living drugs. These CAR T cells has memory and stay in the body to suppress the recurrence of cancer. It's truly a revolutionary and very powerful tool. Over the last 10 years, CAR T therapy has revolutionized the treatment of B-cell malignancies, including B-cell ALL, non-Hodgkin lymphoma, and multiple myeloma. Since the approval of the first CAR T cell therapeutics in 2017, this field has been experiencing widespread research and exponential increase in R&D, as well as proliferative M&A and IPO activities. This trend has created a robust multi-billion-dollar CAR T market, which is expected to hit $8.5 billion by 2028, with a whopping growth rate of 46%. The middle table at the bottom here shows the 5 US FDA-approved CAR T products available in the market right now. You may notice that these are all the autologous products, meaning these CAR T cells therapies are self-derived from patients' own T cells. They are very expensive to produce as they are manufactured on a patient-to-patient basis. And mostly they are targeting only one antigen, which is CD19 on tumor cells. Scientists, investors, and biodevelopers invariably agree that CAR T provides a revolutionary and powerful tool for blood cancer treatment. However, the current generation of CAR T have faced limitations and challenges as depicted in this slide. These include a high risk of adverse effects and toxicities, known as cytokine release syndrome, as well as neurotoxicity. There's also long biomanufacturing time. Conventionally, it takes at least 14 days. We call it from vein to vein time, and a very high cost. There's also limited tumor antigen target, as you see from the last slide, which is we call the CD19 only, for these first generation of approved CAR T products. The clinical outcome for solid tumor is pretty poor at this point. And again, solid tumor is the lion's share in the oncology field. The autologous approach leads to high cost and manufacturing time, and we need to generate allogeneic, universal, or off-the-shelf approach in order to offer a larger market potential. So for the rest of my talk, I will present the strategies to convince you how Avalon is capable to mitigate these challenges and limitations, developing next generation of better and safer CAR T cell therapy. On this slide, on the left-hand side, the 1904B is one of our lead CAR T candidates with a special design feature of using an MND promoter to drive the expression of CAR. We have completed the first in-human trial in a cohort of 36 patients with relapse and refractory B-cell leukemia, and it shows an over 90% of complete remission rate. And more importantly, it shows greatly reduced adverse effects and toxicities of CRS and depressed neurotoxicity as compared to the anecdotal clinical data from currently available products. We believe we have a very promising candidate here with respect to its superior safety profile. On the right-hand side, NS7 CAR is another lead CAR T therapy candidate targeting CD7 instead of CD19, which is in clinical development stage. This is also a breakthrough of a first-in-class CAR T to treat B-cell malignancies instead of B cells, as all the currently available CAR Ts act on. In our recent first-in-human clinical trials, 8 out of 8 patients, or 100%, achieved complete remission within 1 month after receiving 1 dose of this CAR T product. At Avalon Globocare, we recently established our proprietary Flash CAR platform, which allow us to overcome a significant drawback of currently available CAR T. For this AVA011, it takes only 1 to 2 days of manufacturing time as compared to the conventional 14 days of bioproduction time. We also put in a safety switch in the mRNA construct such that we can shut off the CAR T cells if the patients start to show any adverse effect or toxicity. For our lead candidate in this category, that is the AVA011, we have completed all the preclinical research work and currently in IND enabling stage to generate the clinical grade mRNA-based AVA011 for our upcoming clinical trials in 2022. The holy grail in CAR-T cancer therapy is to develop a universal or off-the-shelf approach for the treatment of solid tumors. At Avalon, we have isolated a superior subset of T cells called the gamma delta T cells. This is a much better immune cell type to fight against solid tumors as compared to the conventional T cells, which are alpha beta subtype. We have overcome a technical barrier in expanding these rare gamma delta T cells, and now we can culture and expand them more than 5,000 folds in the laboratory, reaching the industrial and therapeutic scale of biomanufacturing. Currently, we have generated 10 CAR gamma delta T candidates, some of them already in first-in-human clinical trials against a variety of solid tumors. We believe we have a game-changing pipeline here to provide a universal or off-the-shelf approach for novel therapeutic options for solid tumors using our CAR gamma delta T cells. This is a summary slide to show you we have leveraged our next generation of CAR-T strategies to overcome those major limitations and challenges of the current generation of traditional CAR-T cell therapies. That's really a major differentiating and competitive advantage of Avalon over our competitors. Another level of differentiating factor of Avalon is our demonstrated capability to seamlessly integrate the vertical components in cellular medicine, namely the upstream R&D, the midstream biomanufacturing, and the downstream clinical programs and facilities. By achieving these goals, we position to become future powerhouse in cancer immunotherapy and cellular medicine. This slide shows the timeline of some of our clinical programs with the lead candidates of AVA001 and AVA011, which is the mRNA CAR that I just showed you. With the acquisition of Sandlang Bio, there are more than 300 patients already received one of our 15 CAR-T products in clinical trial settings in 13 prestigious hospitals covering 9 unmet oncologic indications. I'm not going to go through the details here in this list, and please stay tuned with us for more exciting news during the upcoming American Society of Hematology or ASH meeting in December this year. ASTCT, or the American Society of Transplantation and Cellular Therapy, is the world's largest professional organization for the cell tech community. Avalon is very proud to be one of the 25 selected members of their corporate council since 2019. So at Avalon Globocare, we are dedicated to accelerate global development of cellular medicine and therefore creating tremendous values for our shareholders. Now our CFO, Luisa Ingagiola, will present the financial highlights of Avalon.
Yes, thank you very much. Thank you very much, Dr. Jin. I have to say that we are very uniquely positioned as a company in terms of our balance sheet and our cap table. First of all, a little bit of history. We uplisted to NASDAQ in 2018. We then purchased a beautiful headquarters in Freehold, New Jersey. We purchased it for cash for $8 million. And we also have Jefferies as our banker. We have a $50 million shelf filing that has been underwritten by Jefferies for an ATM. And then finally, we have a $20 million line of credit from our chairman, Daniel Liu. The line of credit is not convertible to stock, and it is at 5% simple coupon, which is deferred for 3 years. So the crux of all that basically means that unlike other biotech companies that are consistently out there raising large amounts of capital and diluting investors, we have not had to do that. From 2020 and 2021, we did not go out and do any capital raises except for through our ATM and through our chairman. And we're very excited about that. In addition to that, our cash burn is around $400,000 a month, which is extremely low. This is prior to our acquisition. The reason it's so low is that Dr. Jen has brilliantly constructed all of our partnerships so that we share in the cost. For example, with MIT and UPenn, we're all sharing in the cost of bringing forward our technology, which drives down our burn rate. So we're very excited about that. Once we close the Senlang acquisition, it will include $30 million from a major healthcare institutional investor, and that will be invested directly into Senlang, the private company, but not into Avalon stock. It is convertible into AVCO at $1.20 a share. However, there's blockers in it that they can only do 10% a month. So again, we're trying to very carefully protect our cap table. And that's all the financial highlights that I have for you, Dr. Jin.
Thank you, Louisa. So that concludes our presentation, and we welcome any questions from the stage.
Awesome. Well, thank you very much, David and Louisa. A couple maybe here. Any plans? We had a question here from our chat. Any plans to expand hospital partnerships into 2022?
Definitely. In fact, we are a U.S. company, and our first candidate in clinical trial was AVA001 at the Ludape Hospital in China. And starting next year, Q1, when our AVA011 is ready, we will start a parallel or multinational clinical trials with this mRNA CAR T being tested clinically in the US as well as in China. And so as you may see from one of our slides regarding the 15 CAR T products, already over 13 hospitals in Asia participating in this. So we believe.
Did we lose?
Yeah, I think we lost
Dr. Jin. Oh, there he is.
There
I heard some. That's a bummer right at the end there. That was a really good question too.
That was a great question.
I think he got most of the answer out. All right, I think we're gonna have to cut David off there, unfortunately. But Louisa, thanks a ton for joining. This was Avalon Globocare. It's ticker AVCO on the NASDAQ. Thanks so much for joining, you two.
Yeah, thank you very much. We appreciate it. Thank you.
All right, have a good day.
Bye, everyone. Thank you. Bye-bye.
Really good question out there from Nate, and I think you got enough of an answer there, Nate. Let me know if you got enough of an answer, but appreciate the good question. Next up, we have this is a good ticker we got here. It is Nurosene. The ticker on Canadian Exchange is MEND. And we have the CEO here, Ranj Bath. Ranj, are you out there? There he is.
I'm here. Can you hear me? Brent, good to meet you.
Yeah, I can hear you. You sound good. You look good. How's your day going?
It's good. It's early here in LA. But I'm ready to go.
I saw you taking a sip of something backstage. You have some tea or some coffee?
In my special mug. I usually give that to my house guests.
I am interested to hear about Nurosene, and how did you get such a good ticker? That's like a really good ticker, MEND.
Well, I think we got lucky on the CSC, and we've been trying to get it as we come into the US market, but
Sure.
the OTC ticker is MNNDF. But yeah, great ticker. So I'm very happy with that, and we're here to help MEND and help people with brain health. So it's perfect segue.
I was waiting to hear how the ticker played into your business, and let's learn more about Nurosene here. And I see you have a presentation, so I will let you take it away.
Share my screen. So you see my screen.
I can see your screen, but it's me and you, and now I see it. There we go. All right, good to go. Take it away.
Thanks. All right. So I may hop around a couple of different slides. I know we haven't got too long, and there's always too much to go through. So Nurosene. This is a little bit slow. So Neurosene's really been built to help people understand the importance of brain health as it relates to their overall health, and really help them lead longer, happier lives. And we've been I'll get into the weeds of this, but we're using technological advancements in AI machine learning to collect data and analyze data and really give people an understanding of what preventative measures that they can take as it relates to their brain health, as that relates into preventative measures for mental health, and then ultimately providing opportunities to create precision solutions. So that's the foundation of what we're building at Nurosene. A little bit on myself, other than the bright green shirt. So I've been in the States for about 20 years. I moved with Intel. I was actually managing strategic relations for Intel in Northern Europe, and I moved back in 2000 to head office, and was at Intel for about 7-8 years. In various senior marketing roles across mobile, service provider, being the telcos, and digital home. And then I went on and started my own digital entertainment venture, which was backed by some of the largest VCs in the Valley. If you know these guys, people like Draper Fisher Jurvetson, Trident Capital, the big hedge fund D. Shaw. And one of the most strategic investors in my company was this guy named Jimmy Iovine. And if you guys have seen the Defiant Ones on HBO, this is the guy who founded and was the president of Interscope Records, but then went on to found Beats by Dre and Beats Music, which has now become Apple Music. So when I got fully invested in my company, and Jimmy asked me to come and help on the Beats Music side, so I moved across as VP of Corporate Strategy at Beats, and saw them through the what was a $3.2 billion acquisition by Apple, and as I mentioned, Beats Music became Apple Music, what you see today. I've also been an avid investor over the course of a number of years, being an early stage or one of the very first investors into companies like ClassPass, that's in the health and fitness space, and Bulletproof, with Dave Asprey founding Bulletproof Coffee, so I was one of the first investors there. Subsequent to Beats, I've gone on and taken a couple of CMO roles in tech and in finance. And then last year, I was really, taking a break and wanting to cut my teeth in something that I felt really good about, and the company was doing something meaningful and creating some kind of impact. And that's when I met with Dan Duffy. One of the investors in Nurosene actually put me in touch with Dan, who's the founder in 2019. And when I met with Dan, it was I thought it was incredible, what he wants to do in terms of democratizing solutions in the mental health space and making them available to everybody. And then met with some of the other investors and the capital markets folks who are really helping to drive the company, and decided to join the company back in the last year when the company was doing a CEO search. So really amazing to be here. So with that, just talking a bit more about Daniel Gallucci, an incredible neurologist or functional neurologist based out of Toronto. Actually, just over the last year, has been in Nova Scotia just during the course of the pandemic. But Dan's been really, working, in clinic, studying the brain for, decades, and really studying neurodegeneration, and putting hundreds of people through brain scanners, and really, getting to the root of the problem. And that's kind of really what we're building at Nurosene, is helping people understand the importance of brain health and getting to the root of that problem, and now making those tools accessible to everyone in daily habit routines that all of us should be doing. We've also attracted a formidable group of advisors to Nurosene. I'll just talk about a couple of these folks. On our board sits Kirsten Stewart. Kirsten was on the executive committee for the World Economic Forum. Actually launched Twitter's first office in Canada, and led the Canadian Broadcasting Corporation. Raja Rajamanar, probably our most recent, he's the Global Chief Marketing Officer of MasterCard, but also the president of the healthcare division, which is in itself a $400 million industry inside of MasterCard. So amazing to have Raja. And actually just announced yesterday, he was Forbes just announced him as one of the 4 top CMOs in the world. So that was amazing. And he's a personal mentor to me as well. Dr. Luca Pani, our Chief Medical Advisor, was the Director General of the Italian Medicines Agency for 5 years. And that's the equivalent of the FDA, but a lot more, in Europe's a lot more stringent than the FDA. And he was responsible for helping get, various digital therapy companies like Achilles Health cleared by the FDA. He's currently a professor in Miami as a professor of pharmacology and psychiatry. Dr. Newton Howard, arguably one of the top neuroscientists in the country, found the Mind Machine project at MIT, is working on the next wave of mental health solutions, involving things like neurostimulation, deep brain stimulation, involving chips that inserted up your nasal passage into layer 6 of the brain, have been shown to be effective against ALS and Parkinson's. Amazing individual. And then just we've got the former head of e-commerce from Apple, who's now the chief digital officer for T-Mobile, and Peter Carlisle, who manages people like Simone Biles and Michael Phelps, who's actually joined our advisory council. And it's been incredible to work with Michael, who was saying, I wish I had things like Nurosene or the Neuro app when I was going through my professional career, because when it came to support in this space, I was just asked to Google my local therapist when I had the best physical fitness and dietitians in the world. So amazing to have people like this involved in the company. So a couple of quick milestones. So you've seen the tick already. We're listed on the Canadian Stock Exchange on June the 9th. We just got our DTC eligibility this Monday, so now it opens up a lot of doors for people to be able to trade in the US. We've raised a total of 11.9 million today. So I'll talk about some of the other things as we go through the presentation. You guys should have this presentation. So just to frame things, mental health is a big problem right now. Coming out of pandemic, there's a big mental health crisis. And they're saying that the next pandemic is a mental health pandemic, and we're not really seeing all of the effects of this right now. 10% of the world's population is affected in some shape or form right now, and between 75 and 85% of people are really getting help. So really, there's a big concern. And what we're building at Nurosene is really a better understanding of how this is going to really be affecting people. And to get to the root of that problem is we have to start looking at the data. And it's not enough to just look at data and when you go into a clinic or seeing your primary care physician. We have to start looking at data that's kind of surrounding people all the time, exogenous factors, genomic factors. So really what we've done is we've made sure that the central core of what we're doing is this smart brain for your health. And we have been working with a company called Netramark, and Netramark's traditionally been working with the pharmaceutical industry on de-risking clinical trials and helping save millions of dollars as people go into developing pharmaceutical drugs and in that drug discovery lifecycle. And I'll talk a bit more about Netramark, but Netramark's a company that was so important that we've decided to acquire the company. And this, we've been going through diligence and audits, and it should all be closed by next week. So it's a $15 million acquisition. And I want to get into the weeds of why that's so important, to basically be able to leverage actionable insights from even small amounts of data. So what we're developing here is we're designing the future of healthcare through all of this data that we're monitoring around people. And that's what's incredible about Nurosene. And we're just at the infancy. So really, as I mentioned, we're really getting deeper to understand human behavior, looking at this holistic approach, in that community, how things are affecting people on a personal level, looking at trends in subpopulations. And that's where this power of Netra AI combined with all of the work that Daniel, our founder, has been doing in clinic is helping to the future of healthcare. So I talked a bit about collecting data, all these exogenous factors. As we start collecting, the fact, all this like passive data that we're collecting from all the wearable devices that we're seeing, heart rate variability, sleep tracking, resting heart rate, genomics factors, so many people doing 23andMe and just to understand more about them. All of this data needs to be fed constantly into a machine to understand you on a constant basis, rather than just waiting for what's really been the crude measures over the last 60 years of let me go and see a physician one time and then making an assessment on me just at that one point in time. This is all about making sure that we're collecting everything that's going on around us all of the time, and then making a constant assessment and creating something actionable and creating something preventative. And that's what we're creating at the beginnings of Nurosene. So the core of what we do is this methodology that's been designed by our founder. It's called the 4x4 method, and it's four main factors that are important for brain health. And we're starting with brain health because the brain controls so many different things. And the core of what we do is this 4x4 model, and it's movement, nutrition, recovery, and brain. Brain being the exercises that we put you through to ensure that your brain is healthy, and they're targeting four main areas of the human body. The things that the most important when it comes to brain health is making sure you've got blood flow to the brain, and it's been proven by years of research that the best way to get blood flow to your brain is through various eye movement exercises, and that's typically what a neurologist would put you through, in clinic, with all sorts of assessments, and then personalize a program accordingly. It's important to get glucose and sugar to the brain. It's important to eat from the sea, activate your neurological networks, and that's what we've designed inside the Neuro app. And the Neuro app is launched. The first version of this has been launched into the App Store. And it's really been designed around mental performance, getting that mental advantage. There's habit forming activities that all of us actually should be doing on a daily basis. And, coming out of pandemic, a lot of people have been, understand the importance of making sure that we're, have an exercise regimen, that we're eating healthily. But now we need to get people to understand that it's really important to take care of this thing as well, because it's controlling so many different things. So there's activities, there's blogs, journals, there's a lot of educational content that's already been so well received by our audience, and then we're showing progress and accountability through what we call a Neuro Power Score. A massive market opportunity. I think people have seen the stats already. A $300 billion market opportunity in mobile health alone, which is why we're seeing a lot of companies in the digital therapy space grow up. There's meditation apps, there's online therapeutics. So a massive market opportunity. Where we're going with the app, though, is really, really interesting. While we're trying to keep people accountable, and assess people constantly through digital assessments, and I'm going to talk about some of the other assessments, we're really tracking people against that 4x4, how, to keep people accountable. But Neuro starts becoming smart, or Neuro becomes aware, where it's starting to, from the data that you feed Neuro, it starts recognizing areas of concern. It starts explaining why these things are important, and then modifying your program accordingly. So over a period of time, each individual's program becomes highly, highly personalized from the data it's being fed and from the way that it's tracking. And this is the beginning of where we're really going with the Neuro app. And what I'm most excited about is this, because we're building this right now. The app is going to evolve into this very, very fast, and I'm talking about in the matter of months. So early next year, we're going to have things like Apple Health and Google Fit integration. So now we're collecting those exogenous factors. We're testing facial capture right now. We can start detecting, minute eye movements, inflammation areas of face, head tracking as well. We're using the gyroscope of the phone for balance. So all of the kinds of things that in clinics, someone like Dan, trained functional neurologist, can make an assessment and actually make, early intervention by detecting things like anxiety. We're going to be able to collect all of this data and be able to make that similar kind of assessment just from the power of this device that we've got in our hands. And I'm actually really excited by an announcement that Apple just put out last week. I'm not sure if people have seen that, but Apple just announced that they're doing a study using the powers and capabilities of the iPhone and the camera phone and the wearable devices. And they're doing a study with UCLA to see how this affects cognitive decline and depression. So this has put a real big validation on everything that we're doing in designing this, what we're calling the future of healthcare. And Apple's probably a couple of years away from this to just begin these studies. We're already getting into doing institutional studies. All of these things that you're seeing on here, we're testing the background, and we'll be live in months, not years. And that's what I'm most excited about. This is where we're going with the app. So even deeper than what Apple's doing, we're looking at this as well. So as I mentioned, Neuro becomes even more smarter the more data we start feeding it. So people are taking DNA tests. We're going to suck that data in. We're already testing that. We're already looking at white labeled blood biomarker panels that have been designed around brain health to test various kind of like vitamin levels and other things that are important for brain health. And you'll be able to order those, from inside the app. And we get even more intelligence. If you've got an MRI, brain imaging is so important, and you can push that inside the app as well. And we're scraping away other patient data as well. So all of this is on our horizon, and we're working towards these first couple of measures again in a matter of months. So we're accelerating on this pathway really, really fast. I'm really excited about it. And the more data that we feed the machine, the more exciting it becomes. And I'm gonna just jump ahead around the most important thing here is this AI that we've really ingested in is looking at really questions that we haven't even asked the machine. So there's traditional AI which is really focused around supervised learning. You can say in a study, okay, to the AI, like, we're going to do a study around depression, go away and study these groups. But what we're actually doing with this unsupervised learning, and not many AIs are actually doing it in this way. We're saying, we don't even know the disease that we're looking at right now, and it automatically starts clustering. It's, I know our AI experts, they use this analogy of, a lot of studies could use studies against cats and dogs, and saying, hey, here's cats and here's dogs, and go away and do a study. What we're saying here is like, these might be cats, these might be dogs, but ultimately we might find cows, right? So I'm not sure if that explains it, but this is actually starting to uncover new opportunities for new developments of new drugs based on new indications that weren't actually seen before. And that's what's really interesting from all the data that we're collecting and all the data that we're feeding the machine. And this is the really exciting piece about Netramark coming into the fold. I mentioned that they're already looking into de-risking drug trials, but to look into new indications, as defined by massive databases of molecules and disease interactions, this is where the Netra AI technology is amazing. The more data we feed it, it can start identifying new opportunities for even Nurosene to start taking IP ownership in drug development, in nutraceutical supplement development, into other digital therapeutics, maybe even in psychedelics. It can look into resurrecting failed clinical trials because perhaps the right subpopulations weren't selected or the right placebo groups weren't selected. It's incredible the opportunities we can go down, and taking that IP ownership stake all the way through to clinical trial is something that Nurosene's already looking into, and we've already identified some opportunities in this space as well. So that's Netramark, and so it's really interesting of where we're going with this, and this is why I've actually recently updated this slide of where do we play. We're so far away from. Sometimes we get bucketed in the space of, oh, you're in the space of mental wellness and mental health. And maybe you're the same as, Headspace and Calm and some of these, these online digital therapeutic solutions. We're so far away from them right now. We're closer to what is happening in this world of, excuse me, these personalized medical centers like Forward and Next Health, which I'm seeing everywhere in LA and San Francisco, and every mall seems to have them right now. You can go into these centers. You can biohack as much as you want. Right? You can get your blood test done every week if you want. They put you through allergy tests and all those kinds of things. And then they put you on a precision pathway. And this is what we're really building at Nurosene. The more data we feed the machine, the more data that's collected through the Neuro app, we're coming up with amazing actionable outcomes. And that's what's really interesting. People wanting more information about themselves to really understand how they can prevent potential conditions. So that's kind of like where I see us positioning more. So I'm going to just jump back one slide here. In terms of monetization,
Brent, I want to jump in here real quick. Yeah. If you want to go for like a couple questions, like one or two questions here, we're gonna have to do it now, unfortunately. So if you want to do like a quick summary, if you just want to jump right into the questions,
the last slide
go for it. Go for it.
Let me just something here. So yeah, so really in summary, we use nice technological advancements in AI machine learning. We're accelerating the path of drug discovery. We'll take an IP ownership stake. There will be revenue streams from there. There'll be revenue streams from corporate programs, SaaS-based models in the pro performance area that we're building. But from a timing perspective, there's no better time. People are turning attention to mental health. There's destigmatization, and we're ideally positioned for the future of healthcare.
This is really exciting stuff. I want to keep listening. Obviously, as you hinted at, mental health has been more important over the last year. And I just want to compliment you real quick. I love that you gave us the story. One thing that we love to provide investors, potential investors at Benzinga is the story stocks. And I love hearing a little bit behind the story. The one quick question that I just wanted to ask you, and you might have hinted at it during your presentation, after mental health, what's next for the app, for the platform?
Oh, yeah. So now you're asking my grand vision. So look at all the data we're collecting. We're collecting so much information about you that we become the brain for your overall health. And that's my grand vision. It's like, wow. Why would you go to Google or WebMD to ask a question when Neuro is going to hold all this information eventually about your medical history, your genomics data? Why not ask Neuro? Because it can tell you exactly how you might be affected by something. And that's the grand vision.
Love it, man. This stuff's really excited. I'm really excited to see where you can go with the company. Ranj Bath, he's CEO of Nurosene. It is on the Canadian Exchange. MEND is the ticker, and the OTC ticker is MNNDF. Ranj, it's been great speaking with you. I hope you have a good rest of your day.
Thanks, Brent.
The show will continue. Here we go. We're jumping right into it. Next presenter is from a company called Fortress Bio. It's ticker FBIO. And I'm going to be welcoming on here the chairman, Lindsay Rosenwald. Lindsay, how are you?
Hey, Brent, I'm good. How are you?
I am doing excellent today. And guess what? We're going to be speaking with you a little bit later today. You're going to be on a panel. Is that correct?
That is correct. That is correct.
Coming up in just like an hour or so, right?
Yeah, I think a little bit less.
Cool. Well, we will see you again then. I'll let you have the floor to tell us a little bit about Fortress.
Great. Thank you. Thanks so much. And thanks, everybody, for attending. I'm the CEO and chairman of Fortress. I will obviously be making forward-looking statements. Feel free to review our SEC filings for complete financial statements and risk factors. As you can see, we've been very busy building value for shareholders. The Fortress Biotech business model is an incredibly scalable model. It has the goal of consistently increasing shareholder value through the constant acquisition of approved FDA products and development stage programs. As you can see from this slide, we have a large and growing portfolio. You need to think of it this way. Each time we acquire a drug or a drug candidate, we have increased shareholder value and decreased risk through extreme diversification. First, I'm going to give you a brief overview of our product portfolio. Then on subsequent slides, I'll go into detail on how we accomplished this strategy and then go through some key products. And then, if we have time, explain how we execute this on a very scalable model. Since we only have 20 minutes or so, it's a lot to cram in, so I'll try to hit mostly the highlights. On the commercial side, you can see we have 7 FDA-approved products in the dermatology space that we currently market. We ended the second quarter at a $60 million annualized run rate for the quarter. Regarding our future late-stage programs, we will be filing a rolling new drug application in the fourth quarter and anticipate filing a biologics license application next year. We have meaningful economic interest in 4 registration trials ongoing and potentially as many as 8 in the next several months. We have 18 clinical programs in 24 clinical trials. We have over 20 full and part-time search and evaluate professionals that look for these opportunities. We have over a dozen partner companies. Those companies finance the majority of our pipeline. And in return for the asset or assets that we've provided those companies, we receive stock, future royalties, and future equity. So in a little bit, we'll go through some of these products and product candidates. It's important to remember that each one of these candidates or products will create value for us through one or more of each of the direct product revenue, royalties, equity value, and monetization. Why don't we go to the next slide? We have a much different model for a life sciences company. We focus on creating shareholder value in an aggressive fashion while potentially reducing risk through diversification. We work in a universe where there are hundreds of billions of dollars of life science research and development conducted annually all over the world. Whether it's governments, whether it's universities, whether it's big or small companies, domestic or foreign, there are many, many research programs and marketed pharmaceutical products that fit in the category that we look for. Most importantly, it's a surprisingly inefficient market to find excellent FDA-approved and development stage opportunities. Our business is to aggressively find these opportunities and create shareholder value from them. We don't want to miss out on any great opportunity, whether it is an already approved product or a clinical stage product or even an earlier product development opportunity. Based on our ability to execute, we create shareholder value in 4 ways. First, we have direct product sales. Currently, we do so through our dermatology business, and we certainly expect other therapeutic categories in the future to create product revenues. We also expect to receive product royalties from most of our partner companies. Thirdly, we receive equity dividends equal to about 2.5% of the fully diluted number of shares outstanding in most of our partner companies. This is very important for two main reasons. It greatly incentivizes us to continuously add value to these companies rather than look to exit them. You'll see later how for Mustang Bio, we have put in multiple late stage and early stage programs. This greatly increases the potential future value of the company for all shareholders, including Fortress and Fortress shareholders. Monetizations, we expect in the next months and years ahead to see potential large revenue streams from monetization of some of these partner companies, as well as assets, as well as sales of fully owned drugs and drug candidates. For example, you'll see in a few minutes that yesterday we announced that Fortress expects next week to receive approximately $64.5 million from AstraZeneca for our share of a partner company, which is a value driven from just one of our over 25 development stage programs. A fourth potential future equity stream includes the sale of priority review vouchers. Our rare disease portfolio could potentially qualify for and hopefully realize value for as many as 3 priority review vouchers. Those vouchers recently have sold for about $100 million each. Next slide. How do we accomplish so much in such a short period of time? People, focus, and execution. Our very large and growing search and evaluate team, 22 and growing currently, look all over the world for FDA-approved products, products approved in other countries, and development stage programs from all over the world. Remember, hundreds of billions of dollars a year globally are spent on R&D. It's a really, really inefficient market. These opportunities can be from other companies, foreign or domestic, as I said. They can come from academic centers, government labs, etc. We're not going to find them at JP Morgan or other large medical conferences and industry conferences. You'll find us there, but there we're looking to partner our own programs or sell our own programs. Our search and evaluate team just looks where others don't. The criteria for acquiring development stage programs is primarily drug candidates that have been in human trials, that have good proof of concept, or drug candidates where there is proof of concept. A proof of concept human clinical trial would not be expensive or time consuming. Once we acquire a program that requires further development, that opportunity will either go into one of our partner companies, into a new partner company, or directly into the Fortress pipeline. And remember, all this is built to increase shareholder value while reducing risk through extreme diversification. Each of these opportunities will somehow fit into one or more of these 4 categories that I mentioned in the previous slide. Why don't we go to the next slide? What's special about the Fortress Search and Evaluate model? What we look for is different than most others in the industry. Most other companies that in-license development stage programs focus on either a therapeutic class or target, like cystic fibrosis, muscular dystrophy. There's a lot of them, unfortunately. Or they'll focus on mechanisms of action, such as antibodies, cell therapies, gene therapy. It's a really long list of types of medicines. In other words, they'll be looking for drug candidates that fit into their specific technological or therapeutic expertise. At Fortress, we look for opportunities that are clinical stage with proof of concept in humans, or as I said, proof of concept can be developed inexpensively. They should address an unmet medical need or be superior to current standard of care. They should be available at a small fraction of the net present value. We cannot and will not pay up for an opportunity in such an inefficient market. We need to find opportunities that others miss. And that's it. That's our criteria. These are very hard to find, but if you look hard enough, you find them. If you have a trained and motivated search and evaluate team that's heavily supported with capital and motivated professionals behind them, focusing like a laser beam on creating that specific deal flow and only that deal flow, you would be surprised how many opportunities we find. Next slide. This is a really important slide. We believe that our relationships with our partner companies must be mutually beneficial. The Fortress Life Science ecosystem is built to create shareholder value through identifying great drugs and great drug candidates. When we find an opportunity, if it fits in with a partner company and they want it, they can acquire it. This will increase the intrinsic value of the partner company, which in turn will increase the intrinsic value and risk of Fortress. Remember, our continuing interest in these companies, usually through equity and royalties, keeps all interests aligned. Next slide. Here's an example of our product revenue business, our dermatology business. Journey Medical Corp is our commercial derm business, made up largely from the commercial team of the highly successful Petros Pharmaceuticals, which was sold years ago to Bausch Health for a little over $2.5 billion. Journey was formed from that commercial team, including a lot of our sales force of about 60 or so drug reps. Primarily through the Fortress business development team, Journey has acquired 11 pharmaceutical products. They are currently marketing 7 of those products. We have had record revenues every year since we launched our first product in 2016. Even though the pandemic negatively affected everyone in our industry, we still had record revenues in 2020. Our second year revenues this year exceeded 15 million, which gives us a $60 million a year run rate at that point, and it was a record quarter for us. We're extremely excited about the potential for Journey Medical. Next slide. I'm running out of time, so I'm going to try to go a little bit faster. CAEL-101 is a monoclonal antibody for the treatment of amyloidosis. It's a rare and routinely fatal disease caused by amyloid deposits in the vital organs, including the heart. It's had very, very promising data. We were able to acquire worldwide rights on extraordinarily reasonable terms several years ago. We were then able to set up a partner company called Calum Biosciences. We put together a great management team and found a large biotech partner, Alexion Pharmaceuticals. Subsequently, Alexion was acquired by AstraZeneca very recently. Yesterday, AstraZeneca and Calum announced that the intent to exercise early the AstraZeneca right to acquire Calum would be done next week. The total compensation can be up to $500 million, including $150 million upfront. We anticipate the closing of the transaction next week. Fortress will receive 43% of all payments, including $64.5 million upfront, and potentially up to a total of $215 million over the next several years. Let's go to the next slide. Here's another great example of a drug our business development team was able to find that's creating, we believe, a lot of value for Fortress. This is a drug candidate. We will initiate the filing of our new drug application this year. It's for a rare pediatric disease called Menkes disease. It's found in newborns who lack a gene that codes for the protein that allows copper to be absorbed from the GI tract and from there into the circulation and from there into the central nervous system. It doesn't sound important, but it is. It's necessary for normal neurologic brain growth. These children are born normally, but immediately develop rapidly irreversible neurologic damage and die at a very young age. Our drug candidate has shown remarkable efficacy in clinical trials. In the pivotal trial, the drug showed a median survival of newborns over 14 years versus historical control of a little bit over 1.5 years. We've partnered with a company, Sentinel Therapeutics. They will commercialize the product for us. We will receive a total of up to $275 million in milestones, including $20 million through the NDA new drug approval. We've already received $8 million in payments. We will receive tiered royalties peaking at 25% of sales over $100 million. We'll also keep 100% of any proceeds from a priority review voucher if one is issued. Recently, they have sold for a little bit over $100 million. The next slide, please. Cosibelimab is our proprietary checkpoint antibody. It's an anti-PD-L1. It's currently finishing its first pivotal trial. We expect top-line data this year. It's believed to be a $1 billion market opportunity for the company in the variety of potential indications we will pursue. We compare favorably with 2 drugs already on the market for cutaneous squamous cell carcinoma, our first drug launch. We expect to launch a pivotal trial in non-small cell lung cancer shortly. That is a very, very large market indication. Current drugs in the category sell, I believe, in excess of $12 billion a year in that category. It's a really exciting drug. And again, we expect to file for approval next year. Next slide. MB107 and 207 are drugs for what's called newborn bubble boy disease. These are children that are born without functioning immune systems. It's a single gene defect. Basically, we license out of the NIH and St. Jude Medical Center 2 drugs. One delivers the gene for newborn babies with bubble boy, and the other delivers the same gene to children that were previously transplanted but whose transplants are failing. Both drug candidates have shown remarkable efficacy. We anticipate starting our pivotal phase 2 trial shortly, and we believe both drugs should qualify for a priority review voucher. We'll do one more slide and then stop. MB106 is our autologous anti-CD20 for CD20 CAR T for non-Hodgkin's lymphoma and chronic lymphocytic leukemia. To date, we've seen excellent efficacy and a very tolerable side effect and toxicity profile. Our most recent data showed a 93% objective response rate with a 67% complete response rate. In follicular lymphoma patients, the ORR and CR rates were 91 and 82% respectively. We believe it may have a better product profile compared to the existing anti-CD9 CAR Ts that are on the market, and that is a very sizable market. We anticipate starting enrollment in our multi-center pivotal trial shortly, which will lead to a pivotal trial sometime next year. I could go on for an hour. I don't think I will. We started late, and we don't want to, go later than we should. Appreciate your time. Again, the Fortress business model. We don't do any of our own early research. There's hundreds of billions a year worth of research all over the world. We look for that research and we acquire the ones we think makes the most sense. And we think it's a great and extremely scalable business model. Thank you very much for your time.
Appreciate your time, Lindsay, and appreciate you keeping an eye on the clock there. And if you don't mind, we do have time for like a question or two if you're okay with that.
Sure.
So this is probably like, picking your favorite kid sort of thing, but you just went over maybe 5 or 6 candidates at the end there. What are, your top 2 that your management team is most excited about right now?
So Calum, the amyloidosis drug was one. Again, next week we're selling it to AstraZeneca for, up to $500 million. We get 43% of that. Obviously, we'll still be interested to see the drug finish its development and get to market and sell well.
Certainly.
And then, I did mention Cosibelimab, which is our PD-L1 checkpoint inhibitor, which will file hopefully for approval next year. That's going into a market that could be worth over $40 billion a year. So a small fraction of that market could be extremely meaningful to us. And the last one I would say is Cyprium. CYPR 101. That's our ultra rare disease, Menkes disease drug product that will launch the rolling new drug application this year. Hope to have approval next year. Very, very serious unmet medical need, a terrible disease. And part of the great thing in this business is creating medicine or buying medicines and finishing the development of those medicines that really impact human health.
Certainly, that's why everyone's here today. I hope and really appreciate you coming on today, Lindsay Rosenwald. He's chairman of Fortress Bio. It's ticker FBIO. And again, we'll see you in maybe a little less than an hour here for our panel, Lindsay.
Great. Brent, thank you. And thanks everybody for listening.
All right. Have a good day, sir. We'll see you later.
You too.
All right. Next up, we're ready to go with the next one, ladies and gentlemen. We have EyePoint Pharmaceuticals. It is ticker EYPT. And we have the CEO, who is about to come on here in a second, Nancy Lurker. Nancy, are you out there? Hi.
Can you see me? Because I'm sharing my screen, but I can't see you guys. So
I can see you. You look great. You sound great. I'll let you have the floor.
Okay, great. Can you just remind me just quickly how much time I have to, because I want to try to stay on time here.
Yeah, I really appreciate that. So you're gonna have till, if you want to do some questions, probably about 12:20.
All right, very good. Okay. All right. Well, thank you, everyone. Nice to meet you. And I'm very excited to talk with you about EyePoint Pharmaceuticals. We are an ophthalmology company. And let's see, how come this, there we go. We are public. So go to our website for all of our forward-looking statements. So who are we? We have a very exciting drug delivery technology. So we are a technology-based company. We've got a very compelling pipeline that's focused on retinal diseases. That's diseases in the back of the eye. Our lead compound or drug is EYP-1901. That is our most exciting asset in our pipeline that we have today. It's a potential twice a year anti-VEGF, and I'll explain some of these terms to your listeners, and that's called it's a tyrosine kinase inhibitor. There are different types of anti-VEGF. This one is a tyrosine kinase inhibitor, and it's for the treatment of wet macular edema. We're in a phase 1 trial, and I'll talk a little bit about wet AMD in a moment as well. We also have YUTIQ 50, which is another potential twice yearly treatment for posterior uveitis, a very serious inflammation of the back of the eye. It's actually the leading cause of blindness, and unfortunately it strikes people in their middle age, and it's lifelong. And then we continue to look at other molecules that we can put in our fantastic drug delivery technology, Durasert. Now, why is Durasert so great? Because we've used it in 4 FDA-approved drugs. And by the way, it's very hard to find and be able to deliver drugs into the eye safely. Why is that? It's a very small space, as you can imagine. It's a very complex organ. And so to be able to deliver drugs to the eye is hard work. But the other thing about Durasert is that it has what we call sustained zero-order kinetics. What does that mean? That means that it actually releases out a tiny microdose every single day consistently over however long we want that to last. And it's, again, local delivery in the eye. Most drugs deliver what's called first-order kinetics. They give a big burst, and then it drops down, and then you got to give another big burst when you re-inject, and then it drops down. That's typically not very healthy for the eye. Zero-order kinetics provides this very constant, stable release of therapeutics into the eye over however long we want. And we also, because of these 4 FDA-approved products, it's been administered now using this Durasert technology to over 70,000 patients across our 4 drugs. And we continue to have a remarkable safety profile. Now, EyePoint, of those 4 drugs, we actually are commercializing 2 products. One is YUTIQ, and YUTIQ is, as I mentioned, is a 3-year implant for posterior uveitis. In the pipeline is YUTIQ 50, which is in every 6 months. We just want a different dosing option for physicians. And then we also have DEXYCU. DEXYCU is for the prevention of inflammation following eye surgery. We did announce very solid Q2 product revenues in the second quarter, particularly as the COVID-19 restrictions eased up. All right, so off to the right here is a picture of Durasert. You can see it just slowly dissolves into the eye in the back. And by the way, it's administered with a very simple in-office administration. No surgeries, nothing complicated. And I'm going to talk to you a little bit about the various options and why we're so excited about this. So you can see on the left here, that's actually a picture of YUTIQ. That's our 3 years. So believe it or not, that little tiny implant lasts in the eye for 3 years, and it just keeps eluting its drug. In this case, for YUTIQ, it's a steroid, consistently over 3 years. It's really beautiful technology. And as I mentioned, we've got 4 FDA-approved products. 3 of them actually were out-licensed, and one of them we commercialize ourselves. That's YUTIQ. It's a single in-office. Intravitreal means in the white part, the back part of the eye, and provides this continuous stable release. The 4 approved drugs are YUTIQ, which we commercialize, Iluvien, which was out licensed to our partner Alimera. They commercialize this for diabetic macular edema. Retisert, which has been on the market since 2005, that's commercialized by Bosch. And that is also for uveitis. And then no longer available on the market, but the first real true eye drug delivery technology that we invented, Vitrasert. And that was for a very serious eye disease associated with AIDS and HIV. But because of the phenomenal treatment of those diseases, it's really no longer needed. So we've had 4 drugs on the market using this really fantastic drug delivery technology. And then, as I mentioned, in the pipeline is EYP-1901, which I'm going to spend more time on, YUTIQ 50, which is our once every 6-month drug for posterior segment uveitis, and then we have a few other undisclosed preclinical programs. So let's talk about how we are building on this really exciting and proven ocular drug delivery platform. So in our phase 1, we have EYP-1901. That's a bioerodible form of Durasert with this anti-VEGF, and again, I will explain that in a moment, called vorolanib. We are currently in the clinic for wet AMD, an extremely large disease, mostly of people who get older. And then we plan, if we have positive results, we plan to go into the clinic for other retinal eye diseases with the same drug and same active ingredient, vorolanib, for diabetic retinopathy and retinal vein occlusion. Now, all 3 of these diseases are large and growing, and they typically strike people when they're, call it probably sometime, typically I'd say in the 60s and older. They're progressive. They cause blindness, and they're lifelong. There's no cure. And I'll talk a little bit more about how they're treated today and why we're excited about 1901. And then in really phase 3 is our YUTIQ 50. Because it's going to get filed as a supplemental new drug application to our YUTIQ 3-year, which is already approved. We just have to do a small 60-patient study. We'll file that as an sNDA, and it should get approval within 10 months, assuming the data is efficacious and safe. All right, let's talk now about why we are so excited about 1901. Our goal is to really transform the treatment of these devastating eye diseases that unfortunately affect millions and millions of patients in the US and in Europe and other countries. So the need is that these wet AMD patients often lose their vision despite very efficacious anti-VEGF therapies. Why is that? Because the current treatments today require that you get frequent, every month or every other month, injections into the back of your eye. And it's not so much the eye injections. I mean, nobody wants to get their eye poked with a needle every month or every other month for the rest of your life, but it's also having to get to the doctor's office for the rest of your life. So that often involves caregivers, and it's hard. So we know from the data that these patients keep losing their eyesight. And that's where 1901 comes in. It's a potential twice yearly in-office injection using our beautiful Durasert technology that slowly releases the anti-VEGF vorolanib so that these patients don't have to come in as often. All right. Now, this is some retrospective, we call it backward looking, is all the claims over several years. It was a large study done by an institution looking at, you can see here, over 3,350 ranibizumab, which is called Lucentis, or 4,300 aflibercept, which is Eylea. You may recognize those names. Those are blockbuster drugs treating this disease. And you can see that over time, despite getting these really effective anti-VEGF treatments, their vision keeps going down. And again, it's because these patients just can't come in every month or every other month for the rest of their lives. So the solution is 1901, bioerodible formulation of Durasert using this very potent vorolanib for an anti-VEGF. It is specifically called a tyrosine kinase inhibitor, which means it's a small molecule. It was studied, and one of the reasons we like vorolanib, it was actually studied as oral therapy for wet AMD through human trials, phase 2, and had a very strong clinical signal in treating wet AMD with no significant ocular side effects. However, like a lot of orally delivered TKIs, it did have hepatotoxicity. And so as a result, they stopped the study. But delivered directly into the eye, they actually, and we have announced already, we have seen no significant side effects delivered directly to the eye. It does block all 3, we call them isoforms of VEGF. And let me just quickly explain what is VEGF. It actually stands for vascular endothelial growth factor. And there's 3 receptors. And if you just show right here, here's the receptors in the eye. And today what happens is there's a number of these VEGFs, and they float around in the eye, actually throughout the body. And what they do is they cause a growth of microcapillaries from your blood vessels. Now, generally you need that because microcapillaries age and you need to keep growing new, tiny, tiny blood vessels. Where it runs amok is in tumor cells, cancer, because they put out microcapillaries to feed the tumor. So these drugs are used often. In fact, they're a standard of care in treating many cancers because it shuts off the blood supply. If you cut off the VEGF, they can't get the enzyme that they need to grow those microcapillaries and feed the tumor. It's not too dissimilar from in the eye. These eye diseases like wet AMD, they tend to have a proliferation of these microcapillaries. It feeds on the VEGF and grows the microcapillaries, which leak tiny blood vessels, blood cells, fluid, and that's what clouds the vision and causes you to lose your eyesight. Now, the current therapies actually act like scavengers of that VEGF in the eye. They gobble it up. The problem is they quickly lose their potency. They get washed out of the eye, and then you end up with the VEGF just getting produced again by these receptors, which are inside the eye. What vorolanib does is we go in and vorolanib blocks the receptor. So the receptor actually stops producing the VEGF. And so we believe we actually have a better potential mechanism of action than the old large molecules on the market today. We have to prove that out, but we'll see. So we block a broader range of VEGF than the current large molecule VEGF, scavenger VEGF molecules. And so we remain excited about our potential here. This gets a little into chemistry, but you want to make sure that when you block the receptor, your binding affinity is very tight. And sunitinib is a well-known tyrosine kinase inhibitor, an anti-VEGF, and we have the same potency as sunitinib, which is a good thing. This basically says we have very good potency binding those receptors and causing them to shut down producing VEGF. Now, if you look at the oral studies that were done, this is the activity I mentioned. This is delivered as a pill. And what you see is in the eye, you want to make sure that these patients are being able to maintain their vision and that they're not losing vision. And so if they do lose their vision, they're going to get a rescue injection of the current standard of care. And so you can see on the patients who had placebo, depending on the dose, you can see that you saw a placebo had 9 patients, had to have 33 patients in the placebo group had to have 9 rescue injections. And again, this was blinded. You can see as the dose went up of vorolanib, the number of median rescue injections went down. So that meant the drug was working because you were maintaining your vision, you weren't increasing your fluid, and as a result, you didn't need these rescue injections. So this basically said the drug's working in the eye. So based on that, we actually in-licensed the drug and we put it into our Durasert technology so we could deliver it locally. In the animal model, we saw no toxicity. And so as a result from that, we moved into our phase 1 study. So our phase 1 study is ongoing. It's 17 patients. After the patients get enrolled, they do get 1 injection of an anti-VEGF. In this case, we used Eylea, which is the leading anti-VEGF on the market today. And then it's open label, meaning that it's not blinded. And we had 3 doses we're testing: a low dose, 0.4 milligrams, a mid dose, which is 2 milligrams, and a high dose, which is 3 milligrams. We plan to read out the data at 6 months efficacy, and we're going to be looking, obviously, safety. Safety is always the criteria for your phase 1 studies. And then we'll also look at vision. Was it able to be maintained? These were all prior treated patients, by the way. They're not naive, meaning they've never been treated before. So you want to maintain the vision that they were getting on the current anti-VEGF therapies, and you don't want it to deteriorate. And so we'll be looking at that, as well as an increase in fluids and whether or not they got rescue medications. Now, the good news is our enrollment, we announced, was complete May 25th. We have been accepted for a late breaker presentation at the November 13th, that's this year, American Association of Ophthalmology meeting, and we're very excited to be able to announce these results to you. Now, we also have announced positive 30-day safety results across all dose cohorts. And generally with these locally delivered back of the eye diseases, typically you see side effects emerge within 30 days. Not in all cases, but in a lot of cases. So it's a good signal that at 30 days, we had no significant safety results. We also announced for the low dose cohort safety out through 6 months. And again, we showed no significant ocular safety issues, whether they were ocular, local to the eye, or systemic. No intraocular inflammation, a very common side effect you see with a lot of drugs or implants delivered. No adverse events related to BCVA, that means reduction in vision. No elevation in eye pressure, which can lead to glaucoma. No events of endophthalmitis, which is a very blinding inflammation of the eye. Retinal detachment, that can also cause you to go blind, or migration of the implant into the anterior chamber. And by the way, one of our competitors, unfortunately, they had that problem of migration. They had little microspheres that burst everywhere, and they showed migration all over into the eye, and they had to shut the program down, unfortunately. But again, we've got a very safe track record with Duracert. And then, as I said, the three subjects in cohort 1 have already been followed for a minimum of 6 months with no reported SAEs. So we're quite excited about the upcoming event at AAO and are looking forward to sharing those important data with you. We do have $127 million in cash as of June 30th. We announced with our 2 products on the market, we had $8.7 million in net product revenues in the second quarter of this year, which was a 136% increase over the prior year. $15.5 million total in the first half of 2021, which is an 85% increase over last year. And we expect our cash to last us through the end of 2022, assuming that we do a phase 2B study in several of these indications. It'll last longer, obviously, if we don't do those studies. But we'll wait till we get the results out, and then we will be ready to go, if the results are positive, into these additional and very exciting clinical programs. So thank you very much, and I'm happy to take any questions that you might have.
Thank you very much, Nancy. I just want to say that, this information that you're giving our audience, it's extremely humbling. Our audience is here today to get some investment ideas, but we got to remember that what we're doing here is, there's very serious treatments that need to be done for humans out there to give them relief. And, a company like EyePoint certainly seems like they're seeking that. So just wanted to, commend you on that.
Thank you. Yeah, it is important. It's something that really motivates a lot of our employees, knowing that.
I'm sure. A couple quick questions.
Sure.
A question that I had, can the patient, after the Duracert is in the eyeball, can the patient feel the implant or the drug being delivered?
No, they can't. They can't feel it. They can't see it. It's so tiny that what it does, it falls. It's extremely small, and so it really falls to the bottom of we call it the vitreous, the bottom of the eye. And we've had no incidences of it.
Wow.
They certainly can't feel it. And second of all, I think out of the 70,000 patients, we might have had 1 or 2 who, when they lay down, like in bed, they might be able to see it, but nobody's ever said that it bothers them. So yeah, it's really a remarkable drug.
And then a question from Frank in our chat. He's asking, can your device deliver larger molecules such as an antibody?
Yeah, very good question, Frank. And the answer, unfortunately, is no. We only can deliver these small molecules. So that's what we're looking at. We've got a number of interesting things. We just in-licensed a Tie2 activator. Tie2 is another pathway that goes after these serious retinal diseases. Mm-hmm. So potentially what we could do is actually combine this Tie2 activator with our tyrosine kinase inhibitor, and you go after this disease with 2 mechanisms of action. But that Tie2 is a small molecule as well.
Gotcha. And the Duracert, any prospects that you can hint at for further partnering?
Well, as I said, so 2 things. One, we do expect we're going to go into diabetic retinopathy and retinal vein occlusion if the DAVIO, our phase 1 study on wet AMD, reports out positive. And then, as I mentioned, we'll get working right away on this Tie2 activator. Mm-hmm. And there are any number of partnerships we can make with our technology. We get calls all the time from companies who want to partner with us, mm-hmm. and we continue to evaluate those. But I want to stress as I tell my team, our focus right now is on this fantastic opportunity we have right in front of us with EYP-1901. So that's really where most of our focus is going to remain.
Excellent. Excellent. Well, I want to wish you good luck at the beginning of November when you're going to be given that data readout.
Yep. Appreciate it. Thanks a lot.
It was a pleasure having you today. Nancy Lurker, she's CEO of EyePoint Pharmaceuticals. It's ticker EYPT on the NASDAQ. Again, thank you, Nancy.
You're welcome. Thanks a lot.
Awesome. Let's keep it rolling, ladies and gentlemen. We have coming up next, it is Biotricity. It's ticker BTCY, and we have the company's CEO here. There he is, Waqas Al-Sadiq. How are you doing?
Not too bad. How are you doing?
I am doing good today. We're having a good day so far. Let's keep it going, and I'll let you take it away with your presentation. Tell us a little about Biotricity.
Thank you, Brent. And thanks, everybody, for joining. One of the things, standard clause for forward-looking statements, part of what we're going to be discussing today is the vision of the company and what we view as forward-looking statements, and whatever is talked about is our expectations and what we believe we can achieve, but investors should do their own due diligence. And with that, I'd like to kick it off with talking about the vision behind Biotricity and what we're excited about today. Of course, our business has been doing really well through the pandemic, and as things open up, we're very excited with the recent financing, which will be used to expand our sales force and our operations. But Biotricity, when we started the company, we really looked at remote patient monitoring and saw the gaps. And the gap that we saw in the cardiac landscape was that patients get diagnostics for sure, but diagnostics, and of course I'm going to oversimplify this, was really stuck between two types of solutions. One was passive recording, or the Holter market, Holter monitoring, and where you put a device on a patient, you send them home, you peel it off, you mail it back, and 3 weeks later you get a report, which is a great space for low-risk patients, but for high-risk patients, it just doesn't work because the patient can have an adverse event while they're wearing the device. And so the next market is a market called mobile cardiac telemetry, which is real-time cardiac monitoring, where you put a device onto a patient, you send them home, you come back, and then of course you clean up the device and you put it onto the next patient. But when the device is on the patient, it's analyzing their data, their ECG, in real time. When it detects an issue, it transmits it to a call center and can deal with emergency response. And so we saw an unmet need in this space, in the mobile cardiac telemetry space, with limited players and older technology. But what we saw was a broader problem in remote patient monitoring, which is that these cardiac patients, once they've been diagnosed, what happens to them? They end up getting a prescription, or they end up getting a pacemaker or defibrillator installed, or some sort of surgical intervention. And then they go into disease management. So every 6 months, they're going in and out of the doctor's office with no real tool and no real insight for the physician as to what is going on with them. And so at Biotricity, our vision was, okay, from cardiac diagnostics, how do we follow this patient through this care journey? And that's what we're going to talk about today. We're going to talk about our vision and how we started in the diagnostic space, and that is our core competency, and how we are really trying to follow this patient, that once they've been diagnosed on our product, how do we continue to gain and glean insights and help them along their cardiac journey? Because as we all know, there is no cure to cardiac disease. And so today we've got our BioFlux product, which is that real-time diagnostic solution. It's insurance reimbursable, Medicare, Medicaid, private insurance reimbursable. We took a very unique approach to the business. Traditionally, diagnostics are done as an outsourced service. And so what that means is, if I come to you and you're my cardiologist, you'll say, hey, Waqas, I don't know what's going on, but you're high risk. So you'll give me a prescription and you'll send me across the street to get the test done. And then I'll come back with the report, and the doctor, the hospital, they bill insurance. They make $25 to read the report, but they don't get any of the diagnostic revenue, which is $850. And so our model is really to provide all the technology to the doctors and the hospitals so that they can use it, they can bill insurance, they collect the revenue, and Biotricity has a technology as a service model. And that has led to an incredible stickiness in our business. We have very high retention rate, 100% reorder rate. We did triple-digit growth last year. We'll do triple-digit growth this year and the year after. And that is just in our base product, right? Just we're talking about BioFlux here, and of course I'll talk about what our plan and our vision is beyond BioFlux. And so we expect that growth rate to continue. But what we're really excited about now is really executing on our product roadmap, which will enable vertical growth because we can sell within our existing customers and increase our total addressable market. And while we're doing that, deploy the capital that we just brought into sales expansion. So we've got this horizontal growth, hire more sales reps, go from 23 states where we are today and into 50 states, and continue while we're doing that to execute on our product roadmap. And so to take a little bit of a step back, why cardiac disease? Why is it important? Well, cardiac disease is the #1 killer in every country in the world. It's the #1 expense in terms of healthcare dollars spent, pretty much in every country in the world, and especially in the United States. 30 million Americans have received a diagnosis, but 70 million are at risk. So you're talking about a massive population. And as we get older, as the baby boomer generation ages, all of these people are at higher risk. And the problem is because it is a chronic condition, physicians with diagnostics and the tools that they have available, they don't have an integrated approach. They have pieces of the puzzle, right? They're collecting data from these different systems. Nothing is communicating, and they're collecting, diagnostic data. Then they do a procedure. Then they go back. They collect information from the patient again. So it's very ad hoc. And so what patients and physicians both need is really this concept of connected monitoring and long-term collection of data that reduces patient risk, but also physician liability and speeds up diagnosis. And so if we take a look at the cardiac journey of a patient, how does that work, right? So a patient comes in, and diagnostics is really where everything begins, and that's where we operate with our core product. So patient comes in, they're referred to a cardiologist, they're put on a diagnostic device. That diagnostic device collects all their electrical activity, determines. It gives a summary data to the physician. The physician will look at all of that data that comes from that device and make a treatment decision. And that treatment decision is going to be, a prescription or an interventional procedure. And then what ends up happening, which is very key here, is that this patient then goes in and out of this doctor's office for management and follow-up. And anytime something goes outside of base, or the patient's complaining of a symptom, or something has changed, or the doctor sees something in their 6-month checkup, they go back to diagnostics. So everything rotates back to diagnostics. So our vision at Biotricity was, of course, we're not in the interventional procedure game. How do we follow the patient through this journey? How do we collect data points along this map? How do we touch all of these rings? And how do we develop solutions that can touch more than just a diagnostic ring? And so when you talk about that, and what does that mean for us as a company? Well, BioFlux today is high-end diagnostics, and that's $1 billion market, and that's our total addressable market. We have the BioTray product, which is with the FDA. We expect clearance hopefully within 60 days, and launch that product thereafter. That product is for the passive recording market. I mentioned it earlier, which is you put a device on a patient, you send them home, but there's no communication. You get the report later. That's a $2 billion market. So that we can sell into our existing network across 23 states. And that increases our total addressable market from $1 billion to $3 billion. And then when you start going into disease management, you need a number of items together, right? You need telemedicine, you need personal medical device kits, you need complex cardiac management. But when you deliver all of those together, you accelerate your total addressable market from $3 billion to $50 billion. And that is really what we're doing with our product portfolio and our plans here at Biotricity. So, why is this important? Why would we look at this right now? Well, first of all, the trends are going this way, right? If we believe anything at Biotricity, and I'm sure many of you believe the same thing, is what does the future of healthcare look like? And the future of healthcare is not going to be passive. It's going to be active, real-time data collection. Patients are going to consume devices and healthcare in the comfort of their home or on the go, and then they're going to go into the hospital for procedural work. And this is where global remote patient monitoring is going to go from 23 billion to 117 billion. And CMS, Medicare, insurance, everybody's pushing this. So our vision and what we're doing at Biotricity directly aligns with what insurance and what CMS and what the direction is. And that's what is very exciting, because when you have a market and you're executing on a product portfolio, and that market itself is growing, your opportunity grows with it. And so today we talk about our current BioFlux product, and as this is the beginning of the funnel, right? So diagnostics, what we did was the traditional solution today when it comes to diagnostics for real-time high-end diagnostics is outsourced, as I mentioned. So patient walks in, get a prescription, go across the street. The doctor in the hospital makes $25, and the service provider who owns the technology, because they don't sell tech, they generate the bulk of the revenue, which is $850. So we came in and we said, well, we don't want to be a clinical service company. We don't want to service the patient. What we want to do is we want to service the hospital, the healthcare organizations, the providers. And we want to do a technology as a service model because we are a tech company. At our core, we are a tech company, and we want to execute on our vision of following this patient through their care journey. And so we don't want to get caught up in servicing patients. So we change the business model and we provide all the technology to the hospital and the physician. This allows them to bill. So they bill $850 and they pay Biotricity approximately $250 every time they use the product. And so if they use that product once a month and the device has a 2-year lifetime, so put it on patient A, come back, clean it up, put it on patient B, that device generates us approximately $7,000 in revenue over 2 years. And so that's a very high margin. But more importantly, it also creates a great revenue stream for the healthcare provider because they're going from making $25 to $500. So we're actually enabling ourselves having a very sticky recurring revenue model, but we're also creating the same thing for the provider, which is why we have such great retention rate and very high reorder rate. And what's also important to note is as you get more data, you get better diagnostics, because the biggest issue with these patients is you're worried they're going to have a stroke, a heart attack. So you don't want to send them home on a passive device for a long period of time. So you end up doing shorter studies. Well, shorter studies don't catch intermittent issues because by nature they're intermittent. They're not going to show up in 1 day or 2 days. So the longer you monitor, the more likely you are to figure out what's going on with the patient. So faster diagnosis, less risk to the patient. But while they're on that device, if it's not connected, there's a risk. And that's why connected real-time monitors have better diagnostic timing. And so if we kind of just take a step back and look at our solution, it's not just the device, it's the device plus a third-party monitoring center that gets the data from the device when the device detects an anomaly and determines if there is an emergency or not, and all clinically accurate data, which is summarized. So all the summary data, the full data is provided to the physician. Them and their staff can look at that data and determine what they want to make. So our solution encompasses the device, the cloud, all of our software. It's an ecosystem that is then delivered. And that, to summarize, is for the BioFlux, what we've done is, cheaper, better, faster on the technology side, right? So we've got the smallest, most accurate device in the market. And we've layered that with the business model that creates a recurring revenue and a profit center for the physician or the health or the hospital, and also creates a recurring revenue for Biotricity. And so today, that success has led us to, we're in 23 states. I mean, when we were coming into COVID, I believe we were in 7 or 8 states. So we've gone and accelerated our growth through the pandemic, which is, I think, a testament to the team that we have at Biotricity, but also our technology. We've grown every quarter since inception. Our FDA clearance was in early 2018. We spent 2018 figuring out insurance and then launched the product in 2019 and have grown ever since. And now we've got this pipeline of products, which I spoke about, and I'll talk to again in just a minute, which is designed to go deeper into these accounts. So now that we have, over 300 centers, over 1,000 cardiologists, we can sell our existing solutions within that customer base. So then we get a network effect. We layer vertical growth with horizontal growth, which will continue the pace of growth that the company has had thus far. And so to talk about some of the products that we, and going back to what I talked about earlier, which was this idea of increasing our total addressable market. So the BioTray product is to deal with the passive monitoring market. So the biggest problem with the passive monitoring market is that it takes 3 weeks to get a report or 2 weeks to get a report. And so we solved that with the BioTray. It is still a passive recorder, but it's got connectivity so that when the study is done, it dumps all the data. So you can turn the report around, not 2 weeks after the patient has worn it, but within a day or two. And so that is going to lead to better diagnosis. And again, this is a product that we can sell into our existing clinic network. Then we announced this product, which is called the BioKit, which really is a set of personal medical devices, because many of these cardiac patients have other issues, right? They have respiration issues, they have sleep apnea issues, they have hypertension. So we've combined blood pressure cuffs, pulse oximeter, all of this technology, and it all connects into our ecosystem so that once a patient has been diagnosed, you can give them this kit, send them home. And so when they're coming back for that follow-up visit, they're not coming with no data, so that the doctor has no idea what's going on with that patient. So these devices collect all of that data and centralize it and summarize it. And more importantly, all of this is reimbursable and billable by the doctor. So it'll give them a report. That doctor can then bill for that report. The patient feels comforted because they've got these tools that they've never had before inside of their home to keep track and manage themselves. And all of this is facilitated by a combination of our HIPAA compliant virtual clinic platform combined with these personal medical devices that the patients will have. And all of it, again, insurance reimbursable and creating a revenue stream for the doctor and for us. Similarly, what we've noticed is that cardiac patients have virtually nothing. It's very unfortunate to manage their care. You've got the Apple Watches, but 30 seconds of ECG data collection on an Apple Watch or Samsung Watch or smartwatch doesn't do anything because these patients have intermittent issues, which is why when you try to diagnose them, you put them on a monitor for up to 30 days of continuous recording. Diabetics have a glucometer. They can check their blood sugar and they can manage. And so what we did was to solve this problem is we took all of our BioFlux medical grade technology, simplified it, and dropped it into a consumer product. So this is not going to be FDA cleared. It's totally consumer, direct to consumer. And it's really designed for these patients to self-manage their lifestyle. And what that means is that they can collect continuous ECG data or heart rhythm data for a long period of time so that they can see the range. They can see their heart rate ranges continuously, the highs and the lows, and they can wear this and it passively does it. They don't have to do anything. They don't have to engage with it. And again, if they feel something, they can mark a diary note saying, hey, I felt a symptom at this time. So that when they go back to the doctor and they're talking to the doctor, they can actually go back and say, hey, I felt, an issue back 2 weeks ago on September this date, and they can actually see their heart rate range on that day. And this again integrates with that BioKit, the blood pressure cuff and the pulse oximeter. And again, all of this is designed to create this cohesive view to support the patient once they go into that, if you recall the rings that I showed earlier, into this idea of management and follow-up once the patient has been diagnosed. So it's the last two rings of that cardiac journey. I get diagnosed, I get some medical intervention done, and then I go into coaching, follow-up, and disease management. And this combined with the BioKit will deliver that. And so to kind of talk about, because a lot of people talk about, biotricity in the context of other companies and cardiac companies and whatnot. And we like to tell investors, what is our vision? Because we don't view ourselves as a cardiac diagnostic company. We view ourselves more like what Livongo did for diabetes, which was develop a glucometer, put patients into a disease management program. That is what we're trying to do for cardiac. So we are the cardiac version of Livongo, and that is our vision. We think Livongo did a fantastic execution in the diabetes space, and we want and our vision from inception has been to do the same thing in the cardiac space. And we talked a lot about things that we're doing. A lot of that is a testament to the team. We think of the company as three different groups that work symbiotically together, which is management, sales, and operations, all with lots of experience, all with multiple companies under their belt. And with that, I'll turn it over to any questions that somebody may have.
Yeah, I appreciate it, Quads. We have a couple questions here. Question from our audience. Nalika was asking about the tray. Will the device be user-friendly for caregivers so to detect an emergency in their patient? Kind of like asking about the alerting for the monitoring system.
Yeah, so excellent question. So that monitor is designed to collect and store data and periodically upload it. So for sure, caregivers can see the data from the BioTray and look at it, but it does not have the same alert functionality as the BioFlux. The BioFlux will automatically alert, but the BioTray is really meant for the passive recording market. Our plan is to, as battery technology gets better and cellular chips get smaller, the BioTray form factor will also have that capability, but not at first launch.
Gotcha. Thank you for asking that. And we're going to have to wrap here. Unfortunately, had a couple more questions, but up against the clock. Biotricity, the ticker is BTCY. We had the CEO here, Waqaza Al-Sadiq. Thank you very much for joining, sir. Have a good rest of your day. Really cool stuff, as with most of these presentations here. And what do you know, ladies and gentlemen? We are here at our very first panel. It is called Immuno-Oncology, Harnessing the Human Body's Power to Battle Cancer. And let's welcome back Jason Colbert from Dawson James. There he is. You did a fantastic job moderating a panel yesterday, sir.
Thank you.
And I'll let you have at it. This panel is going to be going for a little while, so let's have some good discussion here with the execs.
Okay, great. Thank you so much. So the topic of today's panel is not COVID as it was yesterday. It is really immune oncology, or harnessing immunology to solve, to heal. That's really interesting because we have gone through a renaissance over the last decade in terms of how we look at treating cancer. And these companies are pioneering that in very different ways. And these companies are all, to me, very, very interesting because we're talking about market caps in the $250 to $500 million range. I'm going to come back to that. And we're going to come back to kind of what these companies do and how we should look at them in the landscape. So with that, I'm just going to go around and let's introduce each CEO. And as we discussed, your name, the name of the company, the ticker symbol, the market cap, and the cash on the balance sheet, and then come back to me. Then we're going to do 5 minutes on each company, and then we're going to go to an interactive Q&A format. So with that, Dr. Bedu-Addo, thank you very much for joining us. Take it away.
Well, thank you very much. I'm President and CEO of PDS Biotechnology, ticker symbol PDSB. PDS Biotechnology is a mid-clinical stage cancer immunotherapy company. The company has a market cap of about 450 million with no debt, and we reported approximately 75 million in cash as of our most recent filing.
Perfect. And next, let's follow up with Greenwich Life Science, recently public company, Snehal Patel. I was looking at Snehal's bio. It is very distinguished, MIT, University of Chicago. Clearly somebody who is well studied. I've been having a lot of dialogue with him over the last day and kind of understanding what Greenwich Life Science does. We'll get a little bit deeper into that. Let me turn it over to you, Snehal.
Thank you, Jason. My name is Snehal Patel. I'm the CEO of Greenwich Life Sciences, ticker GLSI. Our market cap has been between 500 and 600 million in the last few months, and we have 30 million in cash that we're committed towards our upcoming phase 3 clinical trial.
Okay, perfect. And let's turn it over to a company that I cover, CEO I've known for the last 15, 20 years, Dr. Lindsay Rosenwald. Lindsay, congratulations. You had some good news yesterday, and we'll give you a chance to just talk about that good news, but introduce us to who you are and Fortress.
Sure. Lindsay Rosenwald, CEO and president of Fortress Biotech. We have a market cap of about $330 million. We have several publicly traded subsidiaries. Our consolidated cash is about 270 something million. Fortress, without the public companies, is around 78 million as of the end of the second quarter.
Okay, perfect. And so here's a little exercise I did. Now, Lindsay, I did use consolidated cash as the numbers, and I did include the fact that there was a transaction yesterday that, and so I calculated the 68 million, I'm going to call it a non-dilutive capital that will come in. And I looked at the enterprise value. Why? Because I'm an analyst. And what I want to understand is, which of these companies is the cheapest company? And by the way, the worst way to do that is what I'm going to show you, because the numbers don't really tell you the story. You need to understand what the potential of the therapy is, where the therapy is, what the risks of the therapy are. But it is very interesting because we have a bunch of companies, $340 to $500 million market cap today. PDS Bio, 430 market cap, 75 million in cash, 355 enterprise value. Okay. Greenwich Life Science, 500 million market cap, 30 million in cash, 470 million enterprise value. Okay. Fortress Bio, 340 million market cap, 340 million in consolidated cash. Enterprise value is 0. So, sometimes when you look at these metrics, I'm just trying to understand which it might be the cheapest, right? And so it makes me kind of look at Fortress. Now, of course, I have some bias. I'm an analyst. I cover Fortress. Fortress is my top pick. It's a very interesting company, but it's also very risk diversified. But that's not why we're here today. Lindsay didn't ask me to say any of this. It's just what I see. We're here to talk about cancer immune therapy. And so what we want to understand is, what are these companies doing, and how does it fit into the cancer immunology landscape? So let me ask Dr. Addo to give us an introduction to exactly what he's doing at PDS Biotech. Dr. Addo.
So to give you a quick introduction, so as I mentioned, we are a mid-clinical stage cancer immunotherapy company, right? And so just taking a look at what we're doing with our platform Versamune technology. The goal here is to train the immune system to much more effectively recognize and attack cancer cells. So for example, although a small population of the first 18 patients in our most advanced phase 2 clinical trial, PDS Biotechnology, the NCI, National Cancer Institute, recently reported what may be some of the most significant clinical data generated to date in advanced, untreatable HPV cancer patients. So these previously untreatable patients had all failed chemotherapy treatment as well as radiation treatment. And among these patients, 67% of them had also failed treatment with the state-of-the-art checkpoint inhibitors such as Keytruda and Opdivo. Now, upon treatment with the National Cancer Institute-led phase 2 trial, clinical efficacy in the patients who received the PDS-0101 base combination saw reduction of their tumors in almost 70% of these patients. And bear in mind, the current state of the art for efficacy in this population of patients is only about 10 to 15%, right? So we report in the first 18 patients, almost 70% efficacy in these patients, with 2 of those patients already showing no evidence of the cancer, right? So this product, one of the key things that I think we have to put into perspective is, as the trial continues to recruit, would we see continued efficacy at these levels? But one of the key reasons why we look at this very difficult to treat patient population is that for these patients who have no standard of care and very few opportunities, even a simple doubling of the efficacy rate from 10 to 15% to 20 to 30% becomes very significant, right? So that's part of the company's strategy in being able to rapidly demonstrate efficacy of the technology and also a rapid path to successful commercialization of these products, right? And this is being applied now to a broader population of solid tumor products.
I want to get a little bit into what the Versamune platform is. My understanding is that it is a nanoparticle-based technology, and that you have found a unique protein that is only exists in the cancerous cell, the metastatic cell. You combine that protein with a nanoparticle, you introduce it into someone's subcutaneous, it's taken up by dendritic cells and essentially primes a T cell response, activating effector cells into active T cells, and they then attack the cancer. And so that's a very, very different technology than what PD-1 or PD-L1 does, which is just a generalized upregulation of the immune system. Is that fair?
That is fair. What the PD-1s and the PD-L1s do, more or less, decamouflage the tumor and make the cancer more visible to the immune system, right? But what's recently been reported is that just decamouflaging the cancer and making it more visible to the army isn't enough. That you have to have a trained army to go in and attack and kill the exposed enemy. What our technology does is the other piece. What our technology does, it's a lipid-based technology, and it's able to get into our lymph nodes. And what it does is it recruits a large number of these T cells to go into the lymph node. And secondly, it's able to present that unique tumor-specific or the cancer-specific protein to the T cells, train the T cells to recognize that specific protein as a foreign agent or an enemy. And then it also subsequently arms them so that these T cells are no longer just trained to recognize that cancer, but also well armed to be very highly effective in their killing potency, right? And so these T cells then attack the cancer cells and kill those cancer cells. And so for our combination with Keytruda, for example, we anticipate that Keytruda is going to more or less decamouflage the tumor. PDS-0101 will recruit and train those soldiers to go in and attack and kill the cancer cells. And that's what we believe is happening, resulting in these very effective results that we're seeing in these terminal cancer patients.
And from a clinical strategy, going to patients that have already failed a PD-1 or a PD-L1, you are taking out the observed initial effect of PD-1 because it's already failed. And so when you get an objective response in these second line or third line patients, that's not what would be expected. And it would be very clear that you could attribute that to the Versamune platform.
That is exactly right. And also very importantly, because of the fact that we know now that almost 80% of these patients who go on checkpoint inhibitors will fail checkpoint inhibitor therapy, right? So there is a growing need for technologies or combinations that can actually treat this growing population of cancer patients. And so being able to show that even those who fail checkpoint inhibitors have the potential to respond to this combination, including the Versamune technology that's able to activate and generate those powerful tumor attacking T cells, becomes extremely important.
Right. And so this ultimately moves from third line to second line, potentially to a first line with Keytruda, and it's just a question of getting there clinically.
Actually, we are looking at two arms of patients. The first arm, what we call the checkpoint inhibitor naive, is actually looking at first line because Keytruda has been approved as standard of care for first line recurrent metastatic, right? Not pre-metastatic. So first line recurrent metastatic, Keytruda is standard of care. So that's one of the populations we are actually looking at. And that's why our safety becomes very important, because when you go with first line treatment, typically, if you can demonstrate improvement over the monotherapy or standard of care without compounding the toxicity, that dramatically increases the potential for successful commercialization, right? So we're actually looking at the checkpoint inhibitor naive first line, as well as the checkpoint inhibitor refractory population.
Good. So I want you to note I've corrected myself from yesterday, because the idea that you're turning cold tumors hot is really not accurate here. This is an independent mechanism by which you're priming the immune system to go specifically after the tumors, but the tumors need to be unmasked. And while PD-1 or PD-L1 can do that, they don't have the cytotoxic capability, and so it's very different, right? Because I mentioned another company that was trying to turn cold tumors hot. That's not really what you're doing. Actually, what you're doing is more specific and more targeted.
It's more specific and more targeted. The end result is that the cold tumor will eventually become hot once the T cells start infiltrating and killing the tumors, but it's not dependent on specifically activating that key process of turning the cold tumors hot. It's really activating the immune system, activating the processes that naturally exist within our bodies to much more efficiently detect, activate, and attack those cancer cells.
Okay, perfect. Thanks. I want to do something interesting. I want to pivot to you, Lindsay, to Dr. Rosenwald. you've got a PD-L1 in development. The Fortress model is very interesting. My understanding is that Fortress has about a 32% stake in Checkpoint, and Checkpoint is currently developing cosalibumab. Help me understand, do we need another PD-L1? And what did you think of what Dr. Bedu-Addo was saying in terms of kind of a combination therapy? Because I'll bet in your head the gears are already turning.
Yes, they're turning rapidly. I thought it was a great presentation, Doctor. Very exciting.
Thank you.
First of all, yes, there's always going to be a need for checkpoint inhibitors. As you know, I think currently they're a $30 billion a year market, still growing pretty rapidly. They're not going away. Certainly, they're not curing most cancers, and where they are effective, they're not curing those cancers either in most instances. Combination therapy will be with us in oncology for probably the rest of our lives. Cancer cells are very smart and very nasty and figure out ways to get around every therapy. So it's a problem. So it sounds like a great shot on goal from what I've heard. Regarding our PD-L1, so first of all, we own, I think, closer to 20%, but we do get a 2.5% equity dividend each year from the company in order to help find new drug candidates and do other things for the company. And we get a 4.5% royalty when the drug is approved. Currently, we're in clinical trial pivotals for cutaneous squamous cell carcinoma. We'll have top-line data the end of the year, and we'll file the BLA next year. We'll also launch a pivotal non-small cell lung trial before the end of this year. So we're very excited about the asset. It's not crowded market. Currently, they're going for about $150,000 for a course of therapy from all the competitors. I think the cost of goods is probably well below $10,000 a year for a treatment. So there's a lot of room to be severely discounting. And again, at our market cap, we don't need it to be $1 billion drug right out of the gate to have a huge impact on the company. And yet we think that eventually, with enough indications, it could be $1 billion plus drug.
And in my background, I was a classic pharma guy, right? So I always looked at market share and I looked at how you build it. And one of the things that I'm acutely aware of is that when the second, third, and fourth therapy comes to the market, it doesn't have that advantage of being the first to the market. But often we get into a price competitive environment. So what I hear you saying is a low cost of goods gives you a lot of flexibility in price, and that you're attacking this with the understanding that, hey, what's it going to take for you to get market share? And that just a little bit of market share, when we're talking about this huge market, translates into a lot of value. Is that right?
Yes. So everybody has a low cost of goods relative to what they're charging. The difference is, for instance, Merck, which is the king right now of checkpoint inhibitors, has a market cap close to $200 billion. And a lot of that is Keytruda. So they have to be careful about discounting. Our Checkpoint subsidiary has a market cap closer to $250 million. We don't need to sell it for $150,000 a year, a huge discount. I'm not saying we will, but I'm saying that is certainly an option, would be very meaningful to patients and to shareholders. So that way we have ultimate flexibility.
All right, we're going to come back to Fortress. So now let's pivot to Greenwich Life Science. And Snehal, it took me a little while in our conversation to really think about the company and about what Greenwich Life Science is all about. And it occurred to me that, being diagnosed with cancer is the worst, right? We've had a family experience. But what's almost kind of very tenuous afterwards is not knowing if it's going to reoccur and wishing there was something you could do about it. And whatever you could do about it, you'd like to do it and not have lots of side effects, but kind of reduce your risk. So when we started talking, it occurred to me that what Greenwich Life Science is about is finding a way to reduce the reoccurrence of cancer. And in this case, I think you're talking about HER2, and you'll get into the details with me, breast cancer. What can be done to reduce that reoccurrence rate, and how friendly is that therapy and how would that therapy fit into the treatment paradigm? Because this is definitely something new. It's a new idea in oncology.
That's correct. So our goal is to actually reduce metastatic breast cancer. So we're on the front end of these other therapies that you've discussed just before mine. So a patient has surgery and they're waiting up to 5 years. They know what their % chance of recurrence is based on the type of breast cancer they had. And so it's a very anxious period. And if they're HER2 positive, they'll be on Herceptin or Kadcyla. And with Herceptin and Kadcyla, they reduce the recurrence rate in half, but there's still the patients who are going to recur, half of them still recur. And so our product has brought that recurrence rate down to 0. We had no recurrences following 50 treated patients over 5 years. And so that's the excitement that was created with the data that we announced in December last year. And so the goal is you give these 11 injections, 6 primary injections, and 5 boosters. And so that's a total of 11 injections over 3 years. And you sustain your immunity where you have T cells that respond to the HER2 protein, and in particular our peptide GP2. And as the breast cancer comes back, it's metastatic breast cancer, it's deadly, but we're preventing the metastatic breast cancer from coming back. I think that's the easiest way to think about where we fit into cancer immunotherapy.
And we talked a little bit about the historical reoccurrence rate. You said that you had no reoccurrence in the active arm. Can you talk a little bit about how the active arm compared to historical and what the next step is clinically for you?
Sure. So we had 100% disease-free survival or 0% recurrences in the treated arm. And in the placebo arm, which was, so both arms had Herceptin in the year prior. So in the placebo arm, we gave them GM-CSF as a placebo, and it has no effect, but we gave it for other reasons. And so in the end, the placebo arm had 11% recurrence rate or 89% disease-free survival, which tracks perfectly with Herceptin single therapy recurrence rate, which is about 12%. So our placebo did line up with standard of care. And so our goal now is to take that phase 2 trial and reproduce it in a phase 3 trial. So we're on the cusp of starting that trial, hopefully by the 4th quarter of this year. We have the drug product made, it's in vials ready to go. And we have the protocol finished, the statistical analysis plan completed. And now that's being reviewed by the FDA and by clinical sites.
Have you caught the attention of NCI or other oncology leaders? Will you have data at ASCO, at ASH coming up? And how can we follow the progress of this?
Well, what we did last year is we announced our 5-year efficacy data at San Antonio Breast Cancer, and the response was crazy. We went from $5 to $158 within a day. We've settled now at 40, but what we did is also announce data at AACR in ASCO this year. And we have additional data that we want to present. So the next natural conference for us will be San Antonio Breast Cancer again. And we'll just go in this cycle of AACR and ASCO. But as soon as we start the trial, we have open label data that we're going to be able to look at. So we'll be able to report more about immune response in various HLA types in 2022 at AACR or ASCO. So we'll keep the data flow going while we wait for the clinical outcome of the phase 3 trial.
Right. You've clearly caught the attention of the market, right? I mean, it's definitely reflected in your valuation, but, success, what could the potential market for this be?
We think it's over $5 billion. I think the easiest way to look at it is the market for Herceptin and Kadcyla together is $7 to $8 billion for Genentech itself. And so we will be synergistic with Herceptin and Kadcyla. So as Herceptin and Kadcyla grow, we would grow with them. We have the potential to be disruptive also because we're effective with just Herceptin. We don't need Perjeta, Kadcyla, Nerlynx, and HER2 or Tukysa to have this effect. It doesn't mean that those will not be standard of care and that those drugs will not be in our trial, but we have the potential to actually rationalize and de-escalate treatment in the HER2 positive breast cancer space. And lastly, we have the chance to go after the low recurring patients. So the patients who recur at a rate of 1% or 5%. because if we're as effective as we are in the more severe patients, we have a chance of being effective in those patients where nobody's developing anything. It's almost acceptable to have a low chance of recurrence and to live with that risk. Right? Just like we all face the risk of being infected with the coronavirus, I think these patients will welcome an opportunity to reduce their 1 to 5% chance down to 0 if it's possible.
And one last thing, we talked a little bit about the fact that this is a 9 amino acid sequence. How's your IP on this and on the combination?
Well, we have IP on the composition and the use of GP2 and GM-CSF and with Herceptin. These patents have issued in all the major countries. And we're also a biologic, so we have the 12 years data exclusivity as well.
Okay, perfect. Well, now having done a little bit more work over the last 24 hours, I kind of can appreciate the significance of what you're doing. So thank you very much.
Thank you. I think you're right on. Based on our prior conversation, I think you're spot on right now.
Good. Thank you.
Sure.
Lindsay, talk with me a little bit, changing the subject away from cancer to other diseases. A bubble boy comes to mind. Tell me a little bit about what Fortress is doing with Mustang. And describe for me a little bit about what is the Fortress model. I mean, you have a % ownership we talked about in Checkpoint, and I'm sure what is the Fortress model and how is it that you're participating with all these other companies? And then specifically, what are you doing with Mustang?
So the Fortress model is to take advantage of close to $500 billion a year worth of life science R&D all over the world. We have a 22-person search and evaluate team, full and part-time, and that's growing pretty rapidly. We look for drug candidates that are in the clinic that look like they have meaningful efficacy that we can get on reasonable terms, or that are available. They need a proof of concept in humans, but that proof of concept would not be a long or expensive trial. Also, as you know, we buy marketed dermatology products, and we have a company that's doing very well in the derm business. The idea is there's lots of great programs out there. It's a very, very inefficient market. We certainly at Fortress don't have the budget. Nobody does to develop everything. So we have partner companies that pick up most of the R&D expenses. We stay involved with these partner companies. We have equity at the beginning. We get royalties with most of them. We get eventually each year we get a 2.5% stock dividend each year from most of these companies. So that incentivizes us to grow the Fortress ecosystem, build our search and evaluate team. We keep bringing in more and better high quality people here. And, that's how in a matter of about 6 years, I think we've done 56 transactions. We've acquired 11 marketed dermatology products, of which we're currently marketing 7. And then we've done 45 development stage programs. We have, I think, 18 clinical programs, almost 25 clinical trials, 4 pivotal trials, another 4 coming shortly. So it's a great business. We get economics on each of these, and it's substantial economics. And I do have to say real quick, your calculation of intrinsic value, we should go through it. I think it's a little bit too low. But again, we don't need to do that calculation now. But again, the idea is that we've got this great, I think we have 14 partner companies now. And it's just a great business model. It's a very hard business model. You don't have time to do anything except eat and sleep, but I love what I do. And that's why I do it.
Yeah, and then regarding the intrinsic value, if I took the non-consolidated number out, it ends up being around 250. But the point is that Fortress is a very complex story, and I think the complexity, a lot of people just don't appreciate the scope and breadth.
Yes, so I've spent a little bit.
Let's talk about Mustang.
Yeah, sure. So Mustang, that is a biotech company up just outside of Boston on the University of Massachusetts campus. It is an ex vivo lentiviral cell processing technology. That's just a way of taking cells out of the human body, sending it to our laboratory. We then put in a different gene and send it back to the patient. So several years ago, one of our crack BD people, search and evaluate people, found at St. Jude's in the NIH a gene therapy for bubble boy. Bubble boy is a rare disease, genetic disease, where children are at birth, they do not have a functioning immune system. Their white blood cells don't work. It's a single gene defect. Historically, up until 30, 35 years ago, they passed away within a few weeks or months of birth because they had to be in a bubble, because any infection, they couldn't fight it, they would die. Then hematopoietic stem cell transplants came in, certainly not a cure for most of these kids. Some still die right away. Others do well for a time, but it seems like their grafts eventually fail. This was a drug when we bought it, again, fit right into our scheme of doing business, which is, number one, the data was spectacular. It had been in over a dozen patients with incredible efficacy and tolerability. They were not looking for a partner, yet we convinced them to partner with us. And we put it into Mustang because we happen to already have an ex vivo lentiviral cell processing company. Who has that in their portfolio? And then a couple of years ago, we found an anti-CD20 autologous CAR T at the Fred Hutch Cancer Center that, when they started using our cell processing technology, has shown incredible efficacy and tolerability. Two major markets in the NHL, non-Hodgkin's lymphoma and chronic lymphocytic leukemia space. First of all, when you look at the autologous anti-CD19 CAR Ts that are selling very well for Novartis and Gilead and Bristol Myers, we believe that we compete favorably against those due to some improved toxicity levels. So we think that this could be a huge drug for Mustang and for Fortress. We'll soon be in pivotal trials for all three programs.
Great job.
It's technology leverage and people leverage. And again, we don't invent anything. We just look for everybody else's stuff.
So anybody who's interested in Fortress, you can go to the Dawson James website, www.dawsonjames.com, pull down our Fortress reports. We're sporting a buy rating and a $24 price target. That price target has not changed in the 2 years I've been covering Fortress. Lindsay, you got to meet my price target so I can change it, okay? I know, from my lips to God's ears, right? You got it. Dr. Bedu-Addo, can you take 2 minutes or a minute and a half and just kind of close with us on what PDS Biotech's future looks like?
Well, I think the future for PDS Biotech, I think, is extremely bright based on the preliminary data that has been generated. We are certainly very optimistic. I think the proof of principle or proof of concept of actually being able to recruit and train these T cells in vivo, I think, has become quite clear based on the data that was generated. And our goal is to expand beyond just HPV. As I mentioned, we're actually looking at all types of HPV-associated cancer, so broadly targeting the HPV cancer space. But what we're doing by the middle of next year is to go beyond HPV-associated cancer into prostate, breast, and MUC1-associated cancers like lung, colon cancer, for example. And so really, we think the future for the company is extremely bright based upon the preliminary data that has been generated. I mentioned we are currently doing work with the NCI in our with some of our pipeline products to really identify what the right combination strategy should be, and then take those products also into the clinic. And in terms of the addressable market, as you and the audience are very well aware, this is multi-billion-dollar markets. And being able to really select the specific targets that we address first, just based not only on need, but also market size, is one of the key things that PDS Biotechnology is doing. So what we anticipate doing is, over the next several months, really notifying the markets as we meet those milestones of generating more data. In the 3 clinical trials that are currently running, we're going to have a very busy 3 to 9 month period, because we expect data from all 3 trials coming out during this 3 to 9 month period. And of course, by the middle of next year, expanding beyond HPV cancer also.
Good. So Peter Delta Sally Bravo, PDSB is going on my ticker screen. I'll be watching and look forward to kind of talking with you more as the company starts to release data. Snehal Patel, Greenwich Life Science, newly public, but clearly you've caught the attention of the marketplace. close with us a little bit about what investors should be looking at over the next year.
Sure. So we will be starting our phase 3 trial. And so you'll be hearing about the manufacturing and the enrollment of the first patient. We have more data from the phase 2 trial that we'd like to publish. So hopefully it will be at another major conference, whether it be at the San Antonio Breast Cancer Conference coming up in December or the AACR conference in April. And then as we start the phase 3 trial, we have lots of data that's going to come out along the way. So it's not as though we have to wait. So the phase 2 trial was 5 years. There's a perception that we have to wait 5 years for more data from Greenwich. That's not true. It's going to be a 4-year trial, but we'll do an interim analysis. So we'll look at it midway. So between now and the midway point, there's many open label features of this phase 3 trial that will allow us to report data that's very meaningful, that talks about expanding the market and how the drug is working in a phase 3 trial without disclosing the final efficacy and primary endpoint. But there'll also be other phase 2 trials and phase 3 trials that we can pursue. So our story is not complete. The jury is out on whether we can reproduce this trial, but we're focused and committed to doing that.
Okay, sounds great. Greenwich Life Science, Golf Lima, Sally, India, GLSI, really, interesting story. And I'll tell you, anybody who's had breast cancer wants to be paying attention to this, although I think I understand that this has implications much bigger than that. And so I'd like to thank our companies. Thank you very much for allowing me to be the moderator. I learn so much every time I do this. People tell me I'm smart, but it's not that I'm smart. It's that I get to listen to really smart people and kind of pull the strings and just see where it leads me. So with that, I'd like to say thank you very much. Brent, we'll turn it back to you.
Excellent conversation, gentlemen, and thanks for hosting again, Jason. You did a fantastic job.
Thank you. Okay, thanks, guys.
Later, gentlemen. Believe it or not, folks, we are about halfway through our day here, and we're going to keep it rolling with our next presentation. We have a company called Novo Integrated Sciences. It's ticker NVOS, and we have here Robert Matacchioni. Robert, how's it going?
It's going well. No complaints on my end.
That's the way to be, man. You are the chair and CEO of Novo. Let's hear a little bit about it.
Absolutely. So I'm not sure what you can see on my screen. I can't see the other end.
I see your screen share, and there's 2 little boxes of you and I. So I think we're good to go, man.
Okay. Well, I'm as you articulated, I'm the Chief Executive Officer of Novo Integrated Sciences. It's publicly traded on NASDAQ, obviously. I'd like to begin first and foremost with the customary slide that we need to from a compliance perspective, the disclaimer and the forward-looking statements. And then I'd like to get right into Novo Integrated Sciences. It's a company that operates through multiple subsidiaries, so we can think of it as somewhat of an incubator. It's an extremely comprehensive healthcare platform touching on a multitude of different areas of healthcare business. And as such, I'm going to speak at a very high level. It's interesting to hear some of the other presenters and the detail that they can get into. Unfortunately, I don't think time allows us the same luxury here. But really, Novo Integrated Sciences is introducing a new philosophy to healthcare, the evolution of healthcare. It's decentralized healthcare. And we believe that there's 3 primary pillars. And when I say we, the company itself and myself in particular, believe that the 3 pillars necessary to have this actually come to life and be a part of our everyday world is number 1, an exhaustive and expansive network of touch points for patients. Number 2, the most important in my opinion, a comprehensive and robust technology interfacing platform. And number 3, of course, the product solutions. Again, I want to emphasize the second pillar, which is really what a lot of our focus is as an evolving medtech company. Of course, the question comes up regularly in my world, so to speak. How has healthcare adopted technology? And for the most part, healthcare always leads the technology trend. But unfortunately, from the practitioner's perspective, other sectors have appreciated the importance of obviously the user, the client, and in our case, the patient. And yet, in our healthcare sector, the patient has lagged with respects to the adoption of specific technology for the patient, centric to the patient. And that's where decentralization is going to become key. Having the patient control their healthcare experience is going to not only, accelerate the adoption into a decentralized model and move away from the model that exists right now, which is extremely central, but moreover, create a fantastic experience for the patient. In the same way that a client or a customer experiences wonderful things with technology with respects to media, entertainment, transportation, just about every other sector on the planet. Our company really speaks through 6 different categories of business. The graphic here identifies each of them. I'll go into them in some minor detail later on in the slide. But the important thing to understand is it's not fragmented. The 6 individual components, the 6 areas of business, so to speak, are lateral in nature, but create a fantastically vertical integration through the technology interfaces that we engage and bring to market. And that's extremely unique. It's something that we couldn't have done 10 years ago, but with the advent of the technology that we're working on, quite specifically something we refer to as Novo Connect, it allows us to look and feel much, much more substantial than what we really are, and allows us to bring a myriad of healthcare services and products and solutions to a broader population base. The first pillar, as I touched on earlier, is the comprehensive network that's required to create touch points for patients, and in turn, turn patients into consumers. Our model engages 3 structured formats to enhancing that experience and creating that expansive network. The first is the most obvious and most traditional, a corporate ownership of the touch points. We refer to them as clinics or operating brick and mortar locations. The second is a franchise model. And the third is the one that we prefer. It's from an investor perspective, it's the most accommodating from a cash use perspective. It's something we call an affiliate model, a model by which other stakeholders, other participants in care, other service providers can join our network and play to our standards, so to speak, understanding that we have a specific process and procedure in place with how we operate from a healthcare perspective, and we want them to adopt those practices. And what that allows is a friendly environment for competitors as well to join our network. And so we really don't have, by technical definition, a true competitor, as we welcome all into our network. We believe that the market requires the expansion of the existing networks, and under a very controlled and understood and accredited format. One of the points of our acceleration with respects to growth from a corporate perspective is actually our microclinic format. In the coming months, our partnership with LA Fitness will bring to life our first modular units, no more than 400 square feet, able to fit in just about any location, and providing sophistication technology and giving the individual patients the opportunity to experience a very broad approach to healthcare through technology in very, very small facilities. Extremely cost effective, allows us to enter population centers that we otherwise would not enter. And so we're extremely excited to get this off the ground. It was intended to be in circulation already from a commercial perspective over a year ago. Unfortunately, we've all lived through COVID, and COVID, handcuffed us in many of our objectives in the last year. But now, as we're all coming back to life and out of COVID, things are accelerating on this front. The 7 pharmacies that we just recently announced with respects to our intended acquisition is something that we're extremely excited about. It represents an increase in revenue, consolidated revenue of roughly $55 million. But moreover, it allows us an opportunity to touch several million more potential patients and of course, patrons. We're going to turn those patients into consumers. The pharmacy sector is one that's engaged in an incredible transformation and looking desperately for solutions. And I think we really represent the future for pharmacy in terms of some of our technologies being applied at the pharmacy level, engaging the patient into that consumer profile, creating a wellness profile in effect, allowing the patient access to our tools, both mobile, product, and otherwise, and giving a new life to the pharmacy model that is becoming quickly archaic. Our presence in Florida, Virginia, and Arizona is exciting to us. It's our first endeavor outside of Canada, considering all of our revenue presently is generated through the Canadian marketplace. So it represents an incredible opportunity to really come to life in a big way in a new jurisdiction. Number two, the second pillar, one that, again, the company emphasizes the importance of, is that technology. Something that we refer to as Novo Connect, but it's the first of its kind that I'm aware of. And I'll qualify that by saying that I'm aware of, but I tell you, I haven't seen a patient-centric interface in healthcare ever. And this is the first of that tool where now the patient, us as patients, have control of our healthcare quite directly through an expansive network of healthcare providers and service providers, product providers. It's an everyday tool utilized in our entire wellness objective. An exciting product that we've been developing for the better part of 4 or 5 years. It's data sensitive. It allows different add-ons and other technologies to bolt within it. But again, the key is its ability and its inherent design of a patient-centric tool, something that really we've never seen in the industry. And right now we've actually started our commercial testing of it literally this week. And we're looking forward to full commercial rollout on the phase 1 technology over the next 30 to 60 to 90 days and into 2022 with significant more improvements, including blockchain, because of course, what's important is protection of the data that's there, our own data, our own personal records. And a funny little side story very, very quickly, we had here in Canada our first breach of the passports, the vaccine passports developed by government. So we know how important it is to have this done right, and we're doing it right. So we're excited to introduce AI into this feature, which will even further create an unbelievable and efficient tool that will be impossible not to adopt and not to have institutions, governments, and everyone abroad realize that this is the way of the future. As I mentioned, the bolt-ons, telemedicine is one, and we're proud of our telemedicine technology, something we refer to as My Telemed Plus. It's an incredible tool. As we know through COVID, telemedicine has been extremely aggressively adopted by both the medical community as well as the patient community. And My Telemed Plus is the next evolution. It deals with peripherals. It creates an incredible opportunity of sophistication of the data that's being received, a very comprehensive opportunity for a practitioner to view what's going on by way of these peripherals so that a comprehensive diagnosis and subsequent can be put forward to the patient. Right now, we live in a very single-dimensional telemedicine world, and we're suggesting that that's great for what it is today, but tomorrow requires what we're bringing to the table. The other unique feature of this phenomenal tool is that it's mobile, and we can engage a bit of a translatory component to it by way of different healthcare providers, lower-level healthcare providers, possibly even PSWs, administering in the home and creating this essential and virtual visit that is, in effect, as real or as comprehensive as a physical visit. So we're ready to launch that, and we're going commercial on it literally as we speak as well. Of course, that brings us to the other component, and it's a fantastic relationship that we have with a company called CloudDX. It's an exclusive licensing arrangement for remote patient monitoring devices and tools. And that's great for what we use it conventionally today in terms of treatment monitoring, staying connected to the patient through an entire treatment overview and seeing how they're responding. But we're going to take it one level further, and we're looking at RPM and those devices as something that allows us a pre-active understanding of our community, our wellness community, in that these devices and all these tools that are associated with the remote patient monitoring feature are such that they can be on you even when you're perfectly fine. And they can start to give us indicators of problems that are in your future, allowing us to, number one, create efficiencies to care, so that we can be proactive and avoid those catastrophic circumstances that are extremely expensive. And so this is an incredible development opportunity for us, and we're subjecting a great deal of effort and energy with Cloud DX and bringing this to life as well. Our third pillar really speaks to the last couple months of acquisitions and the desire and the necessity, rather, for incredibly high-level products. It's important what we ingest. It's important what we use as superficial tools to making sure that our wellness and our health is addressed. And so we've, in the last 2 months, gone through 2 acquisitions, the first of which is a company called ProDip that we're really proud of. It's a unique delivery system that right now has a very strong foothold in the energy market, as you can see by the graphic. We believe that its untapped potential is really in the medical field. It will solve the problem of medicinal delivery into problematic age groups, children and the elderly, that right now have a challenge that in general it's potentially problematic to have these different categories of people actually ingest medicine in the way that we do it nowadays. And so this solves that problem. It solves it quite directly. It's proprietary. We're on the verge of signing an enormous and really a distribution agreement that I'm extremely proud of, that will give us a national presence in the U.S. and allow for the unparalleled success of this product to become mainstream, because it has potential application to not just medicine but nutrient delivery rather. Its application is unlimited. And of course, Ascensia. Ascensia is our manufacturing arm. It's state-of-the-art, GMP, pharma grade type of operation. And that's important to us because we want to develop products. We want to develop around the science of products. Those products are important to us, as I suggested earlier. And this organization does exactly that. It's a science-heavy organization. Presently, it's manufacturing all types of nutritional valued products, customized therapeutics, these types of products, and products that fit right within our network, our existing network of patients that we presently service. It will also obviously give us a great advantage with respects to the expanding network and the patient touch points that we will be dealing with in our future acquisitions and in our growth. So we're excited about what this acquisition and this company represents for us. In addition, we inherited through the acquisition a spectacular patented oncology platform. We've heard a lot of discussions around cancer with some of the other presentations, and whenever we can find a solution, we're excited to be a part of it. And this is one. This is one for those unfortunate people that do have it. And where does it progress? And so we're going to be developing the commercialization of this product over the next several months and bringing it to market based on the fact that we've spent several years, or they spent several years prior to us acquiring them, developing the real science behind it.
Robert, I wanna pop in here. I'm very intrigued with all of what you're saying, but I do want to have enough time to do a few questions. Absolutely. And we're up against clock here. So if you want to give like a quick summary, if there's a couple of slides that you wanted to absolutely hit, go for that now, and then we'll go for a couple questions if you're cool with that.
Absolutely. I want to get to the management because that's super important in the structure of the company from the finance side. I can tell you that the operating team, as the slide indicated, at the senior level, it's comprised of Chris, David, myself, and Dr. Sina, who was the developer of that technology that I'm referring to. But moreover, there's an entire team that is the executive operating side of the subsidiaries are doing a fantastic job, an extremely sophisticated group of people. And of course, the board, a board that I'm extremely proud of. I won't get into each one of them. And our jewel, really our jewel, is our medical advisory board. 3 spectacular individuals in their own right, people that are extremely reputable within their own professions. And I've been often asked, why does a company like yours require a medical board? We don't require it, but based on the fact that we're reinventing the space, we want to navigate through the medical community with integrity. And these gentlemen help us do that, help us stay compliant, help us stay on board with respect to the products and everything else that we bring to light. Our financial position, we're extremely well positioned now, extremely tightly held. I myself own roughly 49% of the entire company. So we're motivated to succeed long term. And I think we're extremely undervalued right now. Our M&A strategy is extremely aggressive. In the next 6 months, will bring us into multiple jurisdictions outside of Canada and the U.S. And that's it.
Awesome. Thank you for speeding it up just a tad there, because I do have a couple interesting questions, and I want to just reiterate something that you said at the beginning of the presentation. You called your company sort of an incubator in healthcare, and you said the focus is decentralizing healthcare, and this is something that we are, hearing a lot of recently, and this is really good stuff, I think. And so from an investment perspective, speaking to potential investors out there, I mean, is it almost kind of like a little bit of a, is your company sort of like a little bit of an ETF in a way?
Well, it's funny.
It's a funny way to put it, but
yeah, and really what we are is an opportunity to allow individual growth within a singular enterprise. So to the merit of the ETF model, possibly a great analogy. I never heard it described that way. but really what I think that we bring to light is the fact that all of these different pieces actually integrate, and hence the name. Sure. And they do that through the sciences. They do it through the technology pieces that really, like I said, 10 years ago didn't exist.
I think we are going to have to bring you back on at some point, Robert, because I have a ton more questions, and I think the audience was really intrigued by what you were saying here. Novo Integrated Sciences is ticker NVOS on the NASDAQ. Robert Matacchioni, you are the chairman and CEO. Thanks so much for joining us today.
Thank you, sir.
Next up, we have TCON Pharmaceuticals. It's ticker TCON, also a NASDAQ company. And we are joined with the CFO of TCON. It's Scott Brown. Scott, are you out there? Hello. Welcome.
Hi, I am. Yes. Thanks for having me.
It is a pleasure. I hope you're having a good day. I will let you take it away. I see your presentation. Looks like you are good to go.
Great. Yeah, thanks so much. Hey, as mentioned, I'm Scott Brown, CFO at TCON Pharmaceuticals, and I look forward to telling you about TCON today. So during today's presentation, I will be making some forward-looking statements. So TCON Pharmaceuticals has multiple assets to highlight, the chief of which is our lead asset, envafolimab, which is a rapid subcutaneous checkpoint inhibitor that we're studying in a pivotal trial that could lead to the approval of envafolimab, assuming positive data in just over 2 years. So the clinical trial, named the ENVASARC trial, will have interim data later this year, final data next year, and a potential approval in 2023. The pivotal trial of envafolimab is in soft tissue sarcoma, which is an orphan indication in oncology with approximately 14,000 new cases of sarcoma diagnosed each year. And it represents a total addressable market of over $1 billion in the US in all of sarcoma. So our business model at TCON is somewhat different from your standard biotech or big pharma company, who are all beholden to contract research organizations, or CROs as they're known, to perform their clinical trials for them. So we have what we call a CRO independent organization that allows us to run clinical trials with our own team, and thus avoid the high expense and long timelines related to using a CRO. The end result of this CRO independent platform is that we can run clinical trials at a much lower cost, much faster, but at a much higher quality as well than if you were to use a CRO. So importantly, what's unique is we've used this ability to run trials cheaper and faster as a business development platform. And we've done 4 deals to expand our pipeline in 4 years. Now, we focus really on ex-US companies who lack the clinical development experience in the US, and we engage in a profit share model whereby we'll run the trials and then we'll give our partners a much higher share of the back-end economics if the product is approved. So normally, if a company licenses an asset to a big pharma, they'll get some nice upfront candy, as we like to call it. But back-end, it's typically about a 10 to 12% blended royalty. So really, big pharma is taking the lion's share of the profit in that case if the drug is successful. So what we tell potential partners is that if you really believe in your asset, you want to partner with TCON, since you will get 4 times the back-end economics as you would with big pharma by way of our profit share. If you don't believe in your asset, then by all means, go with Big Pharma and take the upfront, since it might be all you get. And in terms of how efficient this is cash-wise, we only burned $18 million all of last year while getting this pivotal ENVOS-ARC trial up and running. And we expect this year to be in the low to mid-20s for cash burn as well. So using this platform, we've done deals with 3 Chinese companies and are looking to do additional deals this year as we further grow our pipeline. And we're looking at assets that would pair naturally with envafolimab, such as another IO target like CTLA-4 or LAG-3, but also standalone assets that have a clear path to approval. In addition to envafolimab, we have 2 other late-stage assets. They include a DNA repair inhibitor that we're partnered with the National Cancer Institute on, and a CD73 antibody that we licensed from the Chinese company I-Mab. So if you've heard just a couple weeks ago at ESMO, AstraZeneca had randomized data with their CD73 antibody in combination with their PD-1 inhibitor, PD-L1 inhibitor, excuse me, that we view as very positive for the target. Now, the key advantage of our CRO-independent platform is a low burn rate. As you know, we expect to complete the ENVOS-ARC trial for no joke less than $20 million, which is a fraction of the typical costs associated with a pivotal clinical trial. And we recently raised capital in July, and so now we have a cash runway that gets us into 2023 past the final data readout for ENVOS-ARC. So I'll tell you a little bit more about our product development platform, since it really is what makes TRACON unique. We have good assets too, but the product development platform is really our unique feature. And it's really all about aligned incentives. So we're incentivized to get the clinical trial done quickly for low cost, but it has to be high quality, because we're spending our own money and using our own internal resources to get it done. I mean, the CRO model is one of the most egregious business models ever. It's a fee-for-service model plus guaranteed payments, whether any work is done or not. It would be like using a lawyer or accountant and having them bill by the hour, but then on top of that, they get paid a monthly retainer, and whether there's any work done or not. So the CROs are just not incentivized to get trials done quickly, because it just means they can bill more hours if they don't. And there's no reason for them to be efficient. They figure, you know, why solve a problem quickly when they can involve a ton of people and bill more hours to solve it? So it's a completely misaligned business model. The longer a trial takes, the more they make. They're happy to run trials that will be hard to enroll, or maybe don't have the best scientific rationale because it just means higher fees for them. So our model is the complete opposite. We tell our potential partners that we will run the trials ourselves, we'll use our own people, and so we will get your drug to market faster than anyone, as we're incentivized by getting the drug approved and then with us commercializing it and selling it. We don't make any money before it's approved, and so we need to get it approved as quickly as we can. And it has to be high quality, the package that we submit to the FDA, because we're just going to waste time if it's not high quality. Now, I'm sure you've heard that the average cost to approve a drug is about $2 billion. That's because the big pharma companies use CROs who are not incentivized and just waste tons of time and money. Now, compare that to the $20 million we expect it to cost to complete the ENVOS-ARC trial, and we can potentially approve a drug for 1/100th of the typical cost. And for us, it's all about harnessing global innovation. You know, we look for drugs that are in development across the globe, mostly in China, and we'll go to these companies and say, hey, let's take this to the US where you currently don't have any plans. You know, you may be running a trial in China or elsewhere in the world, but you're not in the US. And let's look for a small orphan indication to get the initial approval quickly, and we'll start making money, and then we'll expand the label from there. Now, envafolimab is the perfect example. So our partners were running trials in China and hadn't thought about going into sarcoma in the US. So we said, let us do that. We'll get it approved, you know, in just a few years, assuming positive data, and then we'll start selling it, and then we'll give you a really nice chunk of the economics. It just, you know, it just makes sense that way. So let's talk a little bit more about envafolimab, since it's our lead asset, and what makes it unique and how it compares to products that are currently marketed. So what makes envafolimab unique is that it's given by subcutaneous injection that literally takes 30 seconds. It's similar to how you would get a flu shot. And after it's given, the patient is free to go about their day, since there's no chance of an infusion reaction, as it's not an infusion. Now, why did we choose to go into sarcoma? with envafolimab, and the reason is there was clear data from other checkpoint inhibitors that have the same mechanism of action that showed a 29% response rate in the sarcoma subtypes of undifferentiated pleomorphic sarcoma, or UPS, and myxofibrosarcoma, or MFS, where the current standard of care is 4%. So, I mean, that is a dramatic difference, 29% versus 4%. And it's just, it's hard to imagine that patients currently only have a drug that's a 4% response rate. That is just, incredibly low. And we just thought we could do much better once we saw that data from other checkpoint inhibitors. So in addition, earlier this year, we released data from our Chinese partners Immuno-Oncology and 3D Medicines that showed envafolimab had a 40% response rate in another sarcoma subtype called alveolar soft part sarcoma, or ASPS. And again, that was a great data point, as it was a 40% response rate in a different sarcoma subtype. So we're moving envafolimab along at a really rapid pace as we executed the license in December of 2019. So it's less than 2 years ago. We began dosing in a pivotal study a year later in December 2020 after a successful Type B meeting with the FDA. We'll have interim analysis efficacy data later this year, and then final data next year. If we were to have used a CRO to run this trial, it would have taken considerably longer. And speed is just so important in this industry, so you can be first to market with a drug. And importantly, as I mentioned, we estimate the market size in sarcoma at over $1 billion in the US, assuming parity pricing with the currently approved checkpoint inhibitors. So now on the topic of other checkpoint inhibitors, there are currently 7 that are marketed in the US. And I'm sure you've seen the commercials for the big two, Keytruda and Opdivo, which collectively have sales of well over $10 billion a year in the US alone. And Keytruda is expected to become the best-selling drug of all time in just a few years. So all 7 of these drugs are delivered intravenously, meaning the patient has to spend at least half their day getting these treatments. First, they go to the infusion center. Then they have to get their infusion. Then they follow up with their doctor, as there's a small risk of an infusion reaction since there is such a large volume of drug given at one time. Now, contrast that with envafolimab, which is given in 30 seconds and has no risk of an infusion reaction because it's not an infusion. And you see why we call it a game changer for the treatment of sarcoma patients. So as I mentioned, sarcoma is served by a very poor standard of care. There are approximately 14,000 new cases of sarcoma diagnosed each year. And of those, about 6,000 will be metastatic or advanced and require systemic therapy. For those patients that are metastatic or advanced, their first treatment option, first line, is a 50-year-old chemotherapy called doxorubicin that only has a 17% response rate. And now once patients fail that treatment, their next option is the drug called Votrient with the 4% response rate that I mentioned earlier. The MSARC trial, we're enrolling these two subtypes, these two sarcoma subtypes of UPS and MFS, which combined have about incidence rate of about 3,000 per year, 2,000 UPS and 1,000 MFS. And our goal really here is to give these patients a much higher option that has a much higher response rate than the current standard of care, which is just abysmal. I mean, 4% is just, it's hard to believe that refractory patients only have that available to them. And then after that, there really isn't anything else approved either. So as I mentioned, the total addressable market in sarcoma is $1 billion, and we're attacking this piecewise, and we're expecting a wave of potential approvals, assuming positive data, starting with UPS and MFS, which are about a $200 million market. And, we expect approval in late 2023 in these indications, assuming, again, positive data, and then to add on other indications like these other small sarcoma subtypes, angiosarcoma, ASPS, and dedifferentiated liposarcoma that we know respond to checkpoint inhibition. And we expect to get a study up and running soon. And assuming that study reads out positively, could get approval in 2025, which could be another $100 million in potential revenue. And lastly, we're planning a first-line study in all sarcoma subtypes and a trial in GIST, which is gastrointestinal stromal tumors, and we could potentially be on the market in these indications in 2026 and 2027. And altogether, that represents total over $1 billion in sarcoma. Now, we did have a third party do market research, and we estimate that we would have a fast adoption to peak sales penetration over about 3 years, reach over 80% peak penetration, and we'd price in line with other checkpoint inhibitors, which are approximately $15,000 per month. And the reason we expect such a high penetration rate of over 80% is there just isn't any much competition out there. Physicians they'd look at either the 4% response rate with Votrient or ours, which could have a much higher response rate based on that data from Keytruda. And it just makes sense that they would give their patients the option that has a higher response rate. So now I'll talk just a little bit about the structure of envafolimab because it's a very unique molecule. So it's not a full-length antibody like all the other approved checkpoints. It's what's known as a single domain antibody, and it's about half the size of a traditional antibody, which means that it can be highly concentrated and given by subcutaneous injection instead of through an IV. So the other great advantage of envafolimab is it is stable at room temperature for 6 months, and so it does not need cold storage. So you can imagine our goal here one day is to provide at-home dosing for patients through a single-use injectable pen, meaning that the patients wouldn't even have to go into their doctor to receive their treatment. You can see how much of an advantage that would be for patients since the time is really what's important to them. And if they could have their dosing at home by themselves, similar to how other treatments are given these days, and without going into the infusion center, that would just be amazing for them. So a little bit about the data for envafolimab. So it's been studied extensively by our partners AlphaMab and 3D Medicines, and it's been dosed to over 700 patients. So while our trial is the only one currently ongoing in the US, there are 2 pivotal trials that completed enrollment in China. And one of them, the trial in MSI-high cancers, is actually under priority review right now by the Chinese NMPA, and it could be approved in China by the end of this year. So we don't have any economics in China, but the approval would just show that envafolimab is advanced and everything's ready for it to potentially be approved here. The CMC is in line, the manufacturing. We just would view it as very positive overall for envafolimab and great for our partners 3D Medicines and AlphaMab. So I'll get into just a little bit about the data and how we had the idea to license envafolimab in the first place. So this data was from ASCO in 2019, and Merck presented data from their checkpoint inhibitor Keytruda that showed this 23% response rate in the sarcoma subtype of UPS, which is, when compared to that 4% response rate I mentioned earlier, it made us really interested in this data. So this was great data, and Keytruda could have gotten approval if they would have expanded the study and enrolled more patients. But after discussing with the investigator, she told us not only was Merck not going to enroll more patients, they were actually cutting the funding for this study. And it was just kind of hard to believe, so that they weren't looking for an approval here. They just had done this through an investigator-sponsored trial. But we just couldn't believe that they weren't looking to get this approved in sarcoma. So then we said, well, let's go to China. We'll look at all sorts of checkpoint inhibitors. We probably looked at least 10, and we ended up licensing envafolimab, which we consider the best one of that group, from AlphaMab and 3D Medicines, and it was really due to its unique method of administration. So quickly, I'll just go through a couple of the other data points here. So another trial in sarcoma. This one was in all sarcoma subtypes, and it was Opdivo, the BMS checkpoint inhibitor, and it had a 5% response rate, but that was in all sarcoma. But then the important thing here is when they combined it with Yervoy, which inhibits the CTLA-4 pathway, they tripled the response rate. So it went from 5% to 16%, which is pretty amazing, and it's in line with first-line chemotherapy, as I mentioned, which had the 17% response rate. And then if you look at the cohorts that were just in UPS, again, the response rate went up considerably. So it's single agent, Opdivo had an 8%, and then when adding Yervoy, it went up to 29%, which again is pretty amazing, and why we're so excited about our ENVASARC trial.
Scott, I want to give you about a 1 minute warning or so. I want to get to like 1 question. So if you want to do like a quick wrap.
Okay. Yeah. Sorry. Let me.
All good.
Yeah. Let me go real quick. I'll just go to 2 slides if that's okay.
Great.
So
yeah,
we've hit our milestones so far this year. We had orphan drug designation a few months ago. We've had 2 safety analyses that we've done press releases on that the drug was safe, and we expect that first interim efficacy analysis later this year, and then possibly to request breakthrough fast track designation and endpoint next year. And then just one thing on the trial, it's 2 cohorts, 80 patients each, which is why we expect a very quick accrual. It's only 160 patients, and so we're expecting to complete that accrual next year, and then potentially file for approval in 23 and be on the market in 23. So in about 2 years we could have a approved drug, assuming positive data from the trial.
All right. So you've been hinting at it a bunch, but I want to just ask you directly. So what is the advantage that TRACON has for the trial process? Why another company would want to use you guys for that? Is it the relationships that your team has? Is it the experience that your team has?
Yeah. So it's really both. We've done studies at all of the major cancer centers in the U.S. Mayo, both Mayo sites, MSK, pretty much everywhere, Memorial. It's like everywhere that's a big cancer center, we've done sites. So we have these great relationships. I mean, the company's been around for 15 years, and it's the relationships, but then it's also the speed. We get studies up and running quicker than anybody, and we enroll them quicker than anybody because we're doing the work ourselves. It's like when you hire a CRO, you have to have your own employees police them. And
Sure.
so then it just takes so much longer because, there's weekly meetings, and then it's like, oh, well, I got to go follow up with the CRO again. And
Right.
It's like the medical monitors from the CROs, they can't answer the question a lot of the time. So they're like, oh, I don't know. Let me call, the
Sure.
company and I'll figure it out. And it just takes so much longer.
Gotcha. Awesome. Well, thank you for answering that. Scott Brown, CFO of TRACON Pharma. It's ticker TCON on the NASDAQ. Thanks so much for joining.
Thank you.
All right, ladies and gentlemen, we are switching it up, not just one notch. We're switching it up 2 notches here. We're going to have an exclusive interview, and I want to welcome on our moderator, Benzinga's own Justin Roberti. There he is. Justin.
Hey, how you doing, Brent?
We haven't formally met before, I don't think, have we?
This is we're doing this for camera.
We're doing it live. And
This
let
is-
me just
yeah,
say,
exactly.
we'll do it live. Let me just say, I have seen you on a few of our other events, and you do a fantastic job. I am a fan. First time caller, long time fan.
Thank you. I always see you up in the comments when we're broadcasting. I appreciate it.
Yes, sir. Yes, sir. I'll let you take it away. You're going to be talking with Lineage Cell Therapeutics.
Yes, I'm going to be talking to Brian Cully, who's the CEO of Lineage Cell Therapeutics. Hello, Brian. How are you?
Hey, Justin. Happy to be here. I'm doing really well. Yourself?
Good. We're very happy to have you. I was just saying hello to Brent, so I kind of scooped myself, but I'll introduce you again. We have Brian Cully, the CEO of Lineage Cell Therapeutics, with us. Brian, so taking a quick look at your background, you have a pretty long history in emerging healthcare. How has that impacted your approach to working with Lineage? Impacted maybe when you identified the opportunity that was within Lineage?
Well, thanks, Justin. So Lineage being a public company, I just start by saying that I may make some forward-looking statements in this discussion, and people can learn more about our risk factors through our filings. And then to your question, yeah, my background is in both science and business. I have advanced degrees in both science and business. I spent many years as a bench scientist. This is the 3rd public company that I've run, so I think pulling together the science and business as a background is valuable. You don't have to really outsource that quite so much, and I rely on both of those domains every single day. I also spend many years as a long distance competitive runner, so I bring the competitive side as well. So those 3 attributes have helped me very well over the last 3 years running Lineage.
Really? Competitive running. Well, that's very interesting. And how would you characterize what is Lineage's mission? how would you characterize what you've been trying to accomplish in your tenure there and the mission of the company overall?
Yeah, well, Lineage, it sounds, almost crazy in how ambitious it is, but I think it's very defensible. And that is that we are trying to usher in a new branch of medicine. People have heard about cell therapy for many, many years, and the promises of cell therapy have been held out there for many years. But there's been a maturation in the industry, the tools that we use, the knowledge we've collected, and I feel we're on the brink of explosive growth and breakout knowledge and understanding of exactly how and where to utilize cell therapy to generate new medicines beyond the reach of traditional approaches.
Mm-hmm. And you have more people doing more hands-on therapy, leading up to the end of the moratorium on cell therapies. There have been a moratorium on the restrictions up until May this year. So there's been some strides forward this year, certainly driven by the pandemic as well. But let's make a distinction. Do you consider Lineage to be more in the area of regenerative medicine or a cell therapy specifically?
Justin, that's a good question. Both. We're both a regen med company and a cell therapy company, but they're very broad terms. Regenerative medicine, includes things like aging research, but that's really research. That's understanding the aging process. That's not developing medicines, in the near term that are going to reach patients. But we are in regenerative medicine because we work on some of the conditions of aging, right? When you get very old, you develop things like cancer and blindness. And so we are regen med from that perspective. And then we also are a cell therapy company because the way that we treat patients is we deliver an entire cell to them. So we don't deliver a little molecule or a tiny little antibody. We actually manufacture and transplant brand new replacement parts, whole cells. So it's like an auto parts repair. You've got a kind of cell in your body which is broken. We manufacture that kind of cell and then transplant it to the body. So we are both regen med and cell therapy.
You had described when we were talking earlier, you had compared Lineage to being an Amazon of this, like Amazon.com, of this type of therapy. Is that because of the range of uses that are available with the kind of whole cell therapy that you're talking about? Where does that comparison come from?
Yeah, there are a lot of parallels that one might want to draw, but the one that I'm really speaking to when I talk about us and I talk about Amazon is that in 1997, Amazon only sold books, and they had about 2.5 million volumes. Now, everything you can imagine is sold by Amazon. And the parallel with Lineage is that right now, we manufacture only 3 of the cell types that exist in the human body. We manufacture a special kind of retina cell, a spinal cord cell, and a kind of immune cell. But there are about 200 different cell types which comprise the human body. So we are working out of and building from a platform technology which might be able to go far beyond where we are today. So when I talk about Lineage having an Amazon-like opportunity, I might not necessarily mean in terms of market value, but I absolutely mean conceptually being able to broaden and have a platform that can deliver a lot more than what we're doing just today.
And it speaks to the kinds of therapies, the range of therapies, the range of conditions that can be treated with this kind of therapy, I imagine. Correct?
That's correct.
Recently, I think 2 days ago, Bloomberg put out a report projecting the growth for cell therapy between now and 2026. It seems like an area that certainly has a lot of upside. What do you think is driving the interest in cell therapy and cell transplant? As we discussed, it's something that's been talked about abstractly for the past 30, 40 years.
Mm-hmm. Yeah, I think there are probably 2 very significant drivers. One is success, right? Success attracts capital and success attracts copycats. So there's been a lot of success in cell therapy, especially in cancer. In other areas, we haven't had as many breakthroughs. So that's uncharted territory, and that represents an opportunity. But in oncology, in the treatment of cancer, cell therapy is doing some amazing things. And that leads me to the second part of the answer, which is that using an entire cell can accomplish things that a small molecule cannot. Now, it's not going to be suitable in every imaginable disease or every imaginable injury or setting, but the power of using an entire cell, more like a transplant, rather than administering chemicals, individual molecules to people, I think that's really what underlies the power of cell therapy. And if you look at something like bone marrow transplant, right? Massively successful for decades. We know it works. So I think there's a lot of reasons to for people to have those very exciting projections about what the future is going to bring in cell therapy as we continue to sort of unlock the secrets of it.
So how is Lineage differentiating itself in this kind of bleeding edge space? I mean, there's so much interest, there's so much capital pouring in. You've talked a bit about the whole cell approach. Is that essentially, is that kind of one of your big differentiators?
That's one of them, but all of the cell therapy companies are using whole cells. But where we are different is actually, it's in the word different. We use differentiated cells. So what I mean by that is that there are a lot of cell therapy companies and cell therapy clinics that use what are called stem cells. So those are undifferentiated. They're sort of, it's an unwritten script. It's a blank cell, and we don't really yet know how and where to use them. And so people are injecting those cells into their knees and all over their bodies to see what can happen. We don't do that. We never put a stem cell into a human being. What we do is we use a stem cell as starting material. And from that starting material, we manufacture the specific cell type. So if you need retina cells, we'll manufacture the retina cells and transplant those. So just like flour can become a cookie or can become bread, and those are different things and you use them for different reasons, stem cells can become other cell types. And so that's our edge, is that we make specific cell types and then use those specific types of cells that you need as the medicine for the body.
Interesting. So one of your lead programs, OperaGen, is being developed to treat AMD, which, if I'm not mistaken, it's a thinning of the cornea among men, causes blurred vision and eye dryness, if I'm not mistaken. How is can you provide some background on how OperaGen is addressing that, and how widespread is this? I think I know people who have suffered from this.
This is one of, pardon me, this is dry AMD stands for dry age-related macular degeneration. So this is one of the leading causes of blindness. It's estimated about 12 million people in this country have it.
Wow.
And what this is actually it's characterized by the death of specialized retina cells called RPE. So in the back of your eye, the RPE cells perform a lot of critical functions that basically permit you to see things. But as you age, especially as you get into your 70s and your 80s, those retina cells, they're working really hard and they get tired and they die off. And so when they do die off, you lose your vision. Primarily, you lose your central vision. So your ability to recognize faces or to be able to look at your phone, read words in a book, you lose that central vision first. And as those retina cells die off and continue to die off, it continues. And incredibly, despite being one of the leading causes of blindness and a fairly common condition, there are no FDA-approved therapies. If you are diagnosed with dry AMD, your ophthalmologist will tell you, quit smoking and eat vegetables. That's all that really they have available. So what we are trying to do is we will manufacture replacement cells and we'll transplant them to your retina. And in doing so, we're looking to slow that disease process and even potentially reverse it.
It's interesting. So it's something that up till now has maybe been put in the category of these are the costs, these are the ravages of aging. There's not really anything to do about it up until now. Now there is, of course, something that can be done. That's very interesting. So how does your approach differ from others in terms of clinical development? I think you just touched on it. You were talking about a retinal regeneration.
Yeah, this is this is really the most important thing that this company's been able to accomplish. The human beings do not have the ability to regenerate retina. If I cut my skin, right, it'll heal because I have that healing capacity, but I can't do that with my retina. When those retina cells die off, they're gone forever, irrevocably. So what we have been able to show is that that little wound in the back of the eye that starts as a tiny little pinpoint, and it gets worse. They largely grow outward, right? So it's almost like one of these big forest fires that we have here in California. It just kind of randomly spreads out, and of course that kills your vision when it hits the critical part of your retina. So what we have been able to show is that we have been able to actually transplant RPE cells and recover critical layers of retinal tissue in the eye in places where it wasn't present before. So this is kind of like the starfish growing the new arm, right? We're transplanting those cells. They are integrating. They are not being rejected. We've had 0 cases of rejection across 24 patients that have been treated. And we've actually seen several patients who have literally had an area of atrophy or an area of damage get smaller. So it's sort of like a healing of the wound. That's incredible. It doesn't happen naturally, and no other company has ever shown that to be possible. So we're really excited that. But what really matters even beyond that is, can you see better, right? That's what the patient cares about. Everybody would like these wounds to go away, but ultimately it's my ability to see. I mean, what good is it to live to 120 if you're blind at 80, right? A third of your life spent blind. That's frustrating. So we also actually just earlier today reported that we are seeing statistically significant differences in visual acuity. And this is assessed by a standard eye chart, reading letters on an eye chart from a distance. We have seen statistically significant differences in treated eyes compared to untreated eyes, because as you imagine, most people have 2 eyes, and you treat one so that you can compare the other. So we're really excited that we're seeing both anatomical and functional improvements in individuals with this condition.
Wow. I mean, it's amazing, really. We're talking about the kind of thing that would have been considered miracle medicine, 10 years ago, 20 years ago.
Mm-hmm. Yeah, a good friend of mine's a best-selling sci-fi writer, but he used to do a job similar to mine, and we joke about it. It almost sounds too good to be true. But the amazing thing about the eye is you can take pictures, right? You can do imaging, so you can put a camera up and you can actually see the area of atrophy on a very fine level and all those little layers of retina. So it's not one of these conditions where you say, well, how do you feel, Justin? Do you feel better today or do you feel worse today? That's very subjective. These are objective pictures just looking at the anatomy. And the anatomy, if it changes over time, you can trace that. So it really is powerful if you're able to show those differences in these imaging techniques that are available for viewing the retina.
Justin's feeling old almost every day. So maybe I'm hoping that you'll catch up with my aging process, and then you can help me.
We'll get a few more cell types going, whatever ails you. Give me time.
Exactly. Just all of them. I'll just take a general lineup of whatever you got. I understand that you've got some specific milestones for OpRegen. What should people be looking out for this year? Next 12 months?
Yeah, a couple of them in the very near term. Before the end of the year, we expect all of our patients will reach at least 12 months of follow-up. So that's a very common clinically relevant time frame. So we'll do a data update with everyone having at least 12 months of follow-up, all 24 patients. Some of them, by the way, are out now 5 years or more. The other thing that we'll do is we will be participating at a major medical conference called AAO. That's probably the biggest ophthalmology event of the year, and so we'll be able to share our data at that conference. Wow. We are going to be interacting with FDA around the end of the year and additionally into next year on a couple of things that are important to the program. So there are a lot of important events coming up for the OpRegen lead program OpRegen.
Well, that's amazing. So I understand also spinal cord injuries. I mean, honestly, spinal cord injuries are probably one of the most discussed usages, sort of the go-to example for how a cell therapy, regenerative therapy can help improve lives, obviously, because spinal cord injury can be so incredibly debilitating. Can you tell us a little bit about what you've been doing in testing around spinal cord injuries?
Yeah, this is, I mean, literally the clinical program that we have right now, where 25 people have been dosed with our spinal cord program. It's literally the very first clinical program to be supported by CIRM, the California Stem Cell Agency.
Mm-hmm.
So it really is sort of the prototypical use. And what we're doing here is we are manufacturing the cell type that is that comprises your spinal cord. And that's important because that is the area that gets damaged. So if you think about sort of, the car crash, the diving board accident, typically young men are the ones that are suffering these injuries, and a little area of damage, a little wound, just like I was describing the eye, but now it's in the spinal cord, that wound will form and the cells will die. So we manufacture those cells and we administer those into the spinal cord. And what we're trying to do is provide that electrical connectivity between your brain and your upper extremities in particular, because even just a little bit of movement, right? If I'm able to just move my wrist, back and forth like that, that doesn't seem like a big deal to you and me, but that's an ability to move your wheelchair. So there's a huge opportunity to create a quality of life. And the reason why this one is so special and near and dear to our hearts is that no one ever thinks they're going to get a spinal cord injury, right? No one ever thinks that routine epidural is going to make them paralyzed. No one thinks they're going to, hit a deer and wreck their car and be quadriplegic. So it really is robbing people of something that they don't deserve to be robbed of. And so we're working very hard to move this program forward. And in so many ways, it's similar to what we're doing in macular degeneration. Make the cells that you lose, put them in there, make sure they're stable and they're not rejected, and maybe that can lead to important clinical outcomes and benefits.
That's amazing. I mean, every time you do an epidural, they say something like 1% chance. And honestly, 1% chance, that's still uncomfortably high. 1% chance is fairly, that happens all the time, in other words.
Sounds great until you're the 1%. And then you say, oh, now I care about this. So there are about 18,000 serious spinal cord injuries in this country every year. So that's a lot of 1% that are hitting.
Right. Do you want to tell us just a little bit about VAC? I know we're running out of time, but that is your third major program. Just go ahead and give us a quick summary of what that's about. I believe we're running out of
Yeah, no, real quick. We manufacture a third kind of cell. It's one of the cells of the immune system called a dendritic cell, and it's responsible for, those cells are responsible for giving information to your immune system. So we've all learned about COVID and vaccines and how they work now. It's the same idea. You can select an antigen, you select information, you put it in a dendritic cell, and you put millions of those dendritic cells into a human, and you're trying to boost their immune response so that they can fight that tumor and, frankly, live a longer life.
That's great. Thank you so much for sharing the information with us, Brian. I really appreciate it. It's very exciting stuff. Brent's on now with a cane or a broom to off stage. That's his job.
That is not true.
But figuratively.
The figurative cane.
Thank you so much for being on to speak with us, Brian.
It's my pleasure. Thanks for the opportunity and interest, gentlemen. Have a great afternoon.
Thank you. You too.
Really exciting stuff, Justin. I wouldn't give you the old heave ho or the cane when we're talking about absolutely life-changing stuff like this.
This is our special opportunity to meet, Brian. Brent, we'll always have this.
All right, sir. Well, thank you so much for hosting that, and I'll see you at the next BZ event.
Thanks, everyone. Talk to you soon.
It's a good guy right there. We're gonna do our second Slido poll for the day. We haven't had a chance to get to these, but that's okay. We're going to hit a couple real quick. A daily chart of a stock closed yesterday at $12. Today, it opened at 10 and it closed at 13. Based on this information, today's candle should be green or red. Go. Answer the question now. Next question. An in the money blank option means the option holder has the opportunity to buy the security below its current market price. I'll read that one more time, and I'm going to hide my results. So it's basically like me covering my sheet in high school class. in the money blank option means the option holder has the opportunity to buy the security below its current market price. Is that a put option or is that a call option? And super quick reminder, participate in our Slido poll here today. At the end of the event, we are going to announce two winners of a Benzinga Pro 1-year subscription. Let's get back to the fun. Not that those slides aren't fun. Not that those polls aren't fun. But let's get back to the presentations here. Next up is a company called Biocept. It's ticker BIOC on the Nasdaq. And we have here the president and CEO of Biocept. It's Mike Nall. Mike, there he is.
Hi there. How are you doing?
I'm doing very well today. I will let you have the floor. You have a very nice looking office there, and I can see your slides. So it looks like we are all good to go.
Yeah, sounds good. Well, we're excited to be here and tell the story of Biocept, where we're delivering personalized medicine through this idea of a liquid biopsy. And before I get started, though, I'll go ahead and go over our forward-looking statements, encourage you to review the filings that we have at the SEC and assess the risks of investing in our company. So at Biocept, we're making a huge difference for patients diagnosed with cancer. And we've got patented technology that can isolate actual cancer cells or cancer DNA out of a fluid sample. Now, one of the big differences of Biocept's ability to do that is that we target not just blood like some other labs do, but we also can access this material out of cerebral spinal fluid. So it's interesting with the previous presentation I just saw, talking a little bit about spinal cord. And of course, CSF is the fluid that surrounds your spinal cord and your brain. And this is important for patients that are diagnosed with cancer because about 10 to 30% of the time, depending on the type of cancer, that cancer can metastasize and spread to the central nervous system and brain. So at Biocept, we're focused on helping those patients live longer lives. In addition, an important aspect of our company is that to assist in the pandemic, we started offering COVID testing last summer, and that's going to be a very large part of our business and helping pay the bills for the investments that we're making in our oncology program. So highlights of investment in our company, well, we're focused on high unmet clinical needs. So this focus on patients who are diagnosed with cancer and identifying patients whose cancer has spread to the central nervous system and the brain is really unique to Biocept and important to understand. This is a very large market called liquid biopsy, $17 billion plus according to analysts, and in fact growing as more and more technologies, more and more assays come out that can obviate or supplant the need for an invasive tissue biopsy. So liquid biopsies are a complement in most cases, but actually can replace a tissue biopsy in other cases. So this is an important advance for patients diagnosed with cancer. Now, we do have unique technology that informs these decisions. And in fact, we have 71 patents issued around our technology. And the testing is actually done in our own lab where I'm at right here today and where we've been throughout the pandemic because we've been doing COVID testing. And so this is in San Diego. We have specimens from all over the world, mostly from the US, and we perform them right here with our very hardworking team here in the laboratory. So first about COVID testing, then we'll spend the rest of the time talking about our important oncology offerings. But in COVID testing, like I say, it truly is paying the bills. We recently announced we've done 570,000 COVID tests now since we launched in July. We get paid about $100 for each one. So this has turned into a lucrative opportunity for us. And the important part is it's providing the funding for our investment in our future oncology clinical strategy. Now, when you look at what we're doing, it's PCR testing, and our turnaround time is very fast. Most of our client base is in the skilled nursing arena, but we also help the Community College Foundation, which we recently had news on. And in fact, it's been kind of a big peak, as people know, as the pandemic kind of took off back last fall. And then it started to come back down in Q2. And now all of a sudden, because of Delta, we're very busy again. In fact, the last time we reported an update, and about once a month, we try to report our volumes on COVID for folks so they get an idea of how things are going. We'd done about 500,000 back in mid-August. Then last week in mid-September, we announced it was 570,000. So 70,000 in just 1 month. So very busy right now with COVID testing. So you can see this volume growth here on this slide as we've gone up, and we talk about the reimbursement and how that's turned into real revenue. So getting to our core strategy, which is oncology, Biocept's focused on this continuum you see in front of you in liquid biopsy at the first two boxes: diagnosis and therapy selection, and response and monitoring for progression. We hope the patient's doing better, and we see the quantitative results go down in these patients, but sometimes they go up if the patient's doing worse. But that's called monitoring, and you would do that routinely over and over on a patient. In the future, we'll get into recurrence monitoring and perhaps someday even in screening, which are all exciting, important initiatives where liquid biopsy has a play. So the advantage is the ability to capture these cells out of the specimen. I know we just have 15 minutes, so I'm zipping through pretty quickly. This same deck is on our website, so you can review it in a lower way. We also have much more sensitive assays that actually get the sensitivity down to 0.05%. Many other tests are only at 1% or 0.1%, so we can find things others do not. And our branded test, and what's the most exciting offering that we have right now, is called See Inside. And that's actually a play on words. It stands for central nervous system, which means your brain and all your nervous system. And so the cancer metastasizes, spreads to that area, unfortunately, as the cancer becomes much more aggressive. And so that's what the CNS stands for, central nervous system. But we're also helping the physician see inside what's going on with these results. So that's what that means. So this is our workflow. I'm not going to spend a lot of time on that today, except to say that even the blood collection tube is proprietary to Biocept. It's a standard vacutainer tube, but the media inside preserves the specimen for up to 4 days. So we have time to FedEx it here. We have time to get it processed in the lab that way. In addition, we have time to even get specimens through customs from overseas that come our way. These are examples of actual cancer cells we've isolated and interrogated. And that information all gets then reported back to the referring physician, and they use that to make treatment decisions for their patients. So this is a great slide because it kind of just shows you what we're looking at. And so these are the tumor cells that are in blood or they're present in CSF, as you see in this diagram here, as well as cell-free fractions. So sometimes when the cells break down, the nucleic acid is released and then cell-free DNA is in there. We're able to isolate and interrogate that as well. So there's really three critical questions we're answering when it comes to See Inside. And this is, once again, the ability to do the CSF testing, the cerebral spinal fluid testing, to say, is there cancer present? So that's the first question. Is there tumor? And then, in fact, you see a cell over here that would indicate, in fact, yes, there is a tumor in that specimen we just got. Number two, is there a target to inform treatment decisions? So these little dots you see are examples of how we do the testing, that we look for certain genes. That means you can get on a targeted therapy. One of the most well-known targeted therapies you see if you watch football, and I'm a Kansas City Chiefs fan, being from Kansas City, so I do, you see Keytruda advertisements from Merck. And at the end of that, the guy will say, hey, Keytruda is indicated for people that have an overexpression of PD-L1. And so he'll say that real fast, just like I did. Well, that is the biomarker, PD-L1. And so we look for that biomarker as well as many others. There's a lot of biomarkers, a lot of drugs, such as Herceptin from Genentech, Tagrisso from AstraZeneca. You have to have this biomarker to get on those drugs. So we look for those biomarkers to find out the best treatment for the patient. Finally, is there a trend? So we monitor this over time. We hope the patient does better and their cells go down over time, but sometimes they go up. But we hope to see them go down. And that's the 1, 2, 3 approach with See Inside. So I'm going to skip forward a few slides. This is always meaningful, I think, to show how we're really helping patients. So this is a mother of two. She's in her 40s. It's a real patient. We're continuing to follow her. And her specimen showed up at Biocept back in July of last year in the middle of the pandemic. At that point, she had about 30,000 cancer cells in that specimen. That's just in a little 8 ml vial of cerebral spinal fluid. We found that she had a HER2 amplification, meaning she's a candidate for Herceptin therapy. So our physician put a little port right into her skull. The cannula goes right down into her brain. They infused the Herceptin right into her brain. And in fact, you can see she responded. And this is awesome. So without what we had done, she very well could have just been sent to hospice and would be no longer with us today. So instead, because when you get metastatic cancer to your brain from your breast cancer, in her case, it very often is end stage. But in this case, there was something her doctor was able to do about it, we found. And you can see her tumor cell counts came down month after month, and she stayed in remission. She's still in remission today and doing well on treatment. So this is a huge advantage. Everyone at Biocept's excited about all these cases we see. I encourage you to review, if you have an interest, a webinar we have on our website where we have various big industry KOLs. These are folks at Yale, at Northwestern, and at Barrows Neurological Institute in Phoenix. These are neuro-oncologists, key opinion leaders who are high on our test and advocating the use for their patients. So this tells you why. Well, the current standard of care only gives them a result between 40 and 50% of the time generally. We're finding results 75 to 80%. So in other words, doing much better than the standard of care, that sensitivity in action. We will be launching a trial next year, so more to come on that. So stay tuned for news as we launch our 4C trial, where we compare the standard of care to the standard of care plus our test, CNSide. And that will lead to, we hope, a high value reimbursement and adoption in the guidelines in the future is our goal. So it's a big market, as I said, and you can see here how the numbers roll up. So this is important to understand as you look at that. And there's about 200,000 patients per year that have metastatic cancer that progresses to the central nervous system. So when you look at monitoring plus diagnosis, it's a very sizable market. Here's our strategy to become the standard of care. As I said, engage these KOLs, as well as go on through our studies, get more data out there as we get CNSide into the guidelines is our hope. So it's done for every late stage cancer patient. Now, health plans are paying for this because being able to better manage the patient is always more efficient than wasting money and resources on a therapy that's not working. So we've been able to get quite a few contracts. In fact, we're partners with the Blue Cross Association and proud of that, as well as gotten numerous of the Blue Cross agreements. Now, I do have salespeople all around the country working very hard. We have about 12 of them working very hard out there. And we've got now people ordering the test from about 30 of the top academic institutions. A lot of collaborations, and one notable on this slide that I do want to tell you about is with Quest. A lot of excitement in the investors when they saw that announcement earlier this year that we had signed the deal. That's still scheduled to go live, by the way, in Q4. So stay tuned. We'll make an announcement when it does go live. We're in the process of integrating the computer, so it's easy for Quest to order that. And we'll be marketing our non-small cell lung cancer blood-based assay in this case through the Quest Oncology sales team. So we're very excited about that. A lot of patents, about 71 patents on what we do. Very experienced leadership team. We all have at least 24 years of experience in diagnostics, and in some of us case over 30 years, and in some cases over 40 years experience. So we've done this before successfully, and we're excited about doing it here at Biocept as well. A world-class board of directors, and I also encourage you, if you do review this on our website, make sure you look up these folks' names, our clinical advisory board. You'll see they're on the guidelines committee, and these are true opinion leaders that oncologists rely on to help inform their own treatment paradigms. So we're excited to have them as part of Biocept as our advisory board. As you see, this is our year versus year growth, and you can see we've grown a lot because of the COVID revenue, which we see right there. Saw a little drop like I talked about for the COVID volume as the pandemic subsided a little bit earlier this year. Once Delta came back, the numbers have gone up as we've been reporting. So my final slide, our corporate priorities: drive adoption of our lead product, CNSide. Position CNSide as the standard of care for diagnosis and monitoring of central nervous system involvement. Initiate that trial by Q2 of next year. Expand CNSide testing with additional tumor types. In fact, we have breast cancer and lung cancer validated today. We'll be validating melanoma as well as a pan-cancer offering as well in the coming months. Increase sales of all of our products. Entering into more and more additional partnerships, such as we've done with Quest. Secure Medicare payment for one of our assays. We have Medicare payment for most of them, but one we've been working on in partnership with a large company called Thermo Fisher, we hope to get done in the near future, as well as growing sales through our Quest relationship. So with that, happy to answer a few questions.
Really good stuff, Mike. I do have a couple questions here for you. So you just hinted at the types of cancer that CNSide you want to expand toward, but give us a little bit of insight about how you plan to reach the broader oncology community.
Oh, yeah, no, that's a great question. As I said, right now we're focused on what's called neuro-oncology. But if you're not in oncology, folks might not understand there's like subspecialties in oncology as you go through the cancer care continuum and eventually become a survivor. And I actually have some experience in that myself. So neuro-oncology are oncologists who specialize in cancer that's metastasized to the central nervous system brain. They also treat primary brain tumors. So someday in the future, we'll actually be focused as well on primary brain tumors as they're eager for us to get there. But when you look at the 200,000 patients that I talked about that have metastatic cancer that progresses to their brain, a large amount of those are in the two types of cancer we've already validated, lung and breast. The next most common is melanoma to go to the brain. And then after that is everything else. So that's kind of our way we're doing it. We're starting with the neuro-oncologists because they're seen as the experts and the thought leaders in cancer that does progress to the nervous system.
Sure.
Once we get them on board, as we are doing now, we plan then to go to the broader medical oncology community. And that'll be on to mid-year next year is the target for that.
Gotcha. Okay. And from our chat here, we have a question on the Quest Diagnostics relationship timing for that. Can you speak to, when Quest will begin marketing?
Yeah, we're still scheduled for Q4. So as I said, we made the announcement, we signed the agreement earlier in the spring, and we're in the process. With Quest, you need to be integrated into their own ordering system so folks can order the test, and also we get the order from them. Our reports go into their system and then go to the client. So that's being finalized right now. As soon as that's done, we'll be ready to go and get their salespeople trained.
Great stuff. And I think I would be remiss not to ask about the COVID side of things.
Sure.
Any concern with, you hinted at business for the COVID testing started picking up again when Delta started popping up. But I mean, any concern as we are now getting back into school, any concern for like an influx of need for COVID testing due to kids being back at school?
Well, that's what we've seen. And one of the things that we announced earlier this year that now we're really seeing the volume increase from is that we were one of 4 labs chosen for the community college system in California. That's 2.1 million students, faculty, and staff.
Okay.
And they're using us at many of the campuses here in Southern California. We actually put little tents there for swabbing, and we access the specimens for all the unvaccinated. It's required once a week for all the unvaccinated employees and students. So those specimens come to us from LA, San Diego, Riverside, a lot of the different community college campuses. So that plus the Delta is why you're seeing this spike in our volume right now.
And no issues with the team handling the capacity.
No, we built that. And the other piece about that, and I'm glad you brought that up, Brent, because it's not what we've built for COVID. We all hope COVID gets under control.
Certainly.
No longer a need for this in the future. We don't see that anytime soon. We've evolved our thinking. Who knew last year we hoped we'd be out of this by now. But now it looks like this is going to come and go as we maintain, for these different strains. But the investments we made are good for our oncology side too. It's all the same equipment, staffing. And in fact, when you do the volume we're doing, where we're doing tens of thousands, a week, we have to have automation. Before with our liquid biopsy testing, we were relatively small volume. We had a lot of manual processes. We've now moved to almost full automation. When somebody, for example, orders a test, instead of handwriting a requisition like we used to with the oncology, now it's all on the computer. That comes into us. There's a barcode at the client side. That goes on the specimen, comes in here, we wand it, then it gets automatically put into our lab as well as with automation. Then on the backside, reports go up in an automated way without somebody having to manually upload a PDF or something like that. So this has all been automated. This has only helped me with my oncology, with my relationship with Quest. So a lot of these investments that we've made because of COVID will really pay off for Biocept in the future years as well.
Excellent. So I just want to reiterate how you said it earlier was, the COVID testing paid the bills, but you're highlighting that there are absolutely direct benefits to that.
Oh, absolutely. It's provided this revenue source we didn't have before to invest in our core strategy. And we're investing in the clinical trial. There's a lot of ways we're using the revenues from COVID along the way. So we're thankful for the investors we've had and continue to have that get us there, and hope that they see the value in the way they're helping provide this needed service for folks over here in the West Coast. And actually, we get specimens from all over America, really.
Certainly. Well, it was a pleasure learning a little bit about Biocept and having a little bit of a conversation with you, Mike. Mike now, he is president and CEO of Biocept. It's ticker BIOC on the NASDAQ. Thank you so much, sir.
Thank you, Brent. Good to see you.
Yes, sir. Have a good day. Until next time. All right. We are going to keep it rolling, ladies and gentlemen. Next up is a company called Petros Pharma. It is ticker PTPI, and we have the president here, Fadi Bakhtar. There he is. Let's make Fadi bigger. There he is. That's better. How are you, sir?
Doing well, Brent. Doing well. How are you?
I am doing well. Thank you for asking. I will let you take it away. I see your presentation. It is looking great. So take it away.
Awesome. I appreciate that. Good afternoon, everyone. Good to be with you. Excited to tell you a story about men's health and Petros, the company that's going to aim to revolutionize how we approach men's health and the therapeutics that we offer this market landscape. The bottom line is this: the goal is to help enable men to live their journey to its fullest potential. That's a massive undertaking, but believe it or not, it is currently underserved significantly. We'll dive in as to why that is and how we think we can change it. So some of the things we'll be talking about will be factual, will be data-based. Other things will be forward-looking, ambitious, and aspirational. Please do reference our 10Q for both Q1 and Q2 for any specific specificities that you're looking for. And certainly we'll open up for questions towards the end of the presentation. So let's dive in. How is Petros performing in 2021? We're excited to say that as of the first half of 2021, we are 106% year-over-year growth. And this is going to be primarily due to our flagship pharmaceutical asset named Stendra. It is a prescription-grade erectile dysfunction medication. I'll urge everyone to check it out at stendra.com and learn a little bit more about the asset and the drug and the product, and you'll see all of its features and safety information accordingly. Additionally, we have a device portfolio that contributes to this number. And we're excited to say, come this first half of this year, we are doing extremely well. So we have revenue generating assets in market today. We'll dive deeper into what we hope to do with those assets and beyond. And we're excited to talk about that story as well. Quickly to mention, the ED market is not done. We are 2 decades, a little over 2 decades within the ED market, and it continues to grow. And it's projected to grow to unbelievable lengths. We're talking, it's about $1.5 billion today in the US. It's anticipated to grow to 4.7 billion globally by 2026. So the ED market is not done. It has a lot of growth to be experienced, and certainly the patient volume, the patient adherence and following has a ton to be improved upon. You'll see what I'm talking about in a quick second. So in the US, we have 30 million men estimated to be suffering from erectile dysfunction in this country alone. That number globally is about 150 million men. With those 30 million men, you'll be surprised that current estimates estimate that about 25% of them have actually sought pharmaceutical therapy. The rest remain silent sufferers. That is to say, 25% of the 30 million men in the US are estimated to have sought treatment. Here we are over 2 decades beyond the launch of Viagra or Cialis or Levitra, and yet still such a small fraction of patients have mobilized to seek therapy. That is a massive and unacceptable, underserved community. Now, we'll talk about why we think that is. Another interesting emergence is that in this day, in this current modern day, we're seeing that 1 in 4 ED patients are actually coming to the forefront. They're under 40 years old. At some point throughout history, we determined that ED was a 40-plus condition. Today's ED market is pointing to actually a younger demographic. We're seeing individuals under the age of 40 seek treatment and claim they have erectile dysfunction. That tells us that the market is actually even greater potentially than the 30 million men in this country suffering from ED. A lot to do, much to do in this patient population. So some of the pathways, some have coined this generation to be the 4th industrial revolution. The technology is unprecedented. The opportunity to put control in the patient's hands, to control their healthcare, is like never before. Some of those pathways that we seek to leverage and to absolutely utilize to reach greater patient populations, put more control in their hands, hence the ED market. Some of those pathways are ensure non-prescription utilization of prescription medications. The FDA has been cited speaking of this pathway since 2014. It continues to be an opportunity to leverage technology to allow prescription-grade medication to be offered to consumers without a prescription based on integrated technology. We'll touch on that in a second. Additionally, over-the-counter prescription switch. Many of you may have heard the significant evolution in prescription drugs that have gone over the counter. Some of the more notable ones, you'll recall Flonase, for example, Nicoderm, from acid reflux to a multitude of products that were at one point prescription and then were switched to over-the-counter. This evolution, this transition from physician-mediated to consumer full control and on-demand acquisition is remarkable. That is an area we're also looking to speak to and develop towards. We'll talk more about that in a second. In addition, when we talk about blockchain technology, we talk about integrated health records, we talk about universal health records. You're looking at an opportunity today to establish products that put therapeutics within the patient's hands, leveraging this technology. It does touch on the insure. So when we talk about Stendra, when we talk about erectile dysfunction, we talk about an underserved marketplace, keep these channels in mind, because these are channels that not only do we have experience pursuing, and our executive leadership has experience in leveraging, but we are looking to do that in an unprecedented way within the ED market to expand our reach for men who continue to be silent sufferers. It's an exciting process. Let's dive into what Stendra looks like and what it is. It's a distinct and patent protected, it's called a PDE5 inhibitor. That's the class of drugs that Viagra, Cialis, Levitra, and Stendra belong to. Stendra remains patent protected, and it is a distinct molecule. It's currently in market, as we talked about. It is generating sales revenue, and it continues to grow quarter over quarter. We're excited about that. We're excited to also, in the near future, announce some key partnerships and collaborations that we've been able to work with and achieve tremendous heights with. So we're excited. Stay tuned for those announcements. I think it'll demonstrate Stendra's value in the marketplace and the consumer's voice and appreciation for what Stendra has to offer. We seek to take Stendra and to make it the first ever potential over-the-counter medication, prescription-grade erectile dysfunction available in this country. Currently, there are no prescription-grade erectile dysfunction medications available over-the-counter today in the US. The UK, Viagra was able to go over-the-counter. Behind the counter in the UK's, their terminology is a little bit different, their process a little bit different than ours, but there's nothing like that here in the US. When we talk about stigma and we talk about the hurdle men face when they suffer from erectile dysfunction, such a personal issue, and there's such a stigma to get them to make an appointment with their physician, to basically tell the physician the issue and be vulnerable on that front seems to be a significant hurdle for men. It's an ego bruising process. Fortunately, that's how men operate. We seek to remove that hurdle. Treating erectile health in this country, actually in any country, is critical to men's health. Critical. This is how you get men to open up to other ailments and issues, by engaging them on their erectile health. Today, that's not happening. By allowing prescription-grade erectile dysfunction medication available and accessible without the need to make an appointment or see a physician, will mobilize men to seek self-care to treat their erectile health, and may open the door for them to seek the same confidence for other ailments they may be confronted with. Nevertheless, our goal, our mission, is to bring Stendra to over-the-counter status within this company, in this country, alongside the FDA. FDA will guide us through this process. They have specific processes to follow. We seek to follow those processes, and we have a unique and distinct team, as you'll see, that can help us get there. Non-prescription is another option, leveraging the insured methodology. So we do have other alternatives as well that provide the same accessible, unhindered access to erectile dysfunction medication, prescription grade. So there are many ways to approach this. Over-the-counter is our premier. Imagine for a moment if you have a prescription grade erectile dysfunction medication available at your local pharmacy. And you'll notice today Plan B, one-step Plan B. We'll talk about how we know all about that asset, and our leadership knows all about that asset, our board. If you go to any CVS today, or Walgreens, you'll see one-step plan be available on the shelf. That was a prescription medication that recently went over the counter. Imagine the same concept, that Stendra, the first ever prescription grade medication available over the counter in a like way. It's incredible to even visualize and imagine, because intimacy happens to be, an ad hoc and unpredictable circumstance. So excited about that prospect as we proceed. In addition, so we're looking to unearth a massive population in the erectile dysfunction marketplace by unhindering access to a prescription grade ED medication. In addition, we seek to also address a massive market in this country that has not yet been fully addressed, and that is Peyronie's disease. If you have never seen, heard, or researched Peyronie's disease, it may be worth your while to check it out. Peyronie's disease is a fibrotic condition. Essentially, they're micro injuries, often acquired during sexual engagement, with small micro injuries. And in those micro injuries, with buckling and the like, scar tissue begins to form, and that scar tissue turns into plaque, which then begins to cause deformities in the penis, whether it's curvature or hourglass deformity and variations of the sort. It's an incredibly debilitating condition. It has an incredible impact on a gentleman's psychosocial and psychosexual disposition and their partner. Sat through many market research sessions where we saw couples talk about this condition in absolute seriousness and severity. It is acute in terms of its emotional disposition and imposition on a couple, and yet there are no topical, non-invasive therapeutics, FDA-approved prescription grade available to this patient population today. Current modalities are a series of injections. Those tend to be the gold standard, invasive surgery, and or devices for traction control. There's nothing else available. So if a gentleman begins to experience curvature, plaque formation, there's nothing they can do but wait and see. And in that waiting and seeing, that plaque continues to solidify, sometimes calcify, and then they'll be subject and available to more invasive therapy, such as the injections, once it's a palpable plaque, for example. Or if it's calcified and ossified, it would have to go into surgery. And that's a patient's journey. Once they go through surgery, you can imagine things are never quite the same again. We have exclusive licensing rights to a formulation currently coined H100. It's a gel, it's a topical formulation, and stands to be the potential for the first ever topical formulation in Peyronie's disease. In this pilot study that was conducted to assess whether or not H100 topically administered could impact Peyronie's disease in the active phase, especially, also known as the acute phase, we found some strong endpoint results. So 22 patients in this prospective randomized double-blind placebo-controlled study. So it's well-controlled as a pilot study. It improved mean stretch penile length, increased it by 22%, reduced curvature, penile curvature by 40%, and reduced pain level by about 85%. These are strong and promising preliminary endpoints. We look to bring these data to the FDA and work with them to develop a developmental roadmap moving forward. We're excited to bring this to market as the first ever non-invasive therapeutic and to help mobilize men, especially in their silent suffering phase where they don't know what to do or where to go. And many don't even know that they have this condition. Only recently has this disease gained greater awareness and understanding. This is one of our core missions and assets we look to bring to market. We think it'll be a landmark achievement. Our device portfolio. So erectile dysfunction devices, therapeutic devices, medical grade, have been around for about 2 decades. Osbon Erecade, one of our brands, has been one of the pioneers. We believe in some cases, according to some record, we were actually the first medical device that was brought to market and has continued to be the pioneer flagship within this space. Many physicians recommend it, many physicians prescribe it, and it's called a vacuum erection device. And it essentially induces by vacuum pressure, oxygenated blood within the penis to form an erection. You can do this by therapy, or you can do it for sexual engagement. A secondary line that we have is POSTEVAC, vacuum erection device as well. So we have 2 leading brand names within this medical device space that continue to be gold standards. They continue to be common practice and first-line therapy, as well as combination and follow-on therapy. Also rehabilitative therapy, when you think of radical prostatectomy and or Peyronie's disease. We're excited to have these devices in our portfolio, and we look to enhance them moving forward. We think there's a significant degree of potential to enhance these and make them 21st century friendly. I'd like to take a moment and now highlight some of our board members and what they offer our story. So you may think when a person comes on presentation and says, we'd like to take our prescription medication from prescription to over-the-counter designation, it sounds like a pretty acute lift and a pretty significant endeavor. When you think about the individuals behind this mission, so we have John Schulman, who is founding partner of Juggernaut Capital Partners, has brands such as Zoa and Voss Water, and tremendous partnerships such as Dwayne "The Rock" Johnson, with tremendous experience in consumer reach and consumer value. And you look at one of his portfolio companies titled Foundation Consumer Healthcare, led by Greg Bradley, also on our board for Petros Pharmaceuticals. You have John Schulman and Greg Bradley on our board that work to bring Plan B one step from prescription to over-the-counter designation. And Greg Bradley and his team took Plan B one step, and it's now currently among the highest, if not the highest selling SKU in the US. Remarkable. And it demonstrates how it mobilizes the patient, the consumer, by simply being accessible, on demand, and as needed. A remarkable team with remarkable experience and talent, and we're excited to have them on our board. The full venture of our team, I'll quickly touch a few things on my end. I have been fortunate enough to be with tremendous companies such as Merck, Auxilium, Endo, most recently Adapt prior to this venture, where we brought innovative, sometimes and often first-in-class modalities that became leaders in their marketplace. Most recent with Adapt, with Narcan nasal spray. Excited to have been a part of that movement, and excited to have been a part of the advocacy behind that patient profile and that patient type. I think we have an opportunity here at Petros Pharmaceuticals to tell the men's health story, to bring therapeutics not just to market, but to unhindered market, and empower the consumer to self-care. I think this team, of which I'm grateful and humbled to be a part of, John Schulman, Greg Bradley, and myself will fight hard to get this done, both for Stendra, our medical device, as well as future assets that we're looking to put in our portfolio. With that said, Brett, I'll hand it off to you for Q&A.
Yeah, sure. I thought you looked familiar, Fadi. I think I might have recognized you from one of these other companies.
Yeah.
Just one quick question, and I think you had a slide where you were kind of hinting at it a little bit, but besides when it comes to erectile dysfunction, besides an OTC solution, is there anything else that Petros is doing to, reassure men?
Absolutely. So we still promote to physicians. We still have digital content, and we try to make the message known that you're not alone. And this is actually far more ubiquitous and common than a gentleman could realize.
Sure.
In addition, we're partnering with other organizations. So stay tuned. We will be announcing some of those partnerships. In those partnerships, we do look to destigmatize the message and the process of treating one's erectile health.
Excellent. Thank you for answering that, sir. We are going to wrap it up here. Petros Pharma, it's ticker PTPI, and we had the president and chief commercial officer, Fadi Bakhter, with us. Thanks so much.
Thank you, Brent. Good to be with you.
All right. Have a good day, sir.
You too.
And super quick heads up, we are going to be switching it up here in about 30 minutes or so. We're going to be getting some technical analysis. And right before that, we'll do another quick Slido poll. We'll get another couple quick questions in there. Some technical analysis coming up from Benzinga's own Mark Petrino. Again, that's in about 30, 40 minutes. So definitely stick around, and definitely stick around for this next interview. Really popular company. See the ticker all the time. It's Hoth Therapeutics. It's ticker HOTH. And we have here the CEO of Hoth, Rob Nee. Rob, what's going on?
Good to see you. Thank you so much for having us today.
Welcome, sir. You got your slides up there. I'll let you have the floor.
Excellent. Thank you so much. Thanks everybody for joining. Appreciate it. This presentation is on our website, also filed with the SEC. You can find it there as well. So there's a safe harbor statement just for review purposes. So I'll go into Hoth, where we are today, some of the drugs that are in the pipeline, some of the catalysts that are upcoming. So obviously we've talked about BioLexa in the past. We finished our first cohort of the drug in Australia of that trial. Went extremely well. We had no adverse effects. The Safety Review Commission has recommended to the ethics board in Australia for us to go to the next cohort, which will be patients that have atopic dermatitis. We expect to update the investment community on that permission and to start that trial in the upcoming week to 10 days. Talk a little bit about HT001, which is a very exciting drug for us. We talked about it late last year and this year as well. We filed our pre-IND with the FDA to start that study. That study is for patients who are going through chemotherapy who develop chemo rash. About 65 to 85% of patients develop some sort of skin toxicity while having these EGFR treatments. This category is brand new. Nobody is on the market or has developed anything for this. Patients are currently treated with corticosteroids and other over-the-counter or prescribed medications. None of them have worked or given patients relief. So we're super excited about this. The therapeutic was developed at George Washington University. Our team then took it forward through more preclinical testing. We finished up recently our toxicity testing for our formulation. Super excited about this. Hope to have some updates on that in the weeks to come about starting the actual trial, the phase 2 in patients. Talk a little about the Alzheimer's drug, and it's interesting, the same drug that was developed for chemo patients, we found out while given to mice, it had very good effects on Alzheimer's for plaque buildup in the brain and as far as cognitive and behavioral function. So in the next week, we look to release our preclinical studies talking about how the drug worked in Alzheimer's model. So we are currently evaluating that data and hope to share that with the investment community in the week to come. Acne and psoriasis, this is our VNLG-152 drug out of University of Maryland. We have finished most of our preclinical studies, working on our formulation. Look forward to filing a pre-IND in the first quarter with the FDA. We've also had conversations internally here about trying to possibly out-license this drug. We think it's super exciting because it has an anti-inflammatory platform, which we believe, larger pharma companies would find of interest. We're also using the same drug for IBD as well. We did a study with Reprocel, which we announced. We'll have further data on that in the next month or two. Then the asthma allergy drug, that's out of UNC. It's also with the mast cell-derived cancers and anaphylaxis. We're currently in preclinical studies on that. We're talking about possibly filing for orphan drug status for that as well. There's an interesting paper that was reviewed that came out about a month and a half ago from the researcher, Dr. Glenn Lind, which you can find on our website. And VAP-HAP is licensed from the U.S. Army. We're currently working with them for our next steps, along with the University of Cincinnati. We have some data which we'll be looking to share in a publication and with the investment community in the next month to two. The ZPOS cutaneous lupus, we're working with our partner Xylo. Xylo finished their preclinical mouse studies. They should have some more data for us in the next 60 days. The COVID-19 drug that we licensed out of VCU, Virginia Commonwealth University, we announced some data as far as how well it worked in a Delta variant. we hope to have some further data on that also in the next 60 days. Vaccilarate is a partnership we have currently being developed at Mass General Hospital under Dr. Mark Poznansky. The company, us as a whole, we invested in that. We're on the advisory committee trying to put that through further animal studies, but is actually Vaccilarate runs that trial and program itself. So that's kind of an update on the pipeline as a whole. Talked a little bit about BioLexa, where we are for moderate atopic derms, and we'll start that second cohort, as I mentioned, in Q1, pending approval from the Australian Ethics Board. BioLexa, big market opportunity here. Atopic derm, there's lots of products out there. Most of them are with corticosteroids. We're a non-corticosteroid play. So it's kind of interesting for, pediatric patients that parents don't want to apply a corticosteroid that has thinning of the skin and also corticosteroid addiction. So we think this is an interesting way for doctors to address atopic dermatitis in patients who are, in that pediatric stage. So as we talked about, we finished the first cohort. We got HREC approval for the first 1B. We had the site recruitment. We dosed our patients. We had no adverse effects, which was a real plus and, a real milestone for Hoth. And the clinical design you can find on this presentation if you'd like to go through it. So we know the proof of concept works. We know either alone, DTPA or gentamicin do not have the same effect as a combination reduced bacteria for LOQ in patients. We know our combination works best. We talked about the planktonic and biofilms, how it really brings that down, how patients who are having flare-ups or whether they're using it simply for control of atopic dermatitis, we know we've gotten really great results on that, and that a combination of this drug has really shown to be effective. H2001 is, once again, we talked about the skin toxicity market. In 2018, this was a $52 million a year market. Now they're talking about a $391 million by 2030. 3 new EGFR drugs were recently approved by the FDA, all shown the same biggest side effect, skin toxicity and this chemo rash that takes place. It's an unmet need. There's no current drugs on the market that simply go after this alone. Talked about recent milestones. We had our pre-IND, final formulation was selected. Our IND enabling studies are initiated in Q2. We're looking for, our clinical trial early 2022, and we're using Worldwide to help us run that trial of patients. Once again, you can kind of go through here and talk about the randomized placebo-controlled study we did, which we shared with investors in the past. You can take a look at the mice here, and show how well they did as far as, these induced skin toxicity in the rats and the mice as well. And, if you look at the bottom, you'll see how well they cleared up these chemo rash that took place. This picture really gives a good idea of how well the drug works. So recent milestones, upcoming catalysts for BioLexa and H2001 are on this screen. Kind of talked about it at the beginning, how we'll start that trial in the second cohort of patients for BioLexa. H2001, we'll start that trial in 2022, which we're really excited about in Q1. So H2003 preclinical results showed really good the ability of H2003 to inhibit TLR. This takes place in all acne cases. So inhibiting TLR2, stopping that pathway, suggests this could be a really great therapeutic for acne. And if you look, there's not a lot has come on the acne market in the last 20 years. So a drug here, it's a topical that you wouldn't have to get a blood test for patients who have, high acne issues. This could be something that the market would well receive. Our mouse asthma model study we talked about for H2004 is effective in reducing these inflammatory cells around the bronchioles. So we shared that preclinical work as well. The milestones coming up, as I mentioned, humanized mouse models, further preclinical studies. Vaccilarate, we're hoping for the pre-IND submission by the end of this year. We'll have an update on that, as I said, in the month or two ahead. So our early preclinical results in the programs of the inflammatory bowel disease, we talked about the HT06, which we licensed once again from the U.S. Army. We're doing some studies out of UC on that, University of Cincinnati. We hope to share that data, as I mentioned, in the next 30 to 60 days. The Alzheimer's disease, we recently finished some of the preclinical work out of University of Washington in St. Louis, Missouri, WashU. Shown, we'll share that data. As I said, we're currently analyzing it. We hope to have that data out in the next week to 10 days. HT-KIT, we've talked about in the past out of NC State, how well that drug has done, and we hope to file for orphan status for that. COVID-19 treatment prevention, as I mentioned earlier, at a Virginia Commonwealth University, shown really good results in preclinical with the Delta variant. So we're excited about those results. And you can find this in the presentation online, giving you an update on some of the catalysts going forward. The diagnostic device we talked about that we actually licensed from George Washington University, it's a breath test that was being developed for COVID. So we've taken this and now we've hired a firm to work with us that's come up not only with using it for COVID, but possibly be able to use it for flu and other testing as well. So breath rather than blood work, which would be a real life changer for a lot of people who have needle fear, and also for lab analysis where it would take seconds or minutes as opposed to sending out blood. So we hope to have an update on that probably in Q1. So the investment highlights, two of our drugs currently in clinical stage of development. We've got this diverse and robust pipeline. Clean financials, we've got cash on hand of around $15 million. Takes us, for quite a while. Our management team and board of directors and scientific advisors out of Weill Cornell, out of University of Cincinnati, WashU, and others. And if you all like, you can please feel free to go through this presentation once again online and email the investor relations if you have any questions or comments. Hope that was a good overview for everybody and give you an update on where Hoth is today.
It was, Rob. What is the, if you have it off the top of your head, what is the, you said to email investor relations. Do you know what the email is, just so we can get it?
Investor relations at hoththerapeutics.com.
Super simple, right? If you don't mind, can we get that up on the screen? Good advice to forward people along to, the people that know how to handle it. I have one quick question here from the audience. And it was from NCAL, and NCAL didn't specify. I believe they were asking about BioLexa. I know you said you were going to be given an update in the next 10 days or so.
Yes.
Any partners? Any partners that are working with you for
that's something that we're working on internally, on licensing a few of our therapeutics. We've had this conversation in the past where investors have asked us about this, because not only does it bring in value for the company or whether somebody wants to own it or out-license it, when you deal with big pharma, it does take a little bit of time for them to analyze your data and move forward through the business development process.
I gotcha. I think it's pharma investors' favorite question to ask. So
it's a great question. I totally understand.
Certainly. You probably knew I was going to ask that one.
I think, the one takeaway I'll say is, obviously, as a company, we're very excited about our pipeline. The company's never been in a better position as far as pipeline and cash. Our stock doesn't reflect it, which is disheartening for us, for our investors. And, I'm one of the biggest shareholders myself. But I will tell you, the company's doing extremely well, and our pipeline is moving along quickly.
Gotta love the confidence, Rob. Thanks a lot, man.
Thank you
Rob
so much.
Nee, he is CEO of Hoth Therapeutics. It's ticker HOTH. We will see you soon, I'm sure, Rob.
Great. Thank you again. Take care now.
All righty, ladies and gentlemen. Do I got to do any housekeeping things here? No, I don't think so. I think we're just ready to go into the next one. I do want to ask one super quick question, a little bit of feedback from the audience here. Benzinga events team is planning their events for 2022 and 2023 already. Any recommendations on a next BZ conference like this, where you can do something virtual, a sector. I want to hear any ideas for specific sectors that the audience out there would love to hear from. We just did our EVCon last week or 2 weeks ago. Love to hear some recommendations on a next conference. Let's keep it rolling here. We have Newtopia coming up. It is ticker, I see OTC ticker NEWUF. And we are going to be speaking with the founder and CEO, Jeff Ruby. And I see him backstage. There he is. Hey, Jeff.
Hey, how are you?
I seen you backstage. I think you were debating going with the vest or without the vest. I like the vest. I just wanted to let you know.
You know, I'm just wondering if the color pop was too much for the audience, but I'm going to stick with it.
If I'm an audience member, it's not affecting me. I see you have I see backstage. Oop, there's the presentation. I will let you take it away, sir. And I gave the OTC ticker, but I see you have a TSX Venture also.
Yeah, we're Canadian founded with a sort of public on the venture exchange, but also just completed our OTC QB. So you know, both the Canadian and the NEWUF in the US work.
Sure. Well, congrats on the OTC listing. I will let you have the floor.
Thank you very much. Really great to be with you today. My name is Jeff Ruby. I'm the founder and CEO of Newtopia. And just make sure I got my slides moving forward here. There we go. We are a tech-enabled habit change company that's focused on disease prevention. And what we're doing is we're partnering with health insurers to both keep their members healthy and to lower their cost. And the focus of the platform is really on incrementally changing habits around nutrition, exercise, and mental and emotional health so that we can reduce the risk of physical disorders, including obesity, diabetes, heart disease, stroke, cancer, musculoskeletal issues, and also mental and emotional health issues, including diabetes and anxiety. And as a provider of whole person care, we're focused on the 80% of the insured population that have got elevated risks. And in partnership with health insurers, our clients include groups like CVS Health today, JP Morgan Chase, and Accenture as examples in the Fortune 500 set. We've been able to prove that within a year, we're able to reduce both the physical health risks and the mental and emotional health risks, driving a proven cost savings and ROI. And the best part is that those outcomes grow over time so that the quality of the risk reduction and the quality of the cost savings improves. It's a pretty massive market. Not much is standing in its way. And what we've learned through COVID-19 is that this focus on this at-risk population has become more material and more pressing for health insurers as it is a pretty giant unmitigated liability for them. You know, just to jump in, the problem that we solve is very much a problem of where the focus of U.S. healthcare, or what should more appropriately called sick care, is. You know, of the 3.8 trillion, which should arrive at about $4 trillion in 2021 of U.S. healthcare spend, most of that is on sick care. It's taking care of individuals who've already been diagnosed with an illness. And while we've got brilliant healthcare professionals, both doctors, health professionals, huge health systems, and providers who are doing wonderful jobs at both identifying, prescribing, and treating illness, what they don't do a great job of is offering primary prevention in the form of lifestyle management, and they're not really good at helping individuals change their habits. And we know that by simply changing the habits in and around nutrition, exercise, mental health, tobacco use, there's a massive opportunity to prevent much of the chronic disease and much of the $3.8 trillion of spend that's currently running in the system. And that's very much what Newtopia is focused on, to help health insurers reduce their costs and keep their members healthier. How we work is by really trying to implement or identify individuals who are at risk when they know they're at risk. And so what we're doing is we're leveraging existing tools that health insurers are using today. Those could be employers or insurers that are using tools like biometric testing, or they're using health risk assessments or claims data. And effectively what Newtopia does is we pull that data to identify the 80% of the population who've got these elevated risk factors. And then we make the invitation as they're learning that it could be leading to a heart disease or a stroke, or leading to a chronic disease like type 2 diabetes or cancer. We want to meet them in that moment of concern. We're currently seeing an enrollment of between 25% at the low end up to 75% of that at-risk population with certain incentives driving onto our platform. Once they do, our habit change methodology kicks in, which is really one size fits one. What we want to do is spend time getting to know each individual socially, behaviorally, and genetically. And we're really a pioneer in what we call genetic engagement. Genetic engagement is different from, we're not looking for ancestry, we're not looking at disease risk, we're trying to help the individual understand him or herself so they can stop blaming themselves, and also really understand what they can do to change the course of their habits, how to effectively empower them. Once we've done that learning socially, behaviorally, genetically, we turn to designing these experiences that are 100% virtual. They include the best of human with the right advice. They include the right technology. It's all mobile or web-based, which is effectively built for each individual to represent the right plan, and to curate this relationship with a health coach that we provide. It also blends the right wearable and wireless sensors, the right kind of gaming, and the right kind of social curated health community, all with the idea that the individual at risk is put in the center. We effectively become a student of that individual. We're not delivering a one-size-fits-one curriculum. We're not teaching a course. The idea is we're really trying to build the confidence and incremental habits of those individuals. And what we're looking for is at the end of 12 months, we want to see all 5 key metabolic risks improve. We want to see key mental and emotional health improve, all with a proven ROI to the health insurer. How we recognize revenue is really performance-based. We had the benefit of running a 3-year large-scale randomized control trial prior to commercializing, whereby we were able to publish in a peer-reviewed journal best-in-class clinical risk reduction across physical and mental health, and also a proven cost savings. And with that, we were able to effectively back into this performance-based model where we're aligning everyone's interests. As an individual says, I want to join the Newtopia platform, the first thing we do is send that individual a welcome kit with all the tools the individual needs to be successful. We'll bill the health insurer roughly $230. It's at lower margins. Effectively, we're trying to set that individual up for success. The core of our revenues come in bucket number 2, where every month that participant is engaged in the platform, either with their inspirator, who's the health coach, or with the technology. We charge the employer or health insurer a $65 a month monthly recurring revenue. Today, we're generating roughly 60% margins off that recurring revenue at a service ratio of 1 to 200. And we think that's it's pretty good. We've been keeping it artificially low on purpose, really to drive the best outcomes possible. But we've been also making investments in our technology platform, whereby we believe we can improve that service ratio, move up to about 1 to 350, optimally 1 to 400, and move from the 60 points of margin on our recurring revenues up to the low to mid 70s. The third component is if at the end of 12 months, a participant achieves a clinically significant milestone. Today, we set that at a 5% body weight reduction because we know that at that threshold, we will have improved all physical risk reduction and mental and emotional health risk reduction with a proven cost savings from our RCT, and we charge an outcome milestone. It's effectively a success fee, our opportunity to participate in some gain share, that's 100% margin. When you take all those 3 components and now apply 6 years of commercial experience, we can estimate and model on an average recurring revenue per participant of $1,600 over 3 years. It's actually fairly conservative. We know that today that the 3 years was based on a randomized control trial. We have 60-month or 5-year data suggesting that the average recurring revenue per participant is longer than 3 years, more like 5, and certainly more than $1,600. But we keep it there just to be conservative and leave lots of room for growth. What we're finding from health insurers that they find attractive about both what we do and how we model our revenue and our business model is that we're actually going at risk to modify key physical health risk reduction. And so we know that there are 5 key risks that are really at the heart of most of our healthy lifestyle decisions and whether or not we're developing chronic disease. It's things like our waist circumference or BMI, our blood glucose or A1C, blood pressure, triglycerides, and cholesterol. As those risks go out of range, it's effectively our body letting us know that there's a breakdown in health that's taking place. And as that breakdown in health takes place and more of those risks go out of range, with 2 or more out of range, you're now at risk with 5 times greater chance of developing type 2 diabetes, 2 times greater chance of developing cardiovascular disease, 3 times greater chance of having a stroke. And that's not all. as those risks continue to manifest themselves, it also leads to incredibly costly and life-threatening illnesses that are all connected. If you're a health insurer, what should make you concerned about those risks going out of range is not just the health consequences to your employees or members, but it's also the cost consequences of insuring them, where the average healthy individual today should be about $3,400 per year just for paid medical insurance. I'm talking about hard inpatient, outpatient emergency room costs. The problem is that 80% of the US population that's insured by a health insurer has at least one of those 5 risks out of range today, which means that health insurers don't have many folks in green at $3,400. They're now left with 80% of their population sitting at about 60% more cost, up to $4,400 to $5,400. What makes that period of risk so scary is that within a very short period of time, like a year, $5,400 could spike by 3 times and become $15,000 a year if that person develops type 2 diabetes, or spike by 4 times and become $20,000 a year if that person develops cardiovascular disease, which is a pretty scary, unmitigated liability. And it's really only representing the physical health costs. We've all learned over COVID-19, which continues, is that this group of individuals at risk, second to age, has been the second leading cost amplifier for insurers, which I think the numbers are untold there about just how much those individuals cost. And then on top of that, you've got the mental and emotional health costs above that, which we're all certainly aware of and all health insurers are dealing with. Now, it's the red area here where this is the domain of sick care. This is most of where US healthcare takes place, whether it be through providers, through condition management programs. It's all about mitigating the folks who are already over the cliff. And we believe that there's a great opportunity to actually look further downstream to this population at risk in the middle, where we've proven through habit change, there's an opportunity for us to mitigate those risks, lower those costs, and drive probably the most important and impressive bending of the cost curve available. It's a pretty large and growing market. When you look at that $3.8 trillion, it's largely covered and paid for by 3 different types of health insurers in the US. You've got self-insured employers. These are employers with typically more than 500 employees that self-insure, they own the risk. They cover roughly 140 million Americans. Then you've got private insurers who are covering the small employer or individual market at about 100 million lives. And then you've got the government through Medicaid, Medicare, and the VA covering roughly another 100 million lives. In Canada, it's about 38 million lives. And where we got our start was really focusing on the self-insured employers. The innovators there have got the greatest pain and have oftentimes been moving faster. But what we've seen is that there's been greater and greater opportunity to focus on both private insurers and the public insurers. And now we find all 3 are in play and very much in our pipeline. Our current clients today, as I mentioned, really represent some of the biggest innovator, early adopter, self-insured employers and payers in the US. And really what they were attracted to was the differentiated approach. We're really the only ones doing what we're doing. Today, this collective population represents about 840,000 lives, of which conservatively 50% have at least those risk factors making them eligible, or 420,000 lives. We've historically converted at about 20%. So there's roughly 75,000 Newtopia participants as we grow into these contracts. Multiply that by the 1,600, there's over $120 million in revenue in our existing contracts alone. Now we phase into each of those, we're still growing into them. And as I mentioned, we're also seeing huge opportunities in the fully paid insurer and in the government, specifically around Medicare and Medicare Advantage that we're going after. Newtopia has been built on clinical validation. We've really wanted to make sure that we are evidence-based and outcome-based. We've got a legacy of having grown up through a number of different really wonderful innovation partnerships. As I mentioned, we got started out of Aetna Innovations, who ran a 3-year randomized control trial that was published and peer-reviewed in the Journal of Occupational and Environmental Medicine. We then came through the Accenture Innovation Program, winning the sort of most impressive, biggest disruptor and innovator in 2019. We've most recently come through a project with JP Morgan Chase, sponsored by Haven when it existed, applying some really fantastic behavioral economics, and we've seen our results improve over time. We're fully recognized by the CDC as an alternate diabetes prevention program, which is the first of its kind for a precision health company like us. and have been recognized by the Society of Actuaries for our ability to lower costs both in commercial and Medicare Advantage populations. Another thing that's really important to consider about Newtopia is just the kind of data that we're collecting. Consider that as each participant joins our platform, we're able to collect and own their full genomic sample, plus 3+ years, more like 5 years of really rich lifestyle, mental health, social determinants of health, otherwise known as phenotypic data. Now, our ownership rights extends to the anonymous de-identified data layer, so no personal health information, but it's incredibly valuable when you apply more and more AI and machine learning as we do against it in two ways. From a sort of an analytics and data analytics perspective, it provides us the opportunity to provide more and more insights back to each participant to keep them engaged and sticky longer, which helps our recurring revenue model. But I believe there's an even bigger opportunity that as we scale that data, we're able to really present a novel data set in partnership with drug discovery and pharma firms to effectively usher in a next generation preventive therapeutic platform, effectively how we marry Newtopia's proven habit change results with precision medications to lower blood pressure, blood glucose, cholesterol, or have impacts across depression and anxiety. This past quarter, we saw a real sort of tremendous shift away from some of the issues and some of the normal, I guess, movement against normal standard operating procedures from COVID. We saw opportunities. We had the biggest quarterly engagement of our participants ever. We saw one of our clients in CVS has a huge expansion where we saw our welcome kit sales increase by 300% in the quarter. If you sort of caught on to where our business model is going, a 300% increase in welcome kits is really the harbinger for a lot of engagement income that's going to come next. We've got a pretty big expanded addressable market in moving more and more into mental and emotional health. We're anticipating really a big return to growth and much more client onboarding in Q3 and Q4 as more of our clients continue to roll out Newtopia to their populations. From a growth perspective, our revenues have been consistently growing since 2016 when we began commercialization. We've been growing about 100% year over year. Anticipate that that kind of growth to continue into the future. Again, we're seeing a return to our growth in Q3 and Q4 as a lot of the COVID issues that we had faced have gone and been fixed and corrected. And we've got a massive pipeline of other both insurers that we're working with and looking to deploy for next year. Again, on the participant side, sort of steady growth. These are the growth in participants. This is where that recurring revenue base comes from. Keep in mind today, we've really only rolled out about 20% of our existing contract potential. So there's a massive opportunity for us to keep growing into them. And I think that's really where the key growth drivers are all about. There are three that Newtopia is focused on. The first is expanding our client base. As I mentioned, we started out in the self-insured employer on the innovator side, have lots of great prospects there. But as we've seen the impacts of COVID and some of the indecision around employers and just them being busy, we've seen a lot more interest amongst the fully insured payers for their commercial population and also for their Medicare Advantage population. And so we're starting to really expand into all three insurer types. The second key driver is around increasing enrollment. Here, there's an opportunity for us to grow into that 20% of our existing client base, really grow into the 75,000 participants and 120 million lives. And then finally would be to improve our product density, effectively to the 80% of the population, offering more and more different program and product areas. When you sum it all up, it's really three key areas that are important for us. I fundamentally believe the future of healthcare in the United States is going to be about preventing disease. It's the only sustainable way for health insurers to manage the health of their population and manage their costs down. And Newtopia really represents that front door for them. And we've seen great opportunities with our existing client base, and now an explosion of interest with COVID for us to continue growing. And as we do, both improving our revenues and our growth, but more importantly, improving that incredibly valuable data source that we have of genetic and phenotypic data so that we can commercialize really the next generation of our platform in partnership with drug discovery and pharma. I thank you very much. Happy to answer any questions you may have.
This stuff is huge. It seems like this is a huge thing that your team is trying to tackle here, Jeff. So I just want to, understand a couple basic things and ask a couple kind of like logistical question. So you said it a little bit earlier, a health coach, right? I'm going to totally oversimplify this, I'm sure, but I mean, you know, a person can have a dietitian and they can have a physical trainer, and that the platform here is really wrapping all of that together. Is that correct?
Yeah, what we're doing with our, we call our health coaches inspirators. We're looking for individuals that have got backgrounds in nutrition, exercise physiology, and psychology. So it's wrapping kind of all those. But what we're really looking for, which is particular and unique to us, is we're looking for habit change designers, and we're looking for individuals who are behavior change agents, really high empathy, really high emotional intelligence, really great emotional interviewing skills. What we don't want are content instructors. We want individuals who can make people feel something and then design the right method of changing and stacking new durable habits.
Of course. What is the success rate like? Like for it was a $200 fee that you guys get for success. I don't know if I saw that you had on screen what the success rate is like. Like how many people are paying that $200 fee?
Yeah, in our randomized control trial, we saw 76% of our participants lose that, in that case, 4.3% body weight reduction. And that was roughly a 10% body weight. And so our book of business has remained fairly consistent. In fact, we've improved upon that. And in the latest results that we had with JP Morgan Chase in 2020, we were able to drive that 76% up to close to 85% who were achieving those outcomes, and that was in 2020 in the heart of the COVID pandemic. So these are pretty durable and strong results.
And the data angle that you highlighted is, of course, huge for the business. From a user perspective, and this is, of course, becoming more and more prevalent in everything we're doing. But I mean, any reassurance that you can give, about data security and the usage of the data to users and to investors?
Yeah, 100%. So first, we recognize the sensitivity and the importance of that data. Everything, so we're a fully HIPAA compliant platform. All of that data is encrypted. Keep in mind as well, we're not, our interest is not in personal health information or PHI. Our interest is in the anonymous de-identified data layer. And so we provide, everything is consented to, and we're fully transparent with our participants and with our clients, what we're using the data for, what we're not. Again, the idea is really each participant has the opportunity to consent to participating in scientific research on an anonymous de-identified basis to effectively let us use their de-identified genomic information connected with that lifestyle information so we can improve upon the habit change that we can offer and improve upon the insights we can provide them. So very transparent, and I would say it's incredibly popular. Of our clients today, and we're seeing well over 85% uptake in the genetic engagement part, because I believe people are really craving for something built for them as opposed to something that's just guideline based. This is something really built from them for them, and it's really pointing to that one size fits one that consumers and individuals are looking for.
Excellent, Jeff. Again, it seems like a big cookie your team is trying to bite off here, and I'm absolutely wishing you good luck in this endeavor. Jeff Ruby, founder and CEO of Newtopia. It is, you got a couple tickers. You got a ticker on the Toronto venture. It's NEWU, and then the OTC is NEWUF.
Correct. Thank you.
Awesome. Well, thank you very much. Have a good day.
You too. Bye-bye.
Really cool stuff. Really cool stuff. I've had to say that like 10 times today because this stuff is exciting and innovative, and hopefully Benzinga is getting investors and audience members out there this information early so they can make some good decisions on however they want to invest or trade in these companies. Coming up next, a little special presentation. We're going to switch it up. It is going to be a presentation, but it's going to be a little bit more excitement for a trader, I think. Benzinga's own Mark Petrino, he's going to be doing a little bit of technical analysis live on air. Is that right? Mark, are you out there? Let's get Mark up here. I see him backstage. There he is. What's up, brother?
Hey,
What's
how
up,
are you?
man? I'm doing well. It's me. It's Brent.
Cool.
I'll let you.
I just want to give a little disclosure that my IQ is probably 50 points lower than Jeff's, but hopefully
Seemed like a smart guy, right? Mark, I'm sure you are a very smart guy. Don't do that to yourself.
Well,
Let's let the audience, let's let the technical analysis speak for itself. At the end of this, people are going to be like, "Wow, that guy Mark was really a smart one." I'll let you have it, Mark.
All right, cool. Thank you, sir. Thank you very much, and thanks everyone for tuning in. So my name is Mark, and I'm a market technician, and I'm the head educator at the Benzinga Trading School. The reason why I'm a good fit for this role is because I have an extensive background in the institutional trading world. My first trading job was working for a very well-known manager by the name of Mario Gabelli. If you watch the NBC, he's on there all the time. You've probably seen him. I spent some time also trading for Stevie Cohen, who is one of the best traders in pretty much the history of trading. He is the guy that the show Billions is allegedly based on. And then after that, I had a chance to go be a head trader at a fund. And, being a head trader, I had traders underneath me that I supervised and so forth. So I spent about 25 years in the institutional investment industry. So I've been around the block more times than I care to remember. And I want to take this knowledge and I want to teach people, because there's a lot of disinformation out there. There's a lot of misinformation. There's a lot of fraud. There's a lot of scam artists. There's a lot of garbage. I'm just going to give you just kind of a little anecdotal thing about what I mean. Not too long ago, I saw someone touting a newsletter or promoting a newsletter talking about how great their returns were. And this particular newsletter and this particular person said, "We doubled our money in 1 week." Okay. So now I know that that can't really be right. So it seemed like a pretty dubious claim. So I did a little bit of research and I looked into it. And it turns out that this person gave a buy recommendation of a stock that was trading at literally 1 cent. Okay. And then the next week it went to literally 2 cents. So he claimed he doubled his money, but that's not how the market really works. For every stock, there's what we call a bid and there's what we call an offer. The bid is the highest price that anyone in the market is currently willing to pay. The offer is the lowest price that anyone is currently willing to sell at. So there's a bid and an offer in every stock. The offer is always higher. The bid is always lower. So I looked at this particular stock and the bid was 1 cent. The offer was 2 cents. So that means if someone sold 100 shares, it would have shown a trade at 1 cent. If someone came in right after that and bought 100 shares, it would have shown a trade at 2 cents. All right. So what do we have here? On paper, the stock doubled. It went from 1 cent to 2 cents, but it didn't really move. Okay. It didn't really move. Going from 1 cent to 2 cents is not the same as going from 10 to 20 or 20 to 40 or 40 to 80. So when I see things like that, I get upset because I don't know. I just think it's wrong that there's scam artists out there. So what I like to teach people is that the traders in the institutional world, guys like myself, we don't follow a lot of these like fancy esoteric techniques that a lot of people talk about, like Gann theory or Elliott wave. The main thing that an institutional trader is looking for when he looks at a stock or she looks at a stock is which price levels are more important than others. In the stock market or in all financial markets, there are certain price levels that are more important than others. All right. It's the most fundamental rule of trading. And what we teach in the class is how to determine which levels are going to be important. Now let's take a look at this because we're talking about healthcare today. And I wanted to bring this up. This is the iShares Biotechnology ETF. The symbol is IBB, like Isaac, boy, IBB. Now, when we look at this chart, what do we see? We see that this 158 level was an important level for this ETF. All right, we can see it was resistance here, and then we can see it was support here. Okay, resistance is a wall of sellers, or a large group of sellers that are all trying to sell at the same price. In this case, obviously, it's 158. Now, at a resistance level, there's more supply of shares than there is demand. So what happens? Well, when a stock rallies and gets to a resistance level, the buyers can buy all they want to buy. They don't need to pay any higher prices. The stock is not going higher. A lot of times when things hit resistance levels, they sell off. Okay, now we can see again, we have $158 was resistance here as well. All right. So again, it sold off. So the buyers are buying it. They have to pay higher prices because there's not enough supply around. And when it gets up to 158, all of a sudden the sellers come out and the buyers can buy all they need to. Now, and I really want to emphasize this a lot. Looking at chart reading, at least the way I do it, is not anything mysterious or magical or mystical. It's not reading tea leaves or astrology. A chart needs to be seen in the context of what does this tell us about the supply and demand dynamics that are occurring in a market. All right. That's what you need to do when you look at a chart. When we see a resistance level, what are the supply and demand dynamics? Well, there's more supply than demand. Okay. And the support level is the opposite. This is buyers looking to pay the same price. Now, look at this, and this is really kind of astonishing if you really think deeply about it. And I've been doing this for years. Look at how what was resistance turned into support. Okay, so we can see the 158 level here was resistance. Again, resistance is a large group of sellers all trying to sell at the same price. They can sell all the shares there's a large group of sellers here at 158, so they're trying to sell, and they can fulfill all the buy demand that there is. Now over here it's support. There's enough demand to absorb all of the supply. How did this happen? How did a level that was resistance turn into support? This is a very common occurrence in stock markets, especially when a market is rallying. What was resistance can become support. Write that down. Tell yourself it over and over and over. What was resistance can become support. Now, obviously, there's the question as well, why does this happen? This seems like a little kind of an odd thing. Why would a resistance level turn into a support level? Well, the reason why is seller's remorse. Okay? Seller's remorse. These sellers here thought they made a good move when the stock went lower. Okay, same thing here. The stock's at 158. These people sell and the stock goes lower. Now, what happens here? It goes and this resistance finally breaks. The buyers finally are able to overpower the sellers, and that makes it higher. Now, a lot of these people that sell experience seller's remorse. They say, you know, I sold at 158. Now this darn thing is higher. I made a mistake. I think I'm going to try to buy it back. But you know what? I want to kind of erase my mistake mentally. So I'm going to try to buy it, but I'm only going to do so if I can buy it at the same price that I sold it at. So what happens as a result of this? People that were sellers that become remorseful place their buy orders at the same level that they sold at. In this case, it was 158. If there are enough of these buy orders, it creates support. And that's what happened here. So a level that was resistance can turn into support. So just remember, probably the most important trading dynamic outside of the investment psychology realm, but just in terms of understanding the markets, is knowing that there are certain price levels that are more important than others. It seems like simple stuff, and it can be pretty deep, but we can also try to really keep it simple. And just by knowing where there's these important levels are, it can really help us make our good trading decisions. Now, we can see here's another example of a level that's important. This is 175. It was resistance in early August, and the stock went down. And then when it got back up here again, it was resistance. So now we know the 175 level is important. If this thing ends up rallying and getting back up to 175, I will bet you that there's a good chance it's going to run into resistance again. That doesn't necessarily mean it's going to roll over and go down. It might spend some time consolidating or trading sideways. That's a term we use for when a price isn't really moving. It could trade sideways for a period before finally breaking through. But just by having an awareness of where these important levels are, it gives us an edge on the vast majority of people that don't look at this kind of stuff. But like I said, in the institutional trading world, in the hedge fund world, when I get an order to buy 1 million shares of Intel or sell 3 million shares of Apple, you got to know where the support levels are, because you got to figure out like what price you're going to sell it at, or how is that going to affect the market. If you have a big sell order and you're here and you see there's support, well, you can go ahead and sell, because there's enough buyers to absorb all of the supply, and like you can sell all the shares you want. If you're here and you got a big sell order, well, now you're going to have a problem. There's not enough buyers around, so the thing goes down, or it keeps going down. So that's just a quick look at how a resistance level can become support. And now I want to just explain this on how what we call a technical trader would potentially approach this. Technical traders are different than fundamental investors. Fundamental investors look at things like price to earnings ratios, dividends, and they're kind of, I guess you would say their primary focus would be the accounting of a company, like studying the income statement, studying the cash flow statement, understanding if the company is becoming more profitable, less profitable. That's what fundamental analysts do. Technical analysts just use the market, and we let the market tell us what to do. So why am I bringing this up? Well, IBB has been in a free fall. It's gotten really beaten up, but it's getting close to this level that was support before. Now, there's an old saying that markets have memories, and that means that a level that is support or resistance can stay intact for a while. So it was support here, it was support. So this means if this thing gets down to around 158, there's a good chance that it finds support again. All right. So that could put an end to the sell-off, and it couldn't even rally again. But what happens with most people is when they go to try to bottom fish, that's called trying to call the exact bottom, or just getting it at the low trade before the thing rebounds. That's kind of not possible usually. I mean, sometimes people get lucky, but there's a good chance that IBB goes lower and it gets to this support, and the support breaks. And in that case, the IBB will keep going down. So what do we do to prevent us from buying a stock and getting run over, or buying an ETF in this case, and having it just go lower and lower and lower, and getting what we call run over and losing your money? Well, what we have here is a downtrend line. Okay. Now, this trend line is a graphical illustration. That's what stocks charts are, graphical illustrations of supply and demand dynamics. This black line shows us that the bears are in charge. All right. So what do we want to watch for? Well, we want to watch to see if IBB trades on the other side of this line over here. The breaking of this downtrend line could be an indication that the bears are losing control of the market and the bulls are becoming equal or maybe even going to overpower the bears and take the stock back higher. All right. So when traders build trading models, the whole idea with a trading model is to keep you from guessing. All right. Now, I know a lot of people out there listening probably know what I'm talking about. They guess. They see something in a chat room. Their friend tells them something. They buy it, but they don't really have a logical reason for that. Then if they lose money, they panic and they get emotional. The whole idea of trading systems, and pretty much every trading system that's ever been conceived of in the history of trading, has been made for one thing. It's to take the guesswork out of it. It's to take the emotions out of your thought process. So every trading system consists of what we call setups. That's the first part. The second part is what we call a trigger. And then the third part is what we call an exit strategy. So we have two setups here. I'm going to call this two setups. It's oversold. Oversold reverts to a stock's momentum. Momentum is how far a stock has moved in a given time period. Sometimes when things get really sold hard like this, where you can see it's just in a free fall, people are like just saying, you know, just get me out. I don't want to have anything to do with this garbage anymore. So when it's in a free fall, or we're going to get close to this support, I'm sorry, when we're in a free fall, this indicator down here on the bottom is the RSI indicator, which measures momentum. And when it gets this low, it's showing that we have oversold conditions in the market. So we have two parameters or two setups. One, we're getting close to support. Two, we're oversold. You can look at a setup as like a get ready, get set kind of a thing. When the setups happen, it shows up on your radar screen, or we put this on the radar screen. The next thing we need to do is the trigger. The setup is the ready, set. The trigger is the go. That's what makes you get online to your broker, or call them, if anyone actually calls brokers anymore, and put your order in. Now, in this case, we would just watch this. And then if this line is crossed, it's a graphical illustration that the bulls may be taking over from the bears. So that's our trigger. The parameters say watch it, or the setup says watch, the trigger says go. So you can kind of visualize the stock, or the IBB would be like here. So now people have a hard time with this because it's a little counterintuitive, because if you wait for the trend to break, most of the time you're not going to be paying the lowest price. And that's okay. We're going to buy a little bit higher and hopefully sell much higher. But the thing is if you wait for the trigger, in this case, the breaking of this downtrend line, it makes the risk reward ratio better than if you just guess. And again, it's a little bit counterintuitive because you're not going to get the lowest price, but you got to think in risk reward ratios. A key thing in the market, and a key reason why people fail, is because they think they need to be right all the time. And being in a market is not about being right. It's about making money. So a good analogy, and I like to play golf, so I use a lot of golf analogies. I hope people don't get upset with it, but a good analogy is golf, right? If you're playing a par 3, what are the odds? You want to get a hole in one, right? But some golfers go their whole lives that are great golfers, and they never get a hole in one. But if you can get the ball close, then you could end up getting a good score. So if someone is a golfer and there's a 150-yard par 3, and they get the ball to within a foot of the hole, they didn't get a hole in one. I mean, do you think it makes sense for them to get upset? No, of course not, because they're still going to birdie and get a better score than most other people. So I know it's especially for beginners, it's kind of a hard concept to understand. But again, it's not about being right. It's about making money. In this situation here, we just are waiting for a better risk reward dynamic. I mean, we know we're not going to catch the bottom price, and that's cool. All right. So that is one of the things about, or that's the main reason why people have trading systems. And I'm not saying this particular method I'm showing you here will fit you or fit someone else. But what I'm saying to you is that you should have some kind of mechanical or mechanized thought process that you use before you buy. Because if you guess, you're going to lose. Now, let me see in the chat here. Why don't you give me a 1 if you've guessed and you've lost a lot of money? I know I have, but fortunately, it's been a long time. So we don't guess. We have to have a reason for doing things. Now, the trigger has been pulled and we're long the IBB and we bought it. Now, what is the third part of the trading model? Remember what I said. The first part is the setup. The second part is the trigger. The third part, and arguably the most important, is the exit strategy. Okay, you should not take a position unless you know how you're going to get out of it. You need to set a price target or a time limit or whatever. There's a lot of different ways that work, but you got to use one of them. All right. You got to use what fits your eye, what fits your style. So now let's take a look at how a technical trader would look at this. All right. So when we buy stock, forget breaking even. Let's just assume when we buy IBB, we're either going to make money or we're going to lose money. All right. So in either of these occasions, making money or losing money, it's going to fire up our emotions, right? Because people get excited when they lose money. People get excited when they make money. So this leads to irrational decisions. So just like we needed a specific reason to get in, we need a specific reason to get out. Now, we're going to have to think about, what do we do if we buy IBB and it goes lower? Well, a logical place to have your stop out, meaning you sell it, you're okay, you just take the small loss and you move on. All right. So where would there be a logical place to have a sellout? Well, it would be under the support level, because as long as IBB is above the support, you're fine. But if the support breaks, there's a good chance it's going to go even lower. So you would sell it out. Now, this is another difficult concept. That's not as well. It's not as difficult as it seems. But someone would say, well, gee, if the thing is at 160, why would I want to sell it at 157, call it down here? The idea is that if it gets to 157, it's going to keep going even lower. So this is a way to think about having an exit strategy, all right, for a loss. You're going to be upset that you lost money, but it's part of the game. One of the things I always tell people is that Babe Ruth struck out more than any other baseball player in history, all right, and he ended up doing pretty good in the long run. So taking losses is part of the game. People think that the greats, like a Stevie Cohen, have like some kind of secret method or secret system that they used that was revealed to them on like a vision quest or something. And I can tell you 100% wholeheartedly, without a doubt, period, that that is not how it works. That's not how real hedge funds and the institutional world work. The common denominator of people that are successful across different styles and strategies of trading is the adherence to the risk management and understanding the emotions. Now, let's talk about, if this thing goes our way and starts rallying, what is going to be our target for taking a profit? Where am I going to take my profit? Going to make some money? Going to take the wife out for dinner? What am I going to do? Well, we don't want to guess. So in this situation, what would be a logical place to put your sell order at? Well, there's been resistance at 176. So if it does rally, there's a good chance it hits 176 again and rolls over. All right. So now we have to review, we have our setups close to support, oversold. That's the get ready signal. The trigger or the go sign would be the crossing of this trend line, the graphical illustration that the bears are losing control and the bulls might be taken over. That's the trigger that gets us in. Our strategy to lose money is if it breaks this support, we puke it out and we move on to something else, and we accept the fact that losses are part of the game. If it goes higher, we have our sell target here for a profit up at 175. So let me know out there if you understand, or let us know, what are the 3 parts of a trading model? What are the 3 components of a trading model? Money Mitch, I'm not sure what you mean, on close or intraday. Let me scroll back and see if I see a previous comment. You suck at options. Well, you came to the right place, because we're going to fix that. Hey, Money Mitch, let me entry. So do we enter intraday or on close or intraday? Oh, okay, I see what you mean now. That's a good question. I guess personally, I use the closing price. I think the closing price is the most important price of the day. So when I'm doing my analysis for whatever it is, when I'm looking for a trigger, I'm going to use the closing price. Like for instance, here, there's a chance that IBB spikes all the way up here and then turns all the way around and closes back down here, which shows that the bears are still in control. So for the most part, I use the closing price. We all suck at options. Oh, come on now, Sloth. That's not true. I'll give you a little bit of insight, though, in the option world. I don't know if I have the exact numbers right, but I think I'm pretty close. 90% of options expire worthless. Okay, think about that. 90% of options expire worthless. So who makes the money? It's the people that sold the options that are expiring worthless. So option sellers can make more money than option buyers. All right. So who's doing all the selling, of these options is the market makers. They know this thing is, overpriced. So some retail traders are coming in to buy it. I'm going to sell it to them. But just keep that in mind. And now don't go out and start selling options without doing a little more research, because you can really get yourself in a world of hurt. One thing I would tell our conservative investors is to consider is a covered call strategy. What this means is, say you own a stock and you like it, you want to hold on to it, but you don't think it's really going to move anytime soon. You expect it to trade sideways. Well, what you can do is you can sell a call on that stock, and that brings some money into your account. And if the stock doesn't move and the call ends up expiring worthless, you get to keep that money. So investors looking for income, or investors who think that their stocks are kind of trading towards a top, that's something you should definitely look into. It's called a covered call strategy. Worst case scenario is like this would work like this. Like, say you owned, let's just bring up, I know it's not a biotech company, but let's just bring up Ford here. Now, say you own Ford and you think it's going to go down, but you don't want to sell it. You want to hold on to it. Well, say there's a call out there that has a 16 strike price. That means if the stock is above it, the call is going to have value. But if the stock is below it, the call won't have any value. In this situation, someone who owns Ford could sell the 16 call and get the money. The worst case scenario for them is if the stock gets above 16, they'll be forced to honor their contract and sell it at 16 and forego some of their gains. But they brought in a little bit of extra money, and they're still selling it above the market. So I'm not recommending you do it, but if that's something that sounds interesting to you, I would recommend at least looking into covered call strategies and doing a little bit of research. African culture, what time frame do I normally use? Just I would say my personal time frame, just because it's just what I'm used to and what I've been doing for the last 2 decades, is I look at things kind of weekly and monthly. I'm not a day trader specifically. So I like looking at weeks, but there's really no right way to do it. Some people might be good day traders. Some people might be good swing traders, and that's referring to people that are trading for longer than a day, like a couple of days or weeks. But here's the thing, right? Say you buy a stock and you have your target price, okay? If the stock gets to the target price in one day, you're going to sell it. If the stock, doesn't break out or doesn't break down and you don't get stopped out, and it gets to your price target in a month, you're going to hold the position for a month. If it takes 2 weeks to get to your target, you're going to hold the position for 2 weeks. So the point is that you don't have to worry about the time frame. If you have the sell strategy in place, the market's going to tell you what the time frame is. But that's a good question. Corey says, I heard for the first few minutes of the day, the open usually will tell you if a stock will go up or down on the day for an interest. I don't know if I would agree with that. I've seen plenty of times where stock opens up and then rolls over. One of the things that can happen is we have what are called reversal patterns, and they look at now this is actually a good example of Ford. Okay, there was a sign that the sell-off was coming. Now the bulls, with these candles, a blue candle is a day that is up. The open is at the bottom, and the top, the close is at the top. So now a red candle is a day that's down. The open is the top of the candle and the close is the bottom. So this day here for Ford, it actually opened higher than the next day. So if you looked at this in the morning, you would have said Ford is up, and it went up even a little bit higher. But by the end of the day, the sellers came in, it turned around, and they knocked it lower. So this is an example where a stock looked really strong in the morning, but by the end of the day, it had reversed.
Mark, I'm popping in here. How'd it go,
cool.
man?
Thanks.
Did you always get this kind of reception? The chat is loving it, man.
Yeah, I mean, so far so good.
Where can the crowd get more of your awesome technical analysis? Is it Benzinga.com content? Is it on the trading school?
Well, unfortunately, for now, we're at capacity in the trading school.
Ooh.
So we're not going to. We don't have plans of accepting any new students at this time.
Okay.
But I would suggest that people who are interested reach out to Rodrigo, and maybe if we get some people that drop out or quit, we can fill up those spots.
Love it, man. And maybe Aaron, can you put? I think this is okay. Can you put Rodrigo's email up on screen so I can give him an easy shout? And you do some content for Benzinga, right, Mark?
Yeah, I do some stuff on the Benzinga Newswire. I have a penny stock idea that I put out every Monday morning.
Oh, and it's a Mark's Penny Stock Ideas visit, and there's a bit.ly link that just got dropped in the chat. And if you have an author profile on Benzinga.com, I believe it is just Benzinga.com/author/your name to see your content really quickly. So this has been really good stuff. I love the little teaser there for the Benzinga Trading School. hopefully if, people in the chat are more excited about this kind of a technical analysis, like Mark said, give Rodrigo a shout, let him know that you want in, and maybe we can see what we can do here.
No, I don't have a Twitter account right now. Sloth
with the good question.
Handle, Sloth Alliance. That's a good one.
All right, Mark. Well, this has been awesome. I am going to do another of our Slido poll here. We're going to have a contest winner a little bit later. They're going to be winning a 1-year subscription to Benzinga Pro. So I'm going to let you hop off, Mark, and I'm going to go to the Slido here, if that's cool with you.
Cool. All right, Brent. Thanks a lot. I really appreciate it. And thank you,
Yes,
everyone, for listening. I appreciate your time.
Until next time, we will see you around soon, Mark.
Okay. Thank you.
All right. I will pull up my screen share here real quick. We'll do a couple more Slido questions. This was the last question. Let's go to the next question. Next question. What is a 50? I almost said it right there. What is a 50 DMA? Is it the average closing price of a security over the past 50 days? Is the amount of DMA pollutants a company can emit and still be considered, quote, clean tech? Or does it stand for the debt margin assessment, the maximum amount of debt a retail trader can take on when trading on margin? Let's do one more quick question here. We should be announcing the winner of our Slido contest in pretty soon here. Should be in the next half hour or so. And Mark getting some more love in the chat from James and from Sloth. Thanks, guys. Name this chart pattern. I'll turn off the results here. Name this chart pattern. Ooh, there it is. So stock comes through the neckline. It hits a little bit of a resistance area, bounces off of the neckline, another resistance, and down goes Frazier. What is the name of this chart pattern? All right, that should do it here. Let's jump to our next guest. I'm going to stop sharing my screen. There I am. And let's welcome on our next presenter here. We're going to continue with more publicly traded companies for the Benzinga audience. That's what we love doing. And we have here from ChemPharm, it's ticker KMPH on the NASDAQ. We have the company's CEO and chairman, Travis Mickle. There he is. Hello, welcome, sir.
Hey, Brent.
Hope you're having a good day. I'm doing very well. And I see you have a presentation backstage. And there it is on screen. I'll let you take it away.
All right. Well, thank you. And thanks, everyone, for taking the time to be with me today. Just kind of run through some of the presentation here. I think everybody knows that this is the fun part of the presentation. If you don't want to read all that quickly, you can always go to our website and look at the Investor Relations tab, which it's all located there as well. Just for those that aren't familiar with the organization, I like to run through at least the first 4 or 5 minutes of a presentation, just to give you a sense for what we are. I know we have a lot of followers, a lot of folks that longtime ChemPharm supporters, and we're happy to have them here. And certainly heard the story many times. But for those new, what do? We really focus on discovering and developing novel treatments for CNS diseases, and we've been doing this since really 15 years of our existence. We now have 2 approved and partnered medications, Astaris and Apidaz. Astaris was just recently approved back in March and launched by our partner. And, Apidaz was a little bit further back, but also just launched late last year. And then, we use what we have, these different tools, the LAT platform I'll discuss very briefly here in a second, as well as our extensive expertise in CNS, to really create, a pipeline of high-value opportunities. And that's been our focus. And now I think we're really reaching that point in which, this could really take off. You can see here the collective management as well as senior leadership at the organization, our collective experience, both corporate and through drug development. Of course, my tenure has only been at 2 organizations, New River Pharmaceuticals and ChemPharm. But of course, that spans, now multi-billion-dollar products in Vyvanse. A lot of the organization has roots in New River and Shire, and a lot of our collective experiences have come in the area of ADHD in ADHD drug development. A lot of us were involved in Vyvanse drug development, which many of you know is a multi-billion-dollar drug for the treatment of ADHD. I happen to be the lead inventor on that particular product. So our approach is actually fairly straightforward, and I think that's why there's a lot of appreciation for our technology. You can see here it's pretty simple. We take an approved drug and we do a chemical modification or a re-engineer of that drug with what we refer to as a ligand. We get a new molecule from that. It could be an NCE, composition of matter-based patent, whatever it is. It's a new molecule. And once it's administered to humans through natural processes already there, you're going to get back that ligand as well as the parent drug that was the same approved active. Now we're going to prove things like pharmacokinetics, drug delivery, metabolism, toxicology, numerous things that you can do with a prodrug that you can't do with, say, a formulation approach. And what's nice about this, though, is you also get the ability to kind of get your cake and eat it too. Hey, look, we have an approved active we start and end with. We can go through the FDA's 505(b)(2) pathway, reference a lot of the previous findings of safety and efficacy, but we also get our composition of matter-based patents. So it really does strengthen the approach, gives you some novelty, and provides good protection for the long term. We've been pretty successful here at ChemPharm in doing this. I already mentioned Apidaz. Here's just a brief kind of summary at the top of some of our product opportunities. Astaris, of course, is the product that was just approved and launched. Next milestones, we'd probably be looking at royalties and sales milestones in 2022. Beyond that, really thinking about what we can do here at ChemPharm to help modify a number of first-in-class unmet needs and rare CNS diseases. And you can see from our approach, we've really focused on using the prodrug that was in Astaris for stimulant use disorder or idiopathic hypersomnia, or really any CNS disease that fits that. And we're excited because we're coming up on some data by year end that should elucidate to us what exactly the right path is and what products to focus or prioritize on. And we're also, moving things up our preclinical pipeline. So it's an exciting time for us. A lot of work trying to get that all together, but certainly something to stay tuned for as far as next candidates and where those will go and what those timelines will look like. I mentioned that we have the 2 approved products. They've all been partnered. Astaris was partnered with Granite Point Capital, large private equity fund headquartered in Boston. One of their affiliates, wholly owned sub companies here, Quorium, is actually the commercial party. It's now available, of course, for sale as the product Astaris for ADHD. We also have Apidaz that was partnered with KVK Tech. That product was launched late last year. This happens to be an opioid in an opioid world that's not very forgiving. So I think KVK's Tech has taken the right approach. A pilot launch, slow and easy wins the race here. They have long patent life, and they certainly want to do what's best for the product in the long term. So great to have these partnerships in place. Now, as we look to the future and what we can do to create value and keep all that value, of course, or as much of it as possible in the future. So those of you that are familiar with the organization, commercial launch I've already mentioned. The long-lived patents here are also very key. You're not thinking about this going away in 10, 12 years as a typical product would be. Here you have these long-lived patents that go for another 16 years post this time frame. I mentioned STX briefly. STX is a prodrug that's contained within Astaris, about 70% of that component. And it was classified as a Schedule 4 by the DEA and FDA. We find this to be highly advantageous. It's the only methylphenidate Schedule 4 product. And it's something that we believe we can really take advantage of and use to treat diseases that really have unmet need. The company is in a great position financially. We had a complete transformation over the last 18 months. Last year we weren't on the NASDAQ, we were OTC listed. We were, heavily in debt with very little capital. Now, what we did have was a product that was under review and a potential PDUFA date in March of this year, 21, as well as a lot of potential benefit from our financial partner in Corium/GPC. So with that, we were able to transform the company. You can see through a series of transactions, we've been able to accumulate about $132 million in cash. We have a very low cash burn, and that'll change as we get through development here and add additional candidates. But at this time, things are really quite remarkably changed from a year ago. And then what's beyond this? I already mentioned the SDX and the excitement around that. KVK Tech also plans to expand their partnership with SureMed. This is part of what's known as Perspectives in Care and the launch of Apidas. This was initially a very small pilot program, and now that's going to expand to other regions and other states. And we'll really enjoy working with them and seeing where that moves in the future. So let me turn briefly to Astaris. Many of you are aware this is ADHD is a huge market. It has a number of branded products, but also, a fair number of generic products. And when we polled physicians, and this is not just polling, through market research, but also just continuously with key opinion leaders and thought leaders, duration of action, abuse potential, and onset of action were probably three of the biggest unmet needs with methylphenidate-based products today. And that's where we had focused our attention in when we had designed and got Astaris approved. And if you can look here, you can see the Astaris product, again, 70% prodrug, 30% immediate release methylphenidate. These are formulated together to give you those benefits. So indicated for the treatment of patients 6 and up, can be administered with or without food. You don't need any sort of patient-compliant dosage form. The capsule is very small. You can actually open it up, put it in water, put it on applesauce, and it'll work just exactly the same. And that's actually on the label. A 12-month study was conducted, and I think this was really very, very interesting and not anticipated. But a 12-month study was conducted, and we didn't see any clinically significant changes in height and weight compared to normal growth pattern. So that means, kids continued on their trajectory. They were able to maintain and grow over the 1 year period of time. And this has been one of the number one issues that parents have highlighted to Corium, really, as some of their concern. I've already mentioned the STX Schedule 4. And also what the data shows is that we have an onset of action at 30 minutes out to 13 hours based on the LS mean score changes from placebo. These are just some of the current stimulant products out there. Well, now Astaris is, of course, current, but I already gave you the update. Vyvanse, Adderall XR, Focalin XR, Concerta. You can see here in the red, I've really highlighted where I believe that Astaris outperforms these 4 products. As an expert in ADHD, I think that's from these labels, you can really get a sense for how this is going to differentiate in the marketplace as physicians and parents and patients have a chance to use it more. This is the language that I mentioned. It's from section 6 of the label, looking at the actual changes from a normal sort of growth curve or the Z-score and how it's not statistically significant or clinically significant changes from that. And I think that's remarkable feature of the product. This was also about the onset of action and longer duration. Again, those unmet needs that we had heard back resoundingly from physicians. Half hour to 13 hours, we see differences across the entire day. So the product is now launched. Corium has led that effort. Corium is interesting because this is a bunch of ex-Shire folks. When Shire was taken over by Takeda, they didn't seem to want to have that continuing business unit. So basically the entire neuroscience business unit in charge of Vyvanse is now at Corium, and they're led by Perry Sternberg, their CEO, who was the head of that business unit. So we are very fortunate to basically have a cookie cutter sort of approach here. The launch has been slower, mainly because of the COVID outbreak in some key states early on, but also because, as everybody knows in the industry, the first 6 months, you're not going to get any payer access. They're doing everything they can to block before they give, a chance to come in and negotiate on any discounts or price and rebates. But, the initial signs in the limited number of prescriptions out there is very, very positive. No pushback on the clinical profile, repeat prescribing and refills that we can see from our database. And so we're really excited. I don't think there's any level of concern whatsoever, and really, just the standard sort of launch difficulties that everybody faces nowadays. I mentioned this already, but the license agreement itself is actually in its totality is up to roughly $600 million, of about $35 million has already been paid in regulatory milestones. We'll be looking for royalties that range from the high single digits up to the mid 20s, as well as sales-based milestones that make up the bulk of this nearly $600 million. So very exciting, entering this agreement, amending it, and getting to a point where we believe that there's a lot of value still that we can achieve with Astaris. So just turning briefly here to the STX opportunity. As I mentioned before, we are in a study right now. It was put in place under the KP879 IND, and that study should read out before the year end. That study is essentially going to tell us what direction we should go. So we're going to use the data from that and say, okay, what indication do we want to go after? Well, one of those is stimulant use disorder that we've looked at extensively, as well as idiopathic hypersomnia, and there's a few others as well. We want to make sure that we prioritize this because it's such a huge opportunity with the only C4 methylphenidate. Commercial value, timing, cost, regulatory risk, development risk, clinical risk. We want to make sure we nail this next one. So that's why we're waiting for the data. We want to know exactly how it will behave and then what best suits that product opportunity. So one of those I mentioned is stimulant use disorder. I'm not going to touch on this very much in detail. You can go back and certainly see how much I've talked about this. Surprisingly to me, it's there's a bigger issue with stimulant abuse than opioids, but fortunately, people don't die as often, and so it doesn't reach nearly the level of press. Here, STX could really show a difference. It's less abusable. It's slower acting. So, day after day, you can see the benefit of treating their stimulant addiction. Where I am, kind of more excited recently is in the area of idiopathic hypersomnia. Again, there's no treatments for excessive daytime sleepiness associated with IH. And with Jazz's recent approval of the Xywav product, I'm even more excited. I can see the clinical path. We'll just see what the data says, of course, and make sure we make the right choice here. But it's a great opportunity to treat a huge unmet need in a patient population that really is desperate for better outcomes. And I think I've touched on a lot of these. Really, something that works throughout the entire day is ideal for these candidates. Financially, again, can't reiterate enough the transformation that we've had in the last 18 months or so. Certainly, getting rid of debt. We have no debt right now. We now have revenue, this last quarter positive in the nice direction. Sitting on $132 million in cash. All of that is really focused on what's next, right? What value can we create for shareholders? We have other potential external investments that we're looking at in licensing, acquisition, partnerships. I think our primary focus right now is in our internal development opportunities, right? Where are we going to deploy STX? Where are we going to move preclinical candidates forward? And then, really think about what can we bring in to fill in that pipeline, right? Give me milestones over the next few years, real clinical data that we can drive value for the organization, and ultimately make that choice to go commercial or not. where, hey, we have products now. Let's stop sharing through a license and actually commercialize these. So looking ahead, expectations of royalties and sales milestones allows you to make that decision, allows you to think forward, and having the cash in your back pocket also provides you that opportunity. We got all the tools in the toolbox. We're really looking at every opportunity to add value wherever we can. Continued evaluation, big milestones and catalysts coming up. I mentioned 2022 for sales. Sales of AZSTARYS should really be picking up at that point. Our evaluation before the year end of what STX opportunities there can be, as well as just what other preclinical candidates. As soon as we know, we're gonna pass those along to shareholders and investors, and let you guys know right away what our thoughts are and how we're gonna plan to move that ahead. So I believe that's the conclusion of my presentation. Happy to take any questions.
Excellent, Travis. Thank you very much. A couple quick questions here. Let's see. For AZSTARYS, any exclusivity with Corium? Are you working with any other partners?
No, Corium is exclusive. They own
gotcha.
the full commercial rights for that.
Gotcha.
But
cool.
We do have the option. That's what's nice to develop the other products that internally, the
Certainly.
KB1077 and 879.
Certainly. Zooming out a little bit here for a second, I just want to understand, you said payer discussions, it's not going to happen before 6 months. I mean, you said the typical timeline doesn't start for at least 6 months. What's the rest of the typical timeline look like after 6 months? Can you break that down for us a little bit?
Yeah, no, it's usually after the first 6 months, you're going to, hopefully you've gotten a few wins during that time period where you got some payers on board, but you're going to start to see a nice ramp as each state's Medicaid reviews these over the next 12 months since launch. You're going to get those added to the formularies, and that that's 30% of the market is state Medicaid. So as those come on board, that will gain more and more access, which will get more and more patients in front, and as the product is performing, that's really where you're going to see the biggest bump is repeat refills and new customers.
Sure. Gotcha. Thanks for explaining that. A little simpler of a question there, but I'm not very versed in this kind of stuff, so I appreciate it. And then on the idiopathic hypersomnia, the IH, it's a rare disease. I think it said 30,000 people impacted a year. What's the total addressable market like for that indication?
Well, you have a limited population, right? You have 37,000-ish. I think estimates could double that. But what's unique there is, of course, you're going to price it higher. Of course, that's how the rare disease market goes.
Sure.
And our cost to sell would be much, much lower, right? 37,000 patients out there, you'd probably know every doctor that writes these scripts for these folks. So, you can imagine a small 25 to 30 person sales force. And so your delta is pretty significant. And then, of course, you want to add more to that sales bag.
Gotcha. Thanks for answering those couple of quick questions. We're going to wrap it here. Good information. There was a comment in the chat that ChemPharm needs to do a lot more conferences, get the word out there. Just a little feedback that I'm passing you along there, Travis. Appreciate you joining us today. Chairman and CEO of ChemPharma. It's ticker KMPH. Thanks so much for joining us, Travis.
Yeah, thanks, Brent. Thanks, everyone.
Have a good day.
Thanks.
All right, ladies and gentlemen, we got just one more presentation here, and then I am going to announce the winner of our Slido poll. That winner is going to be getting a 1-year subscription to Benzinga Pro. It is quite a value, and it's where you can see me a lot of the day at Benzinga. That may be an upside to it. I want to bring on MedX Health. Ticker is MDX, and we have joining with us here the CEO, Sylvain, and also President for Dermatology, Mike. There's Sylvain, and there's Mike. Hello, gentlemen.
Cheers. Hello.
Good afternoon
Hey,
if
Brent.
you are in the United States.
Well, I'm in London in the UK right now.
So good evening.
Good
Yeah.
evening.
And I'm in Muskoka in north of Toronto.
Cheers.
That's Eastern time zone. Okay, I got it.
Yeah.
All right, gentlemen, I see your presentation. Let's hear about MedX.
Yep.
So why don't I just start and say, one of the big questions is Sylvain's just joined our team as the president and CEO. Sylvain has a huge background in this space. So what I'll do, maybe I'll just ask a simple question and give Sylvain 5 minutes to introduce himself. People don't know Sylvain yet. He's just coming out into the market. Sylvain, why would you join MedX? It's a small company. You've got a lot of exposure at taking startups and building them up to multi-million-dollar companies. What did you see in MedX?
The presentation turned into an interview, ladies and gentlemen. I love it.
Of course,
I love it.
Of course, yeah. I gotta find out what my box is here.
It'll be swift.
You're gonna have to ask him some questions after. So
yeah, I know. It's like I'll ask him to stand up just in case.
Yeah, that's it.
Listen, and Mike, and I know you know, but I've been in pharmaceuticals now for 35 years. I've been on 6 continents. So I've worked in the US, I've worked in Canada, I've worked in Europe, I've worked in Asia. So one of the pieces I've done is with small and big pharma. And this is kind of my third startup. I call it startup because we're still small. We've done all of the baggage that needs to be done to have the approvals at the FDA, the approval in Canada, the approval in Europe, and we're ready to go. The piece for me that brought me here with this company is the fact that we can make a difference. I've been selling drugs, biosimilars, and all kinds of different compounds that keep you alive. But just makes your daily run a bit better. This one saves lives. The problem with cancer and melanoma is it's asymptomatic, so you actually don't know you have it. So this technology opens up doors that were not open before, and actually we're pretty much the only ones with the offering that we have. So very, very exciting to me. And I have family members that had melanomas. So to me, that makes even more sense. And I'm dealing with it regularly. So I can see the value of the technology. So I'll swing it back to you, Mike, and to go through the presentation.
Okay, thanks so much, Sylvain. So he's been a little understated here. Sylvain has had tremendous experience on the regulatory side, production side, deeply understands all of our stuff, and has already added a tremendous value to our dermatological board that we wouldn't have been able to get access to without his kind of Rolodex and knowledge in the industry. So we'll start off by saying I run the dermatological side of MedX. I will say that I'll start with a declarative statement that we are the leader in teledermatology. And that's a pretty bold statement, and I'll get to you why we are here in a minute. So regular confidentiality and forward-facing statements. So teledermatology, where does it fit? With the advent of the COVID-19 pandemic, we still needed to be able to get at patients. And so the general population was trying to get at the population. What happened was telemedicine came to the forefront. I'll just say, Sylvain, if you're still got your speaker or your microphone live, go to mute, because we're just getting a little feedback there. There we go. Thank you. And so telemedicine, really telehealth, came to the forefront. So in the United States, companies like Teladoc and things like that started to go, became very apparent to the investing community, and those stocks have done really well. Teledermatology is a subset of that, where you're using telehealth to be able to get to a dermatologist. What we solve, skin cancer is a very, very public healthcare problem, especially with an aging population. In the United States, every hour a person dies of melanoma. So there are 5,252 dermatologists, one for every 63,000 people in the United States. And now, with the advent of the COVID, it can take 5 to 18 months, depending on which state you're in, to get in to see a dermatologist for a proper assessment. We have found that most of the people that get referred into a dermatologist, really it's a benign lesion and they don't need to get there. So that means somebody with a melanoma is standing in the lineup waiting to get in to see a dermatologist. And we find this all around the globe. So to be what I said earlier in this statement, that we are the leader in teledermatology, to make that statement, and whether you're any kind of company doing teledermatology, you have to have the following things. You have to have the most advanced image capture system in the world. MedX has two image capture devices that are combined into one. I'll go on to that a little further in the presentation, that are the best in the world. You have to have a patient management system that allows you to take the patient's information, store it with the patient's images. You have to have a navigator system that allows you to make sure if the patient does have a melanoma, that they're cared for. It goes to a dermatologist or plastic for excise, so it's excised. And this is the big one. You really have to have a fully secure telemedicine platform. If you're going to be enterprise value, where you can go into every pharmacy, the big ones, CVS, Walgreens, Boots, Shoppers, Rexall, you need to be at a value on the enterprise side that nobody can hack your system, your SOC 2 level security, so that your patient information is safe, because nobody wants to own a pharmacy chain and have your patient information leak out into the press or into the marketplace because of a poor vendor. And that one, not a lot of people have thought through. You also have to be able to make sure the images do not leave the country of origin. You have to store the patient's information for 10 years. And of course, you have to have the health authority. So we are eligible in 35 countries for distribution, and we have FDA. We're a class 2 medical device, whereas a camera isn't even considered a device, just to give you the difference in this technology. We're FDA approved, CE, and Health Canada. Should have some peer reviewed, and you should have a proper AI world strategy around real based. And I'll get into that in a few minutes because we have a short amount of time to get through this deck. So how does our technology work? We put our technology in areas of ease of access for patients. So these can be medical clinics. These can be used for pharmacies. They can be used in occupational health areas with high risk. Those are the areas where our devices go. We did a trial a few years back in Norway. We ended up in 104 Boots locations there with the original technology before the telemedicine platform. We did 82,000 scans, and we captured 862 melanomas. So proof of concept's already been done. We're through the commercialization. We're rolling out as we speak. So we take an image in an ease of access location securely across the internet, and it's read only by a dermatologist. So we don't go in and try to make any assessments. We're simply capturing the image, making it perfect across the internet to a dermatologist for assessment. The problem with today is that all the other image capture systems, because of the way that they work, it's self-image. So people are taking images with their cameras and things of that nature. And when I'm doing that with my camera, I've got angularity, different focal points, all that sort of stuff. The images that go across to the dermatologist, and this is a main point, 42% of those images that go to the dermatologist cannot be read or assessed. So pigmented lesions that can kill you, are sent across the internet. The dermatologist simply writes, "Cannot assess patient, please set up an appointment." So it's really not being adopted, teledermatology, for pigmented lesions because of that very reason. MedX has a different capture device. This is our capture device right here. You can see on the front of this, there's a lens, and it absolutely is a closed system. When I put it on top of a molar lesion, the image and spectrophotometry all takes place within this conal area. It's a perfect image every time. So when we send an image across to the dermatologist, we guarantee he can assess it, he or she can assess it. So here's a typical thing. This is a lady, had a really, what we call an ugly duckling on her shoulder. It was missed by 3 different GPs who thought it was nothing. This is what our technology provides: a clinical view, a dermoscopic view, and we also have, with the spectrophotometry, the ability to go 2 millimeters below the skin surface. No other technology can do this, and show what we call disorganization. So a dermatologist looking at this would know immediately that's a melanoma. And this was a patient that we caught 72 hours. That's a scar out of her. And this particular patient happened to have a daughter with cerebral palsy. You can see her on our website. She did a little video, and so that's a life saved. This is a more disturbing kind of melanoma. This is called a nodular melanoma, and this can kill you in 8 to 11 weeks. So when you hear of a friend of yours and they have a mole, or goes, what do you mean it was a melanoma and it took their life? I don't get it. This is what it is. It's called a nodular melanoma. They go vertical into the bloodstream quickly. The cancer gets in. It's a very aggressive cancer through the bloodstream, brain or lungs, and we lose the patients very quickly. Our technology, this was a lady 400 miles from any hospital system, sent the scan down, and the dermatologist assessed it as a melanoma, and we got that right away. We also have a secondary camera now, and this is really important to add on to our portfolio. This is a high definition clinical camera, so now we can deal with all the other skin afflictions. We can deal with psoriasis and acne, which a lot of the telederms technology does. We can do that, but we can also deal with the pigmented lesions, the things that'll kill you. This is what our patient management system looks like. We collect all the information, and this is going to get really important a little bit further along here. All of the patient's information with consent. So everything about that patient, the mole, their lesion, the treatment that was given, all of it is captured on our system. And it's also patients giving consent for research purposes. You'll see this is where Sylvain ties in a few minutes. So we've done a different strategy on AI. A lot of the companies out there that are doing AI are trying to bypass the dermatologist because they're taking images with their phone cameras, and they're adding AI to it and using that as decision-making AI. And we can assure you that's wrong-minded, and it will not fly in today's market. The AI has got very poor results in the real world, and we think AI is very faulty for being decision-making. We work deliberately and collectively with the dermatological community. We don't do any imaging where we make any statements about it. It's all assessed and taken care of by real-world dermatologists. So we think AI should be used for doing different things. So our AI does things like this. We can tell with our AI if an image is not accessible or readable by a dermatologist. So we guarantee with our AI that the image that we send the dermatologists are readable. Dermatologists love it because they know they're going to get an image that they're able to assess. And that makes their world as a yield management tool, it makes it very good for them. So that's what we're using AI for. And we're also using AI at the bottom end of it, where we're collecting all the real world data and starting to sort that. So a lot of times, and Sylvain will tell you, companies will pay if they're coming to markets with new products, if they can figure out target markets on real world problems. Our AI has the ability to sort that, and those kind of numbers are really big numbers. So very exciting side of our technology is the ability to do data capture and monetization of data capture. Essentially, our model is a SaaS model. We have hardware that goes, the two cameras, but we do the two cameras along with the computer base, and we do that on a lease basis. Most of the people that we're talking to are like clinics and pharmacies. They like the idea of a $200 a month for the hardware and a revenue share model, the SaaS model. So we make it so it's easy, low barrier of entry. For the technology, we offer a warranty service, 24 hours. We turn the scopes around. If they drop or break a scope, we get that back out to them in 24 hours. And just quickly in summary here, because I know we have a little time, we'll open up for some questions. We are approved in 35 countries. We are a class 2 medical device. That means our statement on our certification is that we are able to identify 4 separate chromophores below the skin surface, 2 millimeters. This allows dermatologists to make better assessments because they're getting more information below the skin surface about the melanoma or potential melanoma going vertical, and that's why it's a class 2 device. We own our own full telehealth platform that is worked on Amazon Web Service. We are SOC 2 level security. It's a recurring revenue SaaS model. We reserved a large order a year ago from Brazil, a little bit year and a half now. Brazil is coming back on site after the pandemic, and we're opening up some really big markets down there. We're going to be opening up in Mexico, Colombia shortly. We've got a big trial starting in the USA. We're opening up in Turkey, Switzerland, and I would dare say that I'm over in the UK, and that's why we're just closing up some fairly good pilots over here. We've added an HD camera, and that's increases the recurring revenue. Because we can do one thing that we can do that no one else can do is the pigmented lesions. That kind of gives us the high ground. But all the other stuff, acne, rosacea, all that, about 26% of the scripts that go into pharmacies are skin related. It's the largest organ in your body. So adding the additional HD camera gives us a lot more recurring revenue that allows to go script based, and that allows us early access to the pharmacology business. And we are starting to implement our AI initiative right now on our platform. And what we can expect from us in Q4 and Q1 is to see a lot more pilot projects. And I would say this, to help the market get an understanding of how significant this company is and where we're tipping, we'll be able to state, as we did in our most recent press release that we just did in Italy, we'll run pilots and let you know. They're going to run for about 3 to 6 months. The pilots aren't really there to determine whether the technology is good. When we go through a pilot stage, it's already been well vetted. The question is to see how the flow works with the patients. What's the better way to get at their market? What kind of marketing materials should they use? That's why we're running pilots. And then they'll usually, after 3 to 6 months, we'll convert those, and you'll be able to see, like, well, this company has 600 locations it's going into, or 400 locations, and the marketplace will be able to get a ability to look. Gee, they got 40 or 50 pilots running. They've got an 80% closure rate. You'll be able to figure it back out from there and reverse it back. We've got a really, for a small company, we've got a pretty seasoned management team here. And just being over in the UK the last week doing some presentations, I can assure you that that it was well received by the management team. We've had some pretty high-end sort of meetings, and the team over here is exceptional at sales. And Naman just put the deal together in Italy, and we got a bunch more coming out the thing. So we got a really seasoned management team. And the other big thing we do is we've got a really extensive medical advisory board. This is just a bit. There's another 20-odd medical advisory board members in different parts of the world, particularly in the United States, that we get we get our feedback from what's needed to make teledermatology work. One of the people we have is Dr. Dan Siegel. Dan was a former president of the American Academy of Dermatology. I mean, Dan has helped us he's been just a godsend to come and help us build this technology and get it right. And also he has a background in reimbursement specialist for the American Academy of Dermatology. So he's been helping us with the CPT codes and getting that reimbursements through the US market, which of course is a huge market for us. And I'll say Dr. Trevor Champagne has been our Canadian colleague, and Trevor comes with a background in computer science and mathematics. So when we were developing our AI strategy, he was invaluable in terms of the work that he did for that. Market capitalization of the company, we've got a lot of shares outstanding to a lot of the microcap managers. I think the focus point on us would be our fully diluted market cap's 36 million market cap. And there's companies out there that are doing similar work to us, but I think we do a lot better than, and they have a much higher market cap. So I think we're undervalued because I think we're not a well-known story. And I think over the next few months, people start to understand just the commercial demand for our technology. And I would say this is the last part of us where we say we exist to save lives. I think that's built into our DNA, and was pointed out by one of our. Oh, sorry, I'll stop there. I can hear you kicking in.
No. Finish up. I just was kind of popping in to hang out for a minute.
Yeah, sorry about that. So I would say, we think about this. We exist to save lives, and everybody says, well, kind of everybody says that, but I mean, I don't come from a dermatological background, and with our technology, I've saved 21 people. And one of the points that I should have included in this on a slide, but it was kind of compressed on time. If we catch a stage 1A melanoma, which our technology does all the time, stage 1A melanoma costs the healthcare system about $2,500, and the patient has a 97% chance of having a successful life, and away they go. If it gets to a stage 4 melanoma, the cost of the healthcare system is about $1 million, and your survival rate for 5 years goes down to about 15 to 20%. So clearly, like Sylvain said earlier, early detection is the way to go. This is asymptomatic, and it's on your skin. We should be able to have these everywhere so we can detect anything that could potentially take your life. So we do exist to save lives. Thank you for your time.
Excellent presentation, gentlemen. I do have a couple of quick questions, but a little segue on where you left it off, and circling back to something that Sylvain said earlier, we can make a difference, and you just said we can save lives. And you know, the audience members that are tuned in right now, they're looking for investment opportunities, but you know, I wanted to commend you guys for making it real. And you know, we are here to help people deal with things that could affect their lives in an extremely big way and potentially end their lives. So I just wanted to say, you know, it sounds like a great thing that you guys are doing. And I think it's important to just, you know, make sure we keep it real. And yes, we're here for some investment ideas, but these are real people out there that are having to deal with these things.
Yeah, you know, Brent, when you say that, and I would just say this, if you go to our website, there's a video there from Danielle. She had a daughter with cerebral palsy. She was told 3 times by doctors it was fine. That when she found out from us it was a stage 1 melanoma. I mean, she said, my daughter wouldn't have had a mother. She's a single mom. And I mean, we get to do that. So if we can do that, Brent, to a lot of people's lives, anybody who's been struck by cancer, this is a meaningful technology. And I think Sylvain said it. This is purposeful, and that's why we're doing it.
Yep.
I got the chills there. It's real. It's very real stuff. And let me just hit you with a couple quick questions. So I counted 6 views that your camera can detect, right? I mean, for some kind of competing device, what's like the maximum views that that competing device can do?
So most of the stuff that's out in the market, most of it is just a single lens camera. Their phones are being used all the time. That's why they don't work. They do have dermatoscopes, which will give you a good image on your computer screen. The second you go to send it across the internet, it gets pixelated and cut. Because we're on our own private network, we're sending 26 meg images. So the visual acuity from our technology is identical if you were in front of the patient. So the differential is, because there's an image, it's in the image quality. Nobody has images below the skin. The 2 millimeter below the skin images that we break down, that doesn't exist. Only us.
Or the clinical view.
Right. Yeah. And so I want to understand something here real quick. You said about 40% of dermatological images, teledermatological images can't be processed. And you said, and you seem to hint that leads to the dermatologist going, I can't make sense of this. You should just come in to the office, right?
That's dead right. And it gets worse than this. The government will eventually figure out we keep paying these derms for the teledermatological consults.
Right.
And the derms are going, I can't read it. Please send in the patient or retake the image. Well, eventually that's why teledermatology isn't getting the adoption curve. We are getting a much different adoption curve because we guarantee the image going to the derm is readable and they can assess it.
Okay, so how does how does the device help alleviate that? Like, how many individuals are getting this device? Are there any plans to make a model that is, you know, a little bit cheaper for like an individual?
So we've thought about that. So the idea is, can you do it as an app? Can you do it? No, because this is using spectrophotometry. There's a lot of it in that little device. There's an awful lot going on. So what we do is figured the easiest place to have it is in pharmacies. So like in the Boots pharmacy model,
Gotcha.
80,000 people walked in and said, hey, this looks ugly. My doctor said it was nothing. Scanned, sent to a dermatologist, came back 862 had melanoma. I think the number was somewhere around 2,400 people had basal cells and squamous cells. And so any of those things that we can deal with. So the pharmacy chain is a perfect place. Med clinics, we do one airline that, you know, pilots are very susceptible. So we do one of the airlines, major airlines. So yeah.
Gotcha. I'm glad I asked that question. You answered it.
It's a great question.
Well, it was a pleasure getting to meet you guys, Mike and Sylvain. MedX Health, the ticker is MDX, and you're on the Canadian exchange, correct?
Correct.
Correct.
Yep.
Awesome, gentlemen. Well, you two have a great rest of your day, and hopefully we'll see you soon.
Thanks, man.
Cheers. Thanks so much. Really appreciate it.
Thank you so much. Later, guys. Cool couple of guys right there. That was it, ladies and gentlemen. Woo! We are at the end of day 2, Benzinga's Small Cap Healthcare Conference. There is one thing, though, one fun thing. Spencer said he wanted to come over and hang out for a minute, but one thing, I don't know where he went. He's around here somewhere. But one thing I wanted to announce the winner of our Benzinga Pro 1-year subscription. I'm going to say, I said it 20 times. I'm going to say it again. This is like a $1,000 to $1,200 value. That one winner today, 2 winners, but I'm going to announce one winner is going to win. And the name is, let me just double check here real quick. I had it pulled up. So the winner is, what'd you say, Aaron? Okay. The winner of Benzinga Pro subscription, 1-year subscription, is Gabriel Kahn. Gabriel Kahn, you should get an email with some credentials, and it's pro.benzinga.com. I would recommend you give Benzinga a shout. We can set you up with one of our experts on the Benzinga Pro platform. They'll learn a little bit about you and what you want to get out of a platform like Benzinga Pro and your trading strategy, and make some recommendations on best usage for the platform. Tune into the chat. I'm in the chat all day. The BSer is my name. It's not because I'm a BSer. It's because my name is Brent Slava. Spencer, where you at? Spencer he's in a meeting. That is no fun. Maybe it's a fun meeting. Well, everyone, until the next Benzinga event, it has been an absolute pleasure for me to be emceeing here today. And let's give a quick shout out to our amazing Benzinga events team. Really quickly, I want to jump over to my benzinga.com/events page, and I'm going to highlight at least a couple of our upcoming events. We're going to be doing another small cap conference, virtual conference, October 27th. That is a Wednesday. And also October 28th. That is a Thursday. Another 2-day event at the end of October. But before that, thank you. I didn't necessarily need the screen share, but thank you, whoever that was, Aaron or Nicole. Thank you, Aaron. Thank you, Aaron. The one that you want to get really excited about is this one here, ladies and gentlemen. It is our first conference back in person in a year and a half. We are very excited about that. It's going to be the Benzinga Cannabis Capital Conference. It's going to be held in New York City, October 14th and October 15th. Let's just see what happens when I click learn more here. Maybe give you a super quick preview of this website. It is at I mostly wanted to find out where it is being hosted in New York City. It's being hosted at the Marriott Marquis. Well, that's going to do it, ladies and gentlemen. Again, pleasure having everybody here, and we will see you at the next Benzinga event. Everybody have a great rest of your day. Good luck with the trades. You can always count on Benzinga for good information. Everybody signing off. Later.